Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no. Just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads, and happy Tuesday to you both, and welcome back to you.
Welcome back.
Welcome back. Now, actually, I could have been that for Halloween. I could have been like,
Mr. Cotta?
No, Vinny Barbarino.
Oh, okay.
Yeah.
Could be Mr. Cotta.
Mr. Cotta. No. Oh, man. Early
Tough
7-1.
crowd.
Wow. Well, welcome back, Nikki.
Thank you.
How was San Diego?
It was great. Did you guys miss me?
We did, actually, kind of, yeah.
Where's Nikki? Oh.
It was fun having Jamal in, though. Brings a different perspective.
Of course. San Diego was great. We had a great turnout. Great spot.
Yeah, I saw pictures. It looked packed.
Let me guess, 78 and sunny?
It got a little chilly at night, but it was
72?
Yeah, it was like low 70s, middle of the day, which was really nice. So
That's so nice.
perfect weather.
Yeah.
We did a food.
You are. Look at you. You're like in a nightclub.
Yeah, no, it was really cool. The venue was awesome. It would be a great place to see a show. They had like these cool little balconies around, like on the second and third floor with like little private rooms too. It was cool, really nice.
Take any groupies
who
up
has
there,
played
anything?
here?
I didn't look at the list of who has been there, but it seems like it's been there for a very long time.
Yeah.
Pretty cool. It was a big, beautiful event, so it was fun. We had Tony from
Not gonna
Mexico.
lie, this photo kind of looks like we want
Yeah.
to welcome you to Cell Block D.
A little bit. It does kind of. That's true.
Like that last scene in Blues Brothers where they're playing in the. Okay, sorry.
That's not bad.
That's true.
They got like the guards on the town.
Yeah. You want to have some rifles up there?
Yeah.
Yeah. So it was a fun event. We had Tony from Mexico there. Tony Rihan came and hung out with us for the day, and
He's on a follow page. Too,
yes. And we had a great turnout. So met a bunch of people. A lot of our YouTube peeps. So Andrew in the YouTube chat. Shout out to Andrew. Sometimes trolls us a little bit, but it's fun, nice trolling.
Yeah.
Okay.
Sure. That's what it's all about.
Yeah. So we had some.
You gotta have some
cool to
humor.
put-
You gotta be called out. I mean, come on. You pat yourself on the back. You gotta be called out too sometimes.
Yeah.
Sure.
Got to put some names to faces, which is always.
What was the best thing you ate in San Diego?
We did. I'm telling you, I'm eating like nothing all week. It's only salads and like soups. I want nothing. That's fair. It probably won't happen that way, but we went to a great dinner on Saturday. Juniper and Ivy.
Okay.
Tony came with us as well. Got a whole bunch of stuff. Fresh breads. They had hand rolls, crudo, ravioli, steaks. We got a whole duck for the table. It's like a big duck with like a corn veggie medley. It was awesome.
Well, not a veggie medley.
It was very, very nice.
Yeah.
So that was Saturday night, and then Sunday night we went to Born and Raised, which was a very, very swanky, like dinner club kind of place. Like
Okay.
Very, 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 very sceney. Did steaks there and uni spaghetti and tableside Caesar salad. It was beautiful. It was good. We went full bore on the whole trip. So we had to send in the expense reports are going to be quite large
Send a message.
this weekend. This is the last one of the year.
They're
so,
going to get bounced back.
Yeah, so the expense reports, I'm sure, are going to be questioned
Nice.
this time around, which is good.
Well, I'm glad you guys had fun.
It was really fun. Yeah.
Sweet. Did you get to play any golf? Did you?
I didn't. Mikey did.
Oh.
Mikey did a little golf.
Very nice.
Yeah.
Nice. Sweet.
Oh.
So just real fast is like a funny story. After work yesterday, I went to Costco because Costco's not far from here. And so I'm in the Costco and I hear, "Hey, Vanetta." And I turn around, it's Mike Butler.
Of course.
And I was like, "Did you work today?" He's like, "Nope."
He's stocking up.
Just a cart full of protein powder and ramen.
Yes, and chicken thighs. He goes nuts for the chicken thighs.
No, but I
He's
saw
got,
him at the Costco, so I asked him how the show was, and so he said he and his lovely girlfriend got to play golf with a group of people, and that he talked up the show, and the people that he played golf with came to the show.
Yes,
that's
they came to the show. It was awesome. It was
I
really,
was like, look at you being an influencer.
Very
Yeah,
cool.
it was
Because they got paired
One
up as
foursome at a time.
At a foursome,
Yeah.
I thought that was a neat story.
yeah, we had a lot of new people.
That's great.
Which is really cool to see. Like a lot of people that in the last couple months that just like kind of found us and started trading. And
It takes a special person to do that. Take that extra step to go and see somebody that you know are watching online about finance. So shout out to them. Good job.
Sunday at 6 p.m. I mean, that's a tough ask.
And there was football on.
Yes, there was. But football is so early there. It was kind of a
How do you feel about that?
it was nice to have it all done by like dinner time, basically. I mean,
Okay.
like, all the football's over.
Yeah.
The big problem is for the early session, it's 10 a.m. is when it starts. So bars aren't even open. And I'm like,
That's the problem.
where do I go to watch football?
Starbucks or some other kind of
I
coffee
have to
shop.
watch it on my phone.
Right.
Yeah. We got lucky and found like a pub that was open at 10, but everything else wasn't open until like 11, 12. And I was like,
Was there any?
football's on. Like, come on.
I know, obviously, that San Diego is different than LA, but was there any like Dodgers spillover? Like,
Yes, we watched the end of the Dodgers game, which was amazing. At the Waterfront, which is the oldest bar in San Diego, or at least says it is.
Claims to be.
Claims to be, which was a really awesome little dive bar that was kind of by our restaurant in Little Italy. So we watched the game there, and I was surprised because the crowd was very mixed. There was a lot of Blue Jays fans, and you're in San Diego, so they have Padres. So
Sure.
it's not LA, but
Right.
I figured that, you have an LA team.
Right, it's SoCal.
Yeah, you're going to be rooting for the team, and it wasn't that way. It was very,
Interesting.
very, very split, but it was cool to watch the game there.
Yeah, I was just curious because, it's close, but obviously I know they're different cities.
Yeah, of course. Of course.
But I'm glad that you guys had fun.
It was fun. It's good to be back. It's a long travel day.
It's a long flight. Well,
You guys
enough about
crisscrossed
you.
the
Yeah.
country.
Yeah,
You
it's the
guys
whole
were
thing. It's,
all over, yeah.
yeah. So,
You like poop. You're everywhere.
and my mom came.
Oh, yeah, I heard that. Very nice.
Nice.
Very
Is that the first time that she's seen you on stage?
Yeah.
Oh, that's really awesome, Nikki. Congratulations.
Yeah, it was fun.
I'm sure she was beaming.
She was. It
Yeah.
was fun.
Aww.
Yeah. She said, "You guys are all great, amazing speakers. I didn't understand one thing you said." And I was like, "I'm sorry. That's. I mean, it's kind of our show is kind of intermediate to advanced, I would say.
Sure.
So,
Sure.
It's a little bit more than just like what is a put.
Sure. You can get that on our follow page, on our Learn Center, or watching any of the option jives or something like that. For sure. You don't need that on a live show.
Yes.
Yeah.
So it's
Well,
good.
good. You went to Costco. You went to San Diego.
Yeah. What do you get at Costco?
I've been working like crazy here. That's all I know. Day and night, night and day. Last
my
call,
God.
doing the show. Do last call
Here's
again
the
today.
violin, the world's smallest
Sunday, it's okay.
You leave at 10 a.m.
I go do a show. I'm in the city for 22 hours. You go do a show. You need 4 days and 16 people with you. I mean, I
Okay.
carry my own bag. I do everything myself.
Okay.
You know what?
Are you done, Boomer?
Yeah.
But I will be in
sad.
Austin on Friday, so come out and see us. We still got some room. We'd love to see you. Come see the last show. We got Liz and Jenny coming too, which is even better than
NTP.
NTP will be there.
Yes.
That's correct.
Beth.
What's that?
Beth is going to be there.
Beth is going to be there. That's right. There it is.
Wow.
I didn't get the invite.
I didn't get the invite.
Yeah, because
What the hell?
we got a whole.
You owe us days.
Yeah.
So you have to stay.
Yes.
That's what it is. So
Yes.
the doors open at 8. Show starts at 9. Love to see you. Go to tastylive.com/events.
Last hurrah.
Last hurrah.
And while you're there, if you drive past St. David Hospital, it's the birthplace of me.
Was it really?
In Austin, Texas. Yeah, that's where I was born.
Oh, that's funny. I didn't know that.
And the airport now, which used to be Bergstrom Air Force Base, is where my parents got married.
Wow. I mean, you want me to take a picture of it?
I have a whole historical tour. I also recommend you go to Round Rock Donuts, which is my favorite, because I grew up in Round Rock, Texas, which is outside of and someone sent us donuts from
been
there.
I
it's the best. They were
very good.
Yellow donuts.
Is it a pie place too, or something?
No, just donuts. In Round Rock, Texas.
Pie place there too, or something. I think.
I mean, it's Texas. There's good food everywhere.
Yeah.
There's pie everywhere and ice cream and
I'm
and
sure
donuts
TP is going to have some recommendations.
I'm sure TP
is a good eater,
He is.
so he'll point you in the right.
And when
spot.
he gets out under the thumb of his vegetarian wife, all
He
bets are off.
It's like a kid who doesn't have a candy drawer at home or something like that, and then they see candy, they just go nuts. That's how TP
I know.
is. Food.
I think it's just funny that TP's wife is like a level 7 vegan.
Oh, is it?
He has to go.
Bad?
He has to go eat in the outhouse or something.
I don't know.
Yeah, that's where he has to eat his food.
That's,
You won't have it any other way.
That's too funny.
But how can you be vegan on a farm, though?
I think she's just vegetarian. I think she's vegetarian. I'm just joking. I know. Well, because she cares for animals.
I know. But like, if you're like sustainable and like living off the land,
sure.
You gotta, you eat the chicken. You don't baby the chicken. I don't know, maybe.
Are you telling me you could eat a chicken that you like hold in your hands and like that? No.
No, that's why I live in a big city.
Right, yeah.
I prefer my chicken slaughtered and processed
Without a name.
somewhere else, and then just like kind of put it on my plate, sort of thing. But I would think if you commit to that lifestyle, you got to be like, I'm gonna slaughter this chicken and eat it.
Yeah. No, I get that.
Well, a buddy of mine bought a small farm someplace down in like Tennessee or something like that, and he's got a couple of acres. And he said he was walking around the property, and it used to have like they had pets. It started out as like you need 5 cows to get some tax break or whatever it is.
Oh, sure, like a hobby farm.
Yeah, like a hobby farm. And then he said they don't have any anymore when he bought it, but he was walking around the property, he would see like a pink rock, and then it would say peaches on it. And then he would walk a little bit further and he would see a blue rock and it would say, Joe on it, or a Big Joe or something like that. And he figured out it was the farm became more of a pet thing, and they were naming all of them, and that's where they were burying them with these, painted rocks all over the property. So now he doesn't know what to do with the painted rocks, so he just leaves them there.
Oh, well, that took a turn.
You didn't want to desecrate the grave site?
Yeah.
Did you ever read Pet Cemetery by Stephen King? No? Okay. But yeah, hopefully the market is good for you and Tom on Friday. We've got a nice down move this morning.
Volatility percolating. Talked a lot about it yesterday. So yeah, we're getting that a little bit into fruition today.
Yeah. It'll be interesting to see what happens. But hey, in the meantime, in between time, we have a great show for you today. It is a terrific Tuesday here on Tastylive at the top of the 8 o'clock hour. We have an options jive, vertical spreads that match the market. What does that mean?
Well, it's going to be vertical spreads we're going to talk about debit spreads versus credit spreads. So a little bit of a basic look at vertical spreads.
Oh, I see. That match the market. So maybe you're doing debit spreads because the volatility is maybe not there. I see.
And then when it's high, you do the credit spreads.
I'm picking up what you're putting down.
Yeah.
Then at 8:40 we have an options jive all about stock splits.
Yes.
That's very apropos. Got
the big one coming up, Netflix. Waiting on that forever. Kind of weird that they didn't do that on the earnings call.
Yeah, I agree.
I feel like you do that on the earnings call, you get that earnings bump.
Yeah, you get the little rocket ship.
You do it on a Tuesday and nobody cares.
Yeah, right.
Based on what I saw of the last season of Love is Blind, Netflix does not know what it's doing.
They've done good with like their sports stuff.
I know. It was the most disappointing season ever. I'm suing Netflix for emotional damages.
Oh, I'm sorry.
No, but we're going to talk about stock splits because it's important because it's like what it means to you, the positions you currently have, if you want to get in, if you want to wait, and all that razzmatazz. And then 9 o'clock for market measures, visualizing beta.
Yes, you should watch that one because no betas in here.
No betas in here, alphas only.
Right.
We alphas?
I guess so.
All right, good.
Now, visualizing beta is basically how something moves in correlation with the market. Like it's beta. See, I know things.
Exactly. Yeah. You do.
And then we have live from the trade desk, Quentin and G Money coming in. Quentin counting down all the top trending tickers over at tastytrade, and Glenn giving us a glimpse of things on the Tasty FX side of the business. And at 10 a.m., Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live from the floor.
Oh, yeah.
And a happy belated birthday to Liz. I was remiss in not wishing her a happy birthday. I think her birthday was Sunday.
Oh, well, if it happens, doesn't happen during the week, it doesn't count.
Do you want to tell that to Liz, who could beat you up?
We used to get you get your choice of lunch on your birthday.
Usually.
For that was
but on Sunday.
As long as your choice of
SOL.
lunch is what Tom wanted.
I don't know about that. I think it was pretty.
I know.
It was pretty open.
Yeah.
Pretty open. Yeah.
But happy birthday to Liz. And Liz and Jenny live from the floor of the SIBO. And Mikey is back. So Options Trading Concept Live, Mike and Jamal will be back together for their show. And they will be on the floor of the SIBO on, I think, Thursday
I believe
of
so.
this week.
Yeah.
So stay tuned for that. Lots of exciting and wonderful stuff happening all around. But hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news, coming
Breaking
across the wire.
This
Leading
just
story.
in.
Top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is, sorry, it's a little Celsius break. Today is a terrific Tuesday. It is November the 4th. That's what I was buying at Costco. You're asking, you're like, what
The
are you
Celsius?
buying?
You like that?
Celsius. Yeah, I do. I love it. And it's so much cheaper at the Costco. Yeah.
It's your caffeine fix.
Yeah, and I get the protein drinks and Celsius and like supplements, and my Costco has amazing like Korean skincare because it's close to Chinatown, so I get some Korean skincare. So
Very nice.
Are you telling us we need some skincare?
Yeah.
I mean, y'all should moisturize, but anyway, this is the part of the show we like to call the Daily Dose. We talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
For today,
Yes, for today, please, sir.
maybe like AMD, Rivian, Pins, if you're into that.
Ooh.
Yeah,
McDonald's, not the greatest. Humana,
We got
Amgen,
Uber and Shop.
Mara.
And Spotify.
Well,
this
Spot
morning.
came out this morning.
Yeah, those are this morning.
Right, yeah, I don't have those. Yeah, I'm
Oh,
not
yeah.
so
Spot came out this morning. It's up 30, and then the rest are kind of down. Palantir from yesterday. I know you'll talk about it, down 15.
Uber down a little bit.
Okay.
Down 5. Hims, I think,
down a
was
little bit.
unchanged.
Yeah.
Okay.
They all were a little bit higher immediately following that I could see real quickly that I saw, and then they all fell off. So
Interesting.
you got even the S&P's down 70, so a significant move to the downside. Volatility's been bid. We were talking about it all day yesterday, but really made you struggle for the short delta because we did not really go down at all yesterday with volatility staying bid.
Getting to the first headline of the day. Are you okay? Graphics production? Are you? Oh, there it is. Bridgewater CIOs warn investors are underpricing risks to AI-fueled rally in the S&P. Investors are overlooking the mounting risks to the current market stability and the limits of the AI boom, particularly in the US. While major tech firms are pouring billions into AI and its supporting infrastructure, it's still unclear whether those investments will generate the cash flows needed to sustain the lofty valuations. Like, we're still waiting on like every single earnings call. We're like, okay, you guys have spent this amount. How much has that turned into? Crickets.
Yeah.
Yeah, I think it's been more about how much they plan to spend. Because, they're giving us some
crickets,
there.
That's
too.
nice. Look at that. Wow.
Look at that.
That's good that you're on it this morning.
Amazing.
But what are the risks that you were worried about, like personally? Because I know you're trading a lot of AI exposed things. What are you worried about?
I mean, I would say that it seems like we're pricing in the top end of the range right now of in terms of like valuations. I mean, a lot of these things have gotten pretty, it seems pretty frothy. I mean, they always say the market prices in like the next 6 months or 6 months into the future. It feels like we're like 2 years or 3 years into the future.
Sure.
Which doesn't mean that it's not going to be a positive thing. I think AI ultimately is going to be a huge mover for assets into the future. But it does feel like we've gone pretty wild to the upside. But
and we have our own kind of curated list of AI stocks on the platform. If you just want to go here to the drop down, you can go to AI stocks and take a look at some. These are some of the more wide, good market, good option market. There are obviously a plethora of AI stocks.
All right, that's pretty good.
Sure.
Hey, in other news, the Bank of America CEO is facing calls to boost returns and deal making as they face their investors later this week. I think tomorrow, Bank of America is having their investor day, and they're facing pressure to boost returns and compete with larger rival JP Morgan Chase. CEO Brian Moynihan, who's led the big bank since 2010, will convene investors in Boston on November 5th. I like how he looks like the pilot who gets pulled off of the plane because he's been drinking.
That's pretty good. That's fair. That's fair.
Other big investor days coming up this week. Tesla also will have their investor day, and they're going to have to vote on, Musk's $1 trillion pay package or whatever that number is. I don't even know. But talk about banks. They've already had earnings, so obviously they're not as in play, but
53 and change down small, right on highs. Last 4 days have been quite bullish for Bank of America. IB rank is 17. It really is a directional play if you're going to do anything in bank. Not much premium selling there.
China seeks to buy U.S. wheat for the first time in a year after truce. Soybeans, of course, have been moving on the deal on the news that the deal had been renewed, that China will continue to buy the same amount of soybeans as they were buying previously. But now also China seeks to buy U.S. wheat for the first time. Let's talk about the softs.
Been on a tear, a little bit softer today. Soybeans down around 1.5%, which is still about 1% lower than I thought, 1% higher than where I thought the top was. Wheat is actually catching a small little bid. It's been strong the last 2 weeks. Also, corn's been strong, good IB rank in all of them. I think it's a buy the rumor, sell the news event. It's starting to happen in soybeans for the first time.
Yeah.
But still above where I thought it was never getting to.
Okay.
Yeah. It's amazing how now we're talking about the ags, which have been dead
commodity
for 6 months, and now we get this sort of binary
how they are, and then they'll die forever.
Yes. All these moves have been pretty short-lived.
Yes.
Ether fell as much as 9% yesterday, slipping below its critical 3,600 support level after a multi-million-dollar hack affected a protocol on the token's native network. That's bad.
Yeah, I mean, it's just like when they steal your identity or when they, hack into anywhere else. I mean,
But that's what scares me about DeFi and crypto. You could literally just wake up, in my mind, and then your money is just and it's gone, and then there's not.
Sure, if it's in the Cayman Islands somewhere,
No,
sure.
but I'm just saying some a Bitcoin hack. The stories that I read online. That's all, and I know that that's not necessarily.
That's
true,
how come people never invested in the stock market either in the 50s, 60s, 70s, and 80s and 90s. Because they're worried about what could happen. Nothing. No brokerage firm goes out. Your money is always safe. If it's in the U.S., you don't have those problems.
Yeah.
So I wouldn't worry about that.
There's not a crypto FDIC though.
No.
Okay. But you'll have ETFs now and other things like that. That will be.
Those are insured.
Yeah.
Just scares me.
It's becoming a mature market. But 35.25, you are correct, down almost 2% today. That's a $70 move. Bitcoin is also weak, 104 and change.
Uptober.
Never happened.
Deadtober.
Deadtober.
Morevember. No more.
And I think every day on the show, even the days that you were gone, we talked about how crypto looked like it was heavy.
Is it going to break that $100,000 level? Do you think?
Probably.
Ooh, I think so.
I mean, I know no one knows, but just
probably. Seems like it. It looks weak. I mean, it has not.
I mean, there's all sorts of news events.
I wonder what the prediction markets say.
I
don't know if it's on there, but it seems like it would be. I don't know. I don't know anything, but.
I mean, it's had an incredible run.
It has.
You see it pull back, and it hasn't been. The numbers are big. $2,800 move seems like it's a big number, But it's moving, with a 1 or 2 beta to the market itself. I mean, it's volatile, but it's not like exploding like it used to, which I think is good. I think this is just like kind of like profit taking. I mean, if you've been holding Bitcoin for the last 3 or 4 years, you're 4 or 5.
Congratulations.
Yeah, at some point you take like money and run. That's okay.
I don't know. If you've been holding it for 4 or 5x, you're not taking any money and running when it down ticks either. Probably it's probably a different kind of hold for you.
I think it depends on what you got. I mean, I see all these things about some of the bigger wallets that have billions of dollars that are now liquidating, and it's like, of course, at some point you have to, because you're not liquid. If you have $10 billion in Bitcoin,
call me.
Well, you're not liquid.
Call me daddy.
You can't go do anything with that. So you have to liquidate at some point, some portion of that. And, when there's more sellers, prices go down.
Yeah.
And,
more aggressive sellers, right?
Yeah. Sure.
Yeah. I mean, that's what happens.
Getting to the one earnings that I have from last night, Palantir topped third quarter estimates and issued strong guidance attributing growth to adoption of its AI software platform. Government sales, which have been central to Palantir's ascent, grew 52% from a year ago. Palantir shares were up 170% for the year. Palantir's revenue came in at $1.18 billion versus $1.09, but the stock fell. Girl, what? After hours. What's going on in Palantir?
Talked a lot about it yesterday, how it was, priced for perfection. Like the numbers had to be so huge to support another move higher. And it actually did go higher after.
Yeah, it was at like 220.
Yeah. It closed at like 207 or something like that. I did a 1-by-2 call ratio spread just because there was a lot of call skew in there. They just seemed rich. It'll be a winner for the credit I received, I don't know, 90 cents or something like that. But Palantir down to 190. Now, you say down to 190. This is the old high that it made in August. I mean, before it zoomed up to, call it 207, where it closed yesterday. So, I mean, Palantir has been a market leader. This is, a turn for the market leaders. So you're seeing that reflect in the market, down 75.
A lot of these earnings have been like a sell the news event.
Yes.
If you look at like Apple,
they've been inside the expected move,
but mostly inside down.
Yeah.
Besides like Meta, which was a big move to the downside, but
huge move to the downside.
Apple was up and then ended the day down a couple. Amazon was up, but Amazon's been weak relative to the rest of the Mag 7 all year.
Kai had a great yesterday on his segment at the top of the hour around 8 o'clock. He did a nice little slide on all the earnings and their moves, red and green. And there really was a lot of red for the earnings lower. So you're 100% correct.
Yeah.
In other news, Microsoft is going to invest $15 billion in the United Arab Emirates, and it's secured U.S. export licenses for Nvidia chips. The UAE has been spending billions of dollars to become a global AI hub, leveraging its close relations with Washington to secure access to U.S. technology. Microsoft is going to invest the $15 billion by the end of 2029.
Nvidia down around 5, Microsoft down around 4 or so. Microsoft, after making, I guess, close to new highs around 550, it too old highs around August, sold off to where it is right now, 513. Nvidia, on the other hand, has been making new highs.
Yeah, so Nvidia yesterday was up 2% on this news.
Yeah, and now it's sold off a little bit, 202 or so. Still in the stratosphere. I mean, you didn't miss anything if you're looking to get short these stocks.
No.
So place your bets.
Yeah.
In other AI news yesterday, Amazon announced that they had signed a $38 billion deal with OpenAI, and OpenAI will immediately start accessing NVIDIA's graphics GPUs. It's one of OpenAI's biggest moves away from Microsoft, which was the company's exclusive cloud provider until earlier this year. The partnership with Amazon gives OpenAI the flexibility to scale infrastructure through 2026 and beyond.
Amazon hanging out just under $250, down around $4 or so, which brings it almost to yesterday's price.
Yeah.
I mean,
you had to think this was coming too. I mean, OpenAI has made a deal with every single other
Right.
one of the Mag 7s. Like this was an easy.
Who haven't we made a deal with here? How much you need?
I know. Also,
Like
Sam Altman got mad. He was like, "Stop asking how we're gonna pay for all of this." I was like,
He did.
I was like, these seem like valid questions, though.
Yeah.
I was like,
yeah. His answer was a little convoluted. He's like, the gentleman he was talking to, he's like, well, if you'd like to sell your shares, I'm sure I could find you a buyer. That was his answer to the whole thing.
I mean,
Yeah.
A little, I don't know, a little condescending.
well, we'll see.
Not real informative, I guess.
That's what happens when you got a private $1 trillion company. That could potentially be a lot more than that if they ever do
Right,
go,
yeah.
Every single new listing that we've seen has been oversubscribed. I mean, you see some of these moves where it's like, oh, we're going to price the IPO at $50 and it opens at 80. And
not high enough, right?
By the end of the day, it's at 150. So if that happens to OpenAI, you're talking about $2-3 trillion company.
Yeah.
That's
Crazy.
insane.
Yeah, the number's getting big.
My favorite blast from the past, Cisco announced they are launching
The thong song?
Yeah, Cisco. Let me see that thong. Cisco Systems launched a computing device that will run AI workloads at local entities such as retail stores, factory floors, and healthcare facilities and speed up their AI data processing capabilities. The new platform is called Cisco Unified Edge. Cool.
It's funny because Gus and neither of them knew our Cisco.
Yeah.
The thong song.
Yeah,
I
I
never
know.
heard the thong song before.
I know. It is fun, like, talking to our Gen Zers. We're just like, what? How do you not know?
Yeah. Those you know that song.
Sure. Yeah, come on. You kidding me? Thong is one of my favorite things. Are you kidding me? Sure. Cisco about 50 cents off its high, 74, closed at 74.48. Another one that's in the stratosphere.
Yeah.
Still.
Yes.
AMD on deck to report Q3 earnings after the bell, and the company's had quite the glow up this year. Last month, AMD signed a deal to provide OpenAI with 6 gigawatts worth of GPUs. They also inked a deal to team up with Oracle. They also are providing chips to power 2 Department of Energy supercomputers. The stock has been rocketed up 56% over the past month. What are you going to do for earnings?
Ooh, AMD. AMD is another one that
Got a strangle on.
Yeah, 259 is where it closed yesterday. Just 259.66. It's 251 and change. It rocketed yesterday. It looks like it's going to sell off today. You do have a strangle on. 58 IV rank is pretty good. I think you're in November in that strangle. I don't know if you'll be looking at November rolling into December. December is going to be bid pretty good here.
Yeah.
I don't know. We'll see what happens. It's coming out after the market closes today.
Yeah, we'll see what happens with this because there's obviously been a lot of call skew here because stock has just exploded higher.
Yeah.
We're short the 270 call, which is around a 30 delta against the 235 put, which is also around a 30 delta based on yesterday's close.
Yes.
But the put is trading at $6. The call is at $10.
Yeah.
So into this move, it should come in a little bit, depending on what happens with volatility, which probably stays bid. So we'll see what this looks like on the open.
We will.
Subject to change.
Yes.
We'll see what happens. A Canadian quantum computing firm called Xanadu. Xanadu.
Funny movie, by the way.
Yeah. Xanadu Quantum Technologies, they're going to go public on the NASDAQ through a SPAC with blank check firm Crane Harbor Acquisition, CHAC, and a $3.6 billion deal. The Canadian quantum computing firm expects the SPAC to fetch nearly $500 million, including a $275 million private investment in public equity. Didn't know if any of the other quantum computing stocks were moving like IonQ or Rigetti.
Moving to the downside.
Oh, no.
IonQ was down like $6 or $7 yesterday. A lot of these have been kind of the poster childs of the froth, so to speak. You know, these stocks have gone bananas to the
Rigetti, after trading almost $60, earlier this month. I mean, the middle of last month, October 15th or so, is down to around 37 right now, down $2. bounced off of this 34, 35.
This is usually the last straw. When you get the SPACs now coming in this realm.
Yeah.
And they're talking 3-4 billion on probably like zero revenue, zero product kind
But
of
it
thing.
has a cool name. Look at that logo.
Cool name. I mean, quantum, like when you just put that in the listing,
Boom.
In the news headline, like that sounds, pretty sweet. Like I want some quantum.
Yes.
Just print all the money.
Yes, this is probably a good time to take some off the table.
Google owner Alphabet is tapping the U.S. dollar and euro debt markets in a multi-tranche senior unsecured notes offering. The digital media and tech giant will use the proceeds from the note sale for general corporate purposes. You should just put that on your expense report, Nikki.
Yes.
This was for general corporate purposes.
Totally. Acquisition. Retention, those are the things that are in the drop down. I like I usually use the acquisition. Like, what is the purpose of this?
Acquisition.
That's
leveraging.
I needed that extra steak at dinner for acquisition. Obviously.
Google got up to around 290 or so, closed at 283 with the market lower this morning. It's trading 277. Still plenty of time to do something if you wanted to get short Google. It's just a skosh off of its highs. So no excuses here.
What's the IV in there post earnings?
29.
That's not bad.
Not bad at all. Not bad at all. December market's about 20 cents wide. Not bad in there either.
Yeah, this is one that should come in nicely for us too, because I've got the 280 call against the 255 put, which is it was a upside diagonal spread that we had where we did 1 by 2, rolled it out. And now we're in this strangle for like $14. It's marked at like 19 here. So with this little bit of a down move, this should come in a couple $100, which will be
nice.
Yes.
In what I think is one of the most hilarious lawsuits that has ever been filed, Meta is asking a U.S. district court to toss out a lawsuit that alleges that the tech giant illegally torrented massive amounts of porn to train its AI. Meta says, literally, this was like 2 or 3 petabytes worth of porn, which if you know what a petabyte is, like there's terabytes and there's petabytes. Like it's
more than my
phone
can hold.
It's a lot of porn. And so Meta's legal defense was like, it was for personal use. They're like, no, we're not trying to build an erotic AI chatbot. No, that's crazy talk. We just needed hundreds and hundreds of thousands.
So it can recognize what you're asking for. I mean,
but it was like we just needed hundreds of thousands of.
They're learning by doing.
Of
it's the
adult
same thing
videos.
we tell everybody here about trading.
So they are.
Is this like the internal use?
Right. No. So they're being sued by a company called Strike 3 Holdings, and they discovered the illegal download of their adult films on Meta corporate IP addresses. So it's like over 47 different Meta corporate IP addresses, and they're like, "Hey, why are you torrenting or like stealing all of this porn?" And now it did get escalated into court, but Meta is trying to get that thrown out, saying that, look, if you look to see when we started downloading porn, like we didn't even know what AI was then. It's like we are just horny. And and it's just like, we just really needed to learn more about pizza delivery guys. I don't know, but Meta, let's talk about Meta.
Sure. It's fallen out of bed. This one is one that has really fallen out of bed. Yeah. So, I mean, it got up into close to 800 back in August, and it was there as early as September. And then you had that big move down from 750 down to around 650-ish or so. That we sit at under 630 right now. So below that big move down that it had. I actually tried to catch a little bit of a falling knife in there in Meta. I think I did a little 1 by 2 synthetic put ratio spread. So I did a 1 by 2 by 1, but just going far out to define my risk, use less buying power kind of thing. I think I'm out about 50 cents on it, but I'm probably out about a little bit more this morning. So Meta, I think, is one that I hate the stock, but I think it's a little overdone.
Okay.
Yeah, I mean, you could.
I mean, of all the stocks that we've mentioned,
yes,
this is the one that's the underperformer. Like like Google, you're a skosh off the highs.
Sure,
Apple, AMD, or Nvidia, all the
Cisco even.
Cisco, you're a skosh off the highs. This one, you're significantly off the highs.
Yeah.
Okay.
Yeah.
But could I be ranking?
Could have said that right after earnings too, when it was down 100.
Sure. Sure, I did.
Yeah, and it looked cheap, and now it's down another 50 from there, and you're like,
Ooh. So maybe they
Cheaper.
do need an AI porn bot.
yeah, definitely.
MongoDB CEO Dev Ittycheria is stepping down, replaced by Cloudflare executive CJ Desai. I don't know if anyone super cares, but sometimes you guys do trade MDB. So their CEO's leaving.
Stock's moving higher. I mean, this thing, it got into the low like 140, 150-ish. Yeah, 140-ish was kind of the low. We're now at 380 or
Whoa.
360 now.
Yeah. I mean, it's
down like
lower
10
this
bucks.
morning by about $8 or $9, but it made new highs yesterday.
Sure, probably on this news when it came out.
Yeah,
yesterday.
385 or something like that. Yeah. I don't know the
aren't
markets. You look at the market. Earnings are December 8th, by the way. Markets in here are $1 wide, so
Okay.
you got to be careful in MDB if you're looking at trading. Defined risk trade if you're doing anything.
One-time meme stock Beyond Meat fell 16% yesterday after the company announced they're going to have to delay their financial results due to an impairment charge. They are now going to report earnings after the market closes on November 11th. The alternative meat maker delayed its results because it needs more time to calculate a material non-cash impairment charge related to certain long-lived assets.
It wasn't too long ago, like 2-3 weeks ago. Remember they were trying to make this a meme stock? Again, not
Yeah.
trying to make it a meme stock.
Yeah.
The stock was like around $3, got down to 50 cents or something like that.
Right.
The next day it was $6, $7, $8.
Right. Someone posted their thesis about Beyond Meat on Wall Street Bets, and then that.
What a dump and pump. I mean, pump and dump. I mean, it's so stupid. You knew it was a hard to borrow stock. There was nothing you could do there. I mean, I guess you could have tried to do something in the puts, but puts were so expensive. It was so stupid.
Yeah.
What is it? What
I
is
kind
the
of
stock?
forgot about this one.
$1.25 or so.
We got a
down
couple
10
shares
cents.
there.
What's that?
We got a couple shares there.
Long them?
Yeah. Oh yeah.
Uh-oh.
Because we caught a little
You
bit of it.
millennial.
We were kind of scalping it, and then
Then you
I
didn't
kind of
scalp
forgot.
them.
Oh,
I
Nikki,
kind of
what
forgot
did
that
you
we had
do?
a couple shares in here.
Oh,
So,
Nikki.
You know, we're hey, in true retail fashion, we are holding some of the back.
Yeah, you bought it
bag
in
holder,
the
it's
280s,
okay.
sold it in the
Yeah.
340s, and bought it back at 3 or something like that.
Yeah, so we're trying to scalp a little bit around that. So that's
You're going to be out $1.50 or so on that.
Well, again, like I said, Nikki, their new earnings is now November 11th. So just
beautiful.
put that on your...
Maybe wait for that so it could uptick 10 cents.
Hey, if you're looking for more evidence of a topsy-turvy K-shaped economy, check out what's happening to credit scores. A report from TransUnion yesterday showed the share of people classified as low-risk, super-prime borrowers is on the rise. Those are people having credit scores of 781 to 850, your girl. But also on the other end of the spectrum, the amount of people that have subprime credit scores is also increasing at the fastest rate. So we are seeing and have been seeing this huge divergence in the credit quality of people. What does
So the
this
credit
mean?
scores are becoming like New York. You got the ultra rich and the poor, and you're nothing in between.
Basically.
What's happening?
Credit scores are the biggest scam. It is the
Scam.
as
So stupid.
a former debt buyer.
Yes, you are.
Yes,
That's
in
right.
the
You
credit
are.
space,
We
it's-
have an expert. We have a debt
Yes.
buyer expert in the room right here.
No, this stuff is just such crap. I mean, it's a
So help the audience. So we might have some that have some credit scores or
Yeah.
have done some things in the past that they're not
just
proud of.
open more
Maybe-
cards and just leave them open. Spend buy Chipotle,
Buy your
$20 burrito,
Yeah, pay it
and
off.
then just pay it off at
Yep.
the end of the month. Your score will go up 100 points in a year. If you have 5 of them, 10 of them, like as many as you can open them all up. Put $20 on them, just pay it off at the end of the month, and after a year, you'll have an 800 credit score, even if you've been crap your entire life.
There you go.
That's not totally true.
That's a hack right there.
It is, because like most
Not
of
if
it,
you've been crap your whole life, though.
I'm being a little bit,
Yeah.
I'm giving.
If you got some issues, you're in the 6s,
Yeah.
low 7s, you're trying to get it
all
higher.
it is about how much credit you have open,
Right.
And
Percentage.
and
Your
and the
utilization.
recent payment history, like that's really all all that matters here. I mean, it doesn't.
But you're right. But other factors, like if you're a renter, like paying your rent on time, like don't factor in,
well, that's not credit, like rent.
Sure, I know, but that it does tie to like your credit worthiness. It shows your ability to make payments on time.
How about those delinquents that are getting phone calls from credit people trying to collect money from them? What do you say to that?
Negotiate. Don't negotiate with terrorists.
Yeah, no. If you're
10
dead,
cents on the dollar. What's the?
Ooh, so yeah. Well,
like what would be a good number?
Yeah, they've changed some of the statutes. So if you don't make a payment for 7 years, it essentially goes away. So if you're really in a bad spot,
if you can hold on
for about 7 years, then that'll depend on which state you're in. Just don't make a payment. Once you make a payment, it restarts.
Resets. Oh,
so you go in there, you make a payment after 4 years, and
you got another 7 to wait.
Now you got another 7. So if you're 4 years in, you got to hold tight.
Hide.
Yeah, by the time you get to year 5 or 6, you're going to be getting 6 or 7 calls a day. Might be showing up at your work, calling your bosses.
Just garnish your wages at that point?
No, this is mostly unsecured credit.
Oh, I see.
So
Okay.
they're screwed.
This is fascinating.
But then they charge it off, and then they just take that charge off as a loss.
Right.
So they get that nice little tax credit and also sell your debt. So it's a big old circle of
debauchery.
I love late stage capitalism.
Yes. Yes. No.
Hey, this is kind of cool. Crypto.com is powering a new entertainment prediction market offering from Hollywood.com. Crypto.com, an entertainment website, Hollywood.com, yesterday announced an exclusive partnership that sees the launch of a new entertainment-focused prediction market offering prediction markets available on Hollywood.com. So that way you could vote on like movies, music, other entertainment awards. What are your thoughts?
I don't know. Did you guys talk about the Coinbase Brian Armstrong where he mentioned the
prediction markets on the earnings call?
That was awesome. I mean, I think that's the biggest,
validation.
Flex
no, it's like kind of a
question. Shade, yeah.
It's a shady throw at the question about prediction markets is, what if somebody like you're betting on what Brian Armstrong says during the earnings call, and he pulls up prediction markets and he says all the words everybody's betting on.
Oh, right. Oh,
at the end, he's like, "Oh, I'm looking at prediction markets now," and then he goes through like supernova and like.
Don't worry, they'll come up with some language on the betting sites that says that's not worthy of a win because he didn't use it in a full sentence. You know what I mean? Or
but that'll be on the next one.
Yes.
But that's a big question with prediction markets is when you get into these very, very illiquid predictions of will Brian Armstrong say supernova on the earnings call, and there's not a lot of betting on that, it gets a little bit dicey, I think. When you deal with liquid markets, you can't skew it. There's not one person that can skew the market in one direction.
Right.
This market would focus on entertainment event contracts across movies, Broadway shows, television programs, musical artists, major award shows, and more.
I have no interest.
Okay.
Yeah, sorry.
Hey, Starbucks is going to form a joint venture with Boyu Capital to run its China business. Starbucks would retain a 40% stake in the joint venture. In recent years, the coffee giant has seen its sales in China plummet, first due to the pandemic and related government restrictions, and then later caused by increased competition.
So you can't take the competition, and everybody else who prospered during the pandemic, you didn't, so you blame it on them? I don't know. Starbucks, $81. It's up actually 10 or 15 cents this morning on its butt. IV rank of 18. Starbucks got to get its act together. I would probably be a small buyer than seller here of Starbucks, just on price alone.
It's post-earnings. So.
It is post-earnings. IV rank of 18, so you probably have to do something maybe a little bit diagonalized if you're doing something in there. Nove with a 35, Dees with a 34, so you're not paying anything for Nove Dees. If you're looking at Dees Jan, you've got the same scenario. They're both around 34 monthly implied volatility, so you could do something there too. So maybe something there. Maybe you did something for option trades today, but I doubt it.
We caught that on earnings.
Yes.
The other week.
Yes.
Yeah.
Restaurant chain Denny's. I did not know this was publicly traded. DENN. So if you're playing at home, if you knew that, congratulations. Restaurant chain Denny's announced yesterday it's going to be acquired by a group comprising of TGI Fridays owner Tri Artisan Capital Advisors and a $620 deal that would take the company private, including debt. That implies a 52% premium to the stock's last close.
Right, the stock was $4.
Right.
Hadn't been much lower. I mean, it got down to $3, I guess. It had languished the whole year around $6 where they're taking it over. It looks like around $6.20. The bigger question is, when was the last time you were at a Denny's?
Eggs over my hammy. I don't even know where there is a Denny's. Like, I'm not opposed to Denny's.
There's one it's kind of out in the suburbs. It's towards, like Lake Forest when you go down.
I don't know. When was the last time you were at a Denny's?
It's been a while. It's probably that one in high school. But I also went to a couple Denny's times.
In college?
College. We also had Perkins. Perkins was kind of our spot.
Perkins is good.
Perkins was.
My college town had a Waffle House.
Oh, nice.
Because it's in southern
You're
Indiana.
bougie.
Yeah.
So, no, that Waffle House is not bougie. You need a tetanus shot after you go to that Waffle House. But congratulations, Denny's, I guess.
Yeah.
Hey, Shake Shack is going to start selling its biggest, boldest burger yet starting today. They're closing out the year in a big way with the Big Shack, only available for a limited time. This looks to be a competitor to, I guess, like a Big Mac, but this features 2 juicy 100% Angus beef patties, layers of melty American cheese, lettuce, tomatoes, onions, pickles, and a new secret sauce.
Shake Shack might be a little bit of a buy here. Down about another $1.50, down to 91.5, flirting with the lows. I mean, it did get in April into the 70s. Ivy rank is only 16 in here, but this is quietly marched its way down from 140 in July all the way down to about 90 now. Shake Shack, maybe you've done something there.
Yeah.
How much would you pay for this burger? How much do you think this costs?
Ooh, is that the problem?
I'm guessing this is probably $13.
No. $9.50.
$9.99. Wow.
Pew, 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 as Vanessa would say.
I'm surprised.
I don't have any way. I don't even.
That's not a Chicago price, so that's probably their like.
I mean, the company's
average.
based in New York. Like they're in like New York, DC, Miami, but they're not in cheap.
Oh no!
places.
Usually everything's
Right, they're
about
not in Indiana.
Yeah, right.
everything's about $20 now. So you gotta guess about 13, 14 for the burger, and then you got about a 5 or 6 for the fries.
not
At the
under
20
$10.
tax, you're at about 25 for everything now.
You're at
Everything is
50
$25. 25. 25 is the new 10. You used to get a meal for $10. Now it's 25.
Finally today for my viral video of the day, I love senior dogs. I just love a little gray muzzle. I love an older dog. And this dog, he's still got some pep in his step.
I got a 13-year-old you can have.
He's just gotta hype himself up. Watch this.
Stinks.
I'm coming.
Come on.
I'm coming, Rachel. Don't rush me now. Don't rush me. I got to do my pump-up song. Okay. I came to get
Oh, it's
down.
good as shit.
I came to get down. Get down. Just eat and jump around. Jump. Everybody. Jump.
That only took 20 minutes.
Don't pretend like you got somewhere to be. I'm coming.
He's so cute. Aww.
That's very cute.
I know.
Very, very cute. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll take a look at the market on this Tuesday, November 4th. We'll be back in 90 seconds.
Woo-woo!
Beep, beep.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Son, and you know what that means? Time for a little bit more Tasty Live with Confirm and Send, where we go to viewer emails. But before we do, let's take a quick look at the market. Even the S&Ps. Welcome back, son. They're down 1%.
Ow!
Ow is right. Down 72 handles right now. That's a little over 1%. The NASDAQ, which was the strongest of the group, the weakest of the group yesterday, strongest. Weakest of the group today, down 1.5%, 385. To the downside, taking out most of last week, if not all of it. Russell down 32. It's been the weakest with the Dow for the last couple of days. You can see the Dow here on a 5 or 6 day bender to the downside. The same thing with the Russell. Volatility, talked about it yesterday a lot. I thought that volatility could get up into the 20 handle, 21, 22 even. It stopped at 2021 last night at 1980. Right now, volatility has stayed bid over the last couple of days, as you can see here, and the market did not sell off. Made it very, very tough to hold. Talked a lot about how if you had some long delta, maybe kind of reduce your size a little bit here just to see what was going on. Now you've got a 1% pullback. I don't know if that's enough. Is this a dip, son? You're a young man. I don't know what dips look like anymore because they're usually just one day. Is this a one day? Is this a one day dip or is this a dip?
I'd like a little bit more.
You'd like a little bit more?
I'd like a little bit more.
I agree with you. Bonds are up 6 to 117.11. They've been sliding the last couple of days. And Bitcoin's really been sliding down almost 3,000, 2,800, 104,280. Ethereum's been sliding even more than that, 35.24, down $72. Today, Bitcoin's down on a percentage basis, a little over 2.5%. Ethereum's only down 2%, but Ethereum's been a multiple to the downside of Bitcoin most days. Oil down $1. That's a big 1.5+% move, down $1.01, still sitting at $60 and change. Gold down 26. Gold been going sideways pretty much. Volatility going sideways-ish too. I don't know if you noticed, I closed my bastardized gold spread, took a small loss on it. About
Battled
$1.50.
that. Both ways.
Yeah, but I showed no intestinal fortitude. I should have stayed with my original. I stayed with my original thesis. I make a couple of bucks. Instead, I got skirt.
Okay. I mean, the gold, it's good. They're on their game today.
They are on their game. It's one of my losing trades from option trades today, but I think I'm 7-1 or something like that. I would have Meta open trade. That's going to be a small loser too. Meta down pretty good. On the earnings, the only bright spot, no pun intended, is Spot. It was up around 30 handles. It has now sold off a little bit. It's
basically unchanged. Wow.
Basically unchanged. Only up around 6 or 7 after being up 30. Uber was down.
That was a $60 expected move, or more. I mean, that's
well inside the expected move. It's a flop.
Yes.
Uber 92 down around $7. It's selling off a little bit. The big one that everybody wants to talk about is Palantir 191. Looks like it's down around $15 or so. It opened trade all the way up to 220.
Yeah.
Before going down to around 190.
And that's inside the expected move too.
Well,
it's
inside
a $20 expected move.
Yep.
Anything you did here is going to be
any
nice.
premium selling that you did here, even if it was puts, side calls and puts kind of thing, you're going to be fine. 1x2 put ratio spread, you're going to be fine. 1x2 call ratio spread, which I did, was going to be fine. You'll make a small amount of money. HIMS up around $1. HIMS has been sliding. HIMS was up a little bit more earlier that I saw, but it's up around $1 right now. Pins, AMD, Rivian, McDonald's, Humana, Amgen, Mara, a couple others, obviously. But let's get to confirm and send. Tuesday, November 4th. What you got? There we go. How do I know if I'm collecting enough when implementing a naked option strategy like Strangle? So they're looking at both sides here, kind of delta neutral. How do you know when you're collecting enough?
I like to do at least $1. Like that's kind of my minimum.
On like a Strangle?
On the whole thing. And that's it's easy.
But you wouldn't do $1 on a $300 stock or
that's
something.
Easy. That I'm talking about like if you're looking at like lower price.
Oh, these tiny, like a Rivian type thing.
Yes.
Or
you got to make sure it's worth the time, right? If you're managing at 50%, you got to kind of take that into consideration. So I usually look for at minimum $1 on a Strangle, but as you said, it totally depends on volatility, the price of the underlying. I think from a capital standpoint, $1 on $1,000 buying power is probably like the minimum. You want to make sure that it's worth the time and the risk to have the position on. So I try to kind of incorporate that as well. But I think overall, think about managing the position at 50%. Is it worth the time after that and the risk to be in that position?
I like your dollar analogy on $1,000 worth of risk. That 10% kind of thing seems to...
Because then you're managing it at a 50 cents, 5% return. You do that 10, 12
overnight,
times.
That's what you're trying to do, or some other time frame, 45 days. Certainly fits. But just remember, everything is priced to perfection, meaning you can almost buy and sell a Strangle at the same exact price, a penny or two wrapped around the strike, the price that you traded it. So whatever that credit or debit is what its implied volatility warrants. So like you want more premium, you trade something that has a higher IV rank, higher monthly implied volatility. $50 stock with a 50% monthly implied volatility is going to pay you twice as much as a $50 stock with a 25% monthly implied volatility. So it all comes down to what the stock's risk is. So key on IVR. IVR tells you that same $50 stock, if that IVR is going to be high, the option is going to be priced higher. You're collecting more. You don't even need to know what the average has been. You already know that it's high. Next question, please.
Ideally, we place trades at a 45 days till expiration, then manage them at 21 days. Because of that, should we use the expected move and or the deltas from the 21-day expiration cycle? Wouldn't that be more accurate if we are getting out early? So they're talking about like looking at the 21-day mark to determine where your strikes are for 45 days, if I'm reading this correctly.
Yeah, well, I think they're trying to say, since we're only going to be in it for 3 weeks, all things being equal, if it works out perfectly, that's when I think that's what they're saying. We usually get out of something. So if you look at the 21-day options and you see what their expected move is, maybe you go there as opposed to what the expected move is for 45 days. I think you're going through a lot here to try to find out, something that you don't need to know. Like, stick with the 45-day. you're saying everything works out perfectly. I'm not sure that everything works out perfectly. Volatility expanding, volatility contracting. It's different time frames, different news events, different market analogy, what the overall market is doing. There's going to be some great stocks today that are going to be down because the market is down, meaning positive, so that you can look to pick them up. So everything is a little bit different here. I don't think you have to get this deep in the weeds.
Yeah.
Go to the 45-day, price it all out. This kind of prices in those outlier moves that are at or around the expected move, not the outlier moves that are well outside the expected move. You can't price for that. So stick in the 45 days. Go to around the 30 to 15 delta. That's what we would look to put on our trades. Any type of strategy that you're putting on, we typically go to those deltas and stick with that.
Yeah, this one seems a little... We're overthinking it a little bit.
Overthinking, and that happens when you're looking for, you're looking for the holy grail or something that, you're looking for that intangible that makes the trade better.
Good stuff.
Next one, please. Why don't you use algorithms or AI in identifying trades?
I guess you can. This question came up a lot in San Diego. Like, do you think like AI is going to just replace trading? And, ultimately, there's always going to be an unknown. So I don't think AI is going to replace trading. Maybe it'll make it more efficient and faster, all those things. But you're always dealing with an unknown. I mean, like, I don't know. Is there anything today that warrants a 1% down move? Like, this is just markets. Markets move. Sometimes they're random. Day-to-day movements are largely random. So I don't know if AI scares me in the trading world. I think the things that it'll allow people to do are going to be very interesting, just from like a market access standpoint and efficiency and speed. But I don't think it's going to replace trading.
I agree with you 100%, and I think that eventually AI will be. Listen, isn't backtesting kind of like an AI thing? Like you want somebody to spit out and it will already. I mean, if you program it and ask it, what's the best month put to sell with this scenario, and it will pop it out for you. So you already have that kind of strategy in there, but you need the market to cooperate, right? You need to get the direction right anyway. So if you think you have an edge with AI, you should go for it, and it's already there for you. So try it out. Next question, please. I like suffering and picking my own strikes personally.
Me too.
Because I own it. You know what I mean? Otherwise, when it doesn't work, it's going to be like, oh, this is BS. You know what I mean? Kind of thing.
Do you maintain a trading account and a separate account for longer term holdings that might include stocks, bonds, stuff like that? You separate it out.
I don't. I have one account I guess I have an IRA account too. What's that?
You have other, like IRA,
I have other
401ks.
Sure. But my main kind of trading account that I do, I don't separate that into anything. I have one account with everything in it. Sure, I have IRA accounts. I have old accounts from firms that I worked for and stuff like that. Old Keo and 401k and stuff like that, but that have, I guess, longer term holes in them because all you can trade is ETFs in the majority of them. But no, my trading account that I have here, I'm looking at everything all in one spot. What about you?
Yeah, I think if you're going this route, you have to separate them. Like if you have Nvidia for long-term shares, and then you say, oh well, I'm going to get short delta in my trading account as like a hedge. You can't do that. Like if you're going to have your
size in the one that you have.
But if you're going to have long-term stuff that you're planning on not touching, that's separate money. Like don't trade that, or think of it like you're trading options against that stuff, because that stuff you have a plan to hold that. Like it's not.
Then you start to have, then you have like tax consequences in one versus the other. I mean, it really gets convoluted, in my opinion. You got to be careful there. It's a slippery slope.
Yes.
If you got 1,000 shares of ABC stock and you don't want 1,000 shares, sell a couple of those shares. That's the way I would look at it.
Yes.
All right, awesome. We're going to take a quick 90-second break. Even the S&Ps really haven't moved down 78. NASDAQ down 400, getting a little bit weaker here. We'll take a quick 90-second break and come back. We got more Tasty Live with an option Jive. We're looking at vertical spreads next. Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's options Jive. That's right, Nikki. It is time for an option Jive. Go.
Let's do it. Vertical spreads. We're going to do this quick so we can get to the market open.
Vertical spreads that match the market.
Yes.
See what they mean here.
Just a primer on vertical spreads. Basics.
Okay.
So when we talk about vertical spreads and placing directional trades, one way to place a directional trade is with a vertical spread. There are several types. You could do the call debit spread, which is a bullish trade, call credit spread, which is a bearish trade. You could do the put credit spread, bullish trade, put debit spread, bearish trade. So these are, and when you talk about put call parity, these are all kind of the same, right?
Sure.
So an in the money or a out of the money short put spread is the same as an in the money call debit spread in terms of value. Same thing on the, if you're selling a call spread or buying an in the money put spread, those are synthetically the same thing. Just from where you're placing those trades in the money versus out of the money. We're typically trading out of the money spreads, which is which ones we lean to here. So next slide here. So long call spreads and short put spreads, they are both bullish strategies. You can see these risk profiles are the exact same when you're selling out of the money short put spread. It's the same as buying that long call spread that's in the money. It's the same risk reward on both those trades. The reason we lean towards one versus the other is just spread width and the markets that you see on those positions. Out of the money credit spreads are going to be tighter markets than in the money put spreads, in the money debit spreads. Just because of in the money options, they're going to have wider spreads. They have intrinsic value instead of just all extrinsic value. Next slide here. Short call spreads and long put spreads. Those are both bearish strategies. They're synthetically the same position as well. One is not better than the other. They are the same exact trade. We just differentiate them based on where we are trading them. We are trading out of the money spreads versus in the money spreads across the board. And that's just how it is. Long spreads, we do typically at the money or out of the money. Short spreads, we're always doing at the money or out of the money as well. Sure. We're not doing in the money spreads. That's basically it. Next slide here. So we use the level of implied volatility to differentiate or decide between credit spreads and debit spreads. When we're looking at high volatility, we're selling out of the money premium. When we're looking at low implied volatility, we're typically looking at the money debit spreads in low volatility because you're playing for that outsized move in those positions.
Very good.
Next slide.
I mean, you're really looking at, this is very basic spread mechanics here.
Yes. To construct a credit spread, so an out of the money, which is out of the money option, and buy a further out of the money option, looking to collect roughly 1/3 the width of the strike. So this is consistent with basically everything we've ever done. If you're doing a $10 wide spread, you want to collect somewhere around $3 on that position. With credit spreads, the greater the distance from the underlying and the wider the wings, the higher the probability of profits. This is the next slide here. So obviously, when you go further out of the money, you're going to have a higher probability, but you're going to have a lower potential profit on that trade. There's always a trade-off with risk and reward on positions. More risk, more reward, less risk, less reward. That's, in all markets here. So just talking about here where you have your short strike, you're going to have a higher pop for a call credit spread. As you go further out of the money, same thing on the put spread. It's going to be a higher pop, but there's always that give and take with positions, which is why we kind of set that metric of 1/3 the width of the strikes. It sets you up with around a 60 to 70% probability of success, which is kind of enough reward for the risk, right? If you want less reward and less risk, you go further out of the money. Those positions will be higher probability.
Love it.
To construct a debit spread, we are buying an in-the-money option, and then we're selling an out-of-the-money option whereby the intrinsic value of the long option is greater than the debit paid. So these are going to set up basically 50-50 shots. This ensures that you have a little bit of positive time decay and a break even below the stock price. Typically, when you're doing this as a put spread is what we're kind of looking at here. But selling one that's slightly out of the money, buying one that's slightly in the money, it sets you up with kind of a 50-50 shot on that position. Getting to the next slide here. So for debit spreads, using a long in the money option to generate a time decay component and increasing the pop. So here, you're always going to have basically a 50-50 shot when you're doing these at the money. If you're taking a shot on a long spread that's out of the money, those are going to be low probability trades, but have much higher reward than the at the money trade. Of course, there's always going to be that give and take to any spread trade that you're trading.
Sure. And they're going to be slower moving. They're going to take some time.
Yes.
Price is, of course, paramount, but on a vertical spread, you usually filled right around mid-price, a penny or two above or below. There's no real kind of pricing of a vertical spread here.
Yes.
It is what it is.
Couple takeaways here. So when we want to take a directional bet to find our risk, we can use debit or credit spreads. The setup for each spread are different, but the risk profiles are very similar. So when you're looking at short call spreads, it's the same thing as buying an in-the-money put spread. Same thing on the
parity we always talk about, right? I mean,
yes.
Or the box trade. If it's a $10 wide vertical spread on one side, call or put, and you get filled at $3, the other side is going to be worth $7. That's just put call parity. The box is $10. It's a $10 wide spread. $5 wide would be a $5 wide box.
When you're looking at those spreads, you'll see the if you're looking at the in the money long put spread versus the out of the money call spread, you'll see why we lean towards those short spreads versus the long spreads. And it's really just because of the liquidity in those options and the width of those bid-ask spreads. We know the put call parity. If you're selling the call spread for $3, the in the money put spread, you'd buy at $7 or somewhere around there. But when
now, it might not trade right there because the markets are wide in there. But if you fill one side at 3, the other side's worth 7.
Yeah, but it might not look like that when you're.
No, it might be 680, 790 or something like that.
And you put that spread in to buy it
730, 40 mid price, you're going to get filled immediately and maybe even price improve because really you should be getting filled closer to $7.
Exactly. So when IV is low, we use debit spreads. They're more directional shots. We do them at the money.
And on the other side, if you try to sell that spread at 740 or 50, which is the mid price, and you say, why aren't I getting filled? I'm 10 cents under the mid price. Well, that's not the real price. The real mid price is closer to $7 than at 750.
Yes.
And that's what happens when you're trading wide markets. That's why we always talk about go to the other side and try to price it.
When IV's high, we look to use credit spreads. That's it.
Very good. Very good.
Good stuff.
You ran through that because I know we've got the opening bell to catch here. Even the S&Ps are about 25 handles off of the lows, down 71. NASDAQ's down 365. Volatility 1978, up 93 cents, 5% move. We'll be back in 90 seconds. We'll catch the opening bell. Immediately found these messages. Back in 90 seconds. It's Tasty Live. Yeah.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Yeah. Yeah, enough fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store and pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, whirl out, yeah, we all chasing. Pockets on lead, but the vibe still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam, out here raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. After with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. I'm feeling myself. But they kinda like it when I'm feeling myself. Just to look at me, I don't gotta level up. But they kinda like it when I'm feeling myself. I'm feeling myself. But they kinda.
Nicky, we are back, son. You know what that means? The opening bell is imminent. E-mini S&Ps have been where they've been all morning long, down around 75 handles. When I went to bed last night, they were down around 25 handles, and that was near the lows. NASDAQ is now down 360, off of its lows by about 100 points already, down 360 and change. Russell down 36. Russell, on the other hand, is only about 8 or 9, 10 handles off of its lows, down 1.5. So the Russell's now the weakest, where the NASDAQ was the weakest. They're a skosh in between each other. Dow down 300 and change. It, too, is about 150 handles or more off of its lows. E-mini S&Ps are also off of their lows, but only by about 25 handles or so. Volatility still up 95 cents. Volatility has been the canary in the coal mine, trading here at 1980 or so. Bonds are up 5. Bitcoin under, flirting with going under 104, 104.075, almost down 3,000, almost a 3% move. Ethereum with a 2.5% move, down 86, making new lows. Oil down 62 cents, off of its lows by about 50 cents. Gold down 35. Gold has been a little bit weak here the last couple of days. After trading up to 4,400, it's under 4,000. Silver down 70 cents on a percentage basis, actually a bigger move than gold, 47.3. And corn, wheat, and soybeans, a little bit of a mixed bag of tricks, but soybeans down 17. That's your biggest mover to the downside, 1.5%, taking back all of yesterday with new highs being made there. Corn also down around 1%, taking back most of yesterday. We got the opening bell here in about 30 seconds. I asked you earlier, what do you think here about the market? And you said maybe we got a little bit more to the downside. We're 6,800.
Yeah, no,
I mean, we haven't really gone anywhere.
Yeah, we've given up a week, 2 weeks. I would.
Yeah. No. You're right. I mean, we're back to October 24th or so. But we're 6,800. All-time highs, 69.5. Here's your opening bell, by the way. A relatively small move, but the magnitude of this move right now and volatility expanding is a little bit concerning.
Yeah, I would like to see vol continue to expand here.
Because you're looking to
get some new positions on.
Both sides, see
both
what
sides
the market brings you, kind of thing.
Yes. Yes.
Well, SPY down almost $8, $7.50, obviously on every 10 handles. SPY is going to be down $1, so you would think with even the S&Ps down 75 that they'll be down 7.5. So that's a significant movement down. Ivy rank of 17, I would expect to start to see expand. Let's see what's moving this market. High option volume list. I'll go to the upside first. Not many. Costco up $5 or $6. HIM's up $2 for earnings, and then really that's about it. Some of the oil-related stocks, obviously volatility-related stocks, and after that it's few and far in between. On the downside, there'll be a plethora. Spot down 27.
Wow, that's a $60 range.
$60 range. Yeah. Yes. Spot after being up $30 is now down just about $30. PLTR down 15. PLTR was down around 15 for most of the morning. Tesla down 14 or 15. Coin down 11. MU down 11. AMD for earnings this afternoon down 10. AMD down 10. Carvana down 9. AppLovin, which has earnings tomorrow after the close, down around $10. MSTR down. Hood down $8. BE, which caught a big bid yesterday. It has earnings after the close tomorrow. I know you've been trading.
I thought that already had earnings.
BE?
Yeah.
I thought it had. Oh yeah, it had earnings yesterday. Right? Didn't it? I thought it had.
I thought it was.
Let me take a look.
That was Palantir. Nice, good job out of you on that one.
Oh, thank you. You
closed it for a 2-cent credit.
Oh,
I tried it at 2-cent debit and got price improved. I tried it.
Yeah, get off my positions. I'll do it myself next time. But I appreciate
what did you? I mean, it's a 2-cent credit. What are we talking about? $1 here between friends? Come on. Family between family.
Family even. Yeah.
$1 between family. Come on, man.
Yeah, next time just leave my trades alone. All right.
I was just taking off some risk, Not that I was worried about that trade.
I'm teasing you. I'm just teasing you.
I'm gonna try and close this Oracle strangle too. I think this was either fast market or what's your assumption trade. Are these markets even open yet?
Yeah, Bloom Energy had earnings already. Yeah, you're right. Next earnings date is.
Yeah, we traded it. We did that.
Yeah.
That crab trade 1x2. The stock opened up like $20. It was right where I wanted it to be, but volatility stayed bid. It took like a week for that trade to come in, and we.
Ivy rank's still good at 97, but markets in BE, you go out to December and they're $3 wide. This is not for the faint of heart.
What else is moving here?
Just about everything. If you,
I'm going to take off the CCJ position too. This one.
Uber down $9, down $5. Microsoft down $8.
I did that 1x3 in CCJ. So this was a ratio spread long the 100 strike, short 3 of the 110s into the uranium announcement of, where the government portfolio, the newest addition there, took about 10 points of heat on it. I did it when the stock was up at like 105, and it
This is the 1x3 you did. How much of a credit did you do it for?
I did it at $3.50, so I closed it at 190, so took like $160 out of it.
Sure.
But that was jumping in front of those has been a mixed bag.
It's not for the faint of heart.
No.
You're right.
You got to stay small on those.
You do have to stay small. And even with the extra units like that, I know you were $10 wide on your embedded long spread, but those spreads trade relatively cheap because they have so much call skew to them.
It's really a vol play. You need a little bit.
Play.
You have a little bit of delta,
which is really a downside play
because vol comes in, and so you get the short delta and the sort of the short vol too.
Right.
But you have that at the money option that kind of holds its value, which helps. Okay.
What else you got here?
Oracle. I don't think these markets are open. Are these?
Oracle, are they white on the screen?
I'm not seeing anything moving. There's no volume coming in, so I don't.
Yeah, no. Oracle's not open yet. Down $7.80. If you see these bids and asks are white, then it's not open. If they start turning red and green, then they're open.
Yeah. What else do we
So you closed. It looks like my Palantir winning trade.
Yes.
Your CCJ. Good job out of you.
Yes. What else do we hear? Maybe this shop trade. Yeah, I'm gonna close it. So the shop trade. This is one. We started as the 125, 185 strangle. We did this on the 2nd. Rolled up the puts. I mean, shop has had when we put this trade on, and I can show this too. This is quite the. I'll pull this up on my.
Okay, do it.
Here.
Do it to it.
I'll put this in here. So we started as the 125, 185 strangle. This is the view market snapshots. So if you right click on the order here in the order chains, which is on the right side, I had some people ask me about this. It's this little button here on the right side menu. You right click on the order and it'll give you a little bit of a snapshot of like where your trade has been throughout the adjustments that you've had, all these adjustments. So we started as the 125, 185 strangle here. And if we go to the delta, you can see this was basically a zero delta position when we put the trade on with the stock right in the middle. So when we look at the underlying last price, stock was at 150, rallied up to 170. We rolled the puts up. So you can see we rolled from the 125 to 140 to the 140 strike. Then, of course, you get the stock falling. So we rolled down the calls from the 185 to the 170. So making that adjustment with the stock back at 150. And then we had another roll up from the 140 to the 150 when the stock went all the way back to 180. So it went 150, 170, 150, 180. It's a pretty big move. I mean,
big move.
When you look at the chart, it doesn't look like a lot because the stock has had a huge move, but these are 10, 15, 20 point ranges here. In the stock. And so through all these adjustments, we have a total credit of 1356 on this. Stock had earnings this morning, and volatility has certainly come in here when we look at the IV index. So when we put this on, it was 55. Through all these adjustments, volatility has been expanding, especially because you have earnings coming up. And even when we did this last adjustment, which was middle of last week, implied volatility was in the 65 handle. When we go to the trade page, you can see it's at 82% now. And that's just because of the time that you have left until expiration. But you look at these back months, 50% implied volatility. So we've realized that volatility throughout this trade. So we're gonna go ahead and close that thing out. That was about as good as it gets. As good as it gets for a trade like that. So we're going to take that position off here.
Good job.
150, 170 strangle. So that's a couple $100. And these markets are junky.
Yeah, they're horrible.
I mean, they're like 20 or 30 cents wide right now. So I'm going to start this at like 860. It's marked at 870. I think I'm probably going to have to go closer to like $9, but we'll see here.
Understood. Even the S&P is down 82. Volatility now trading 20. It looked like volatility was going to sell off just a little bit. It did not. 1999. Even the S&P is down 84. NASDAQ down 400. That's a 1 5/8% move. Russell down 1 and the orders. Oh, we got a market here, son.
Yeah, this is good. So I got filled on that at 880 for that shop trade. So it nets out like $470. It's a nice little
Very nice.
Nice little scoopy. Took some heat on both sides of that trade.
Yeah. That's to be expected.
Are the Oracle options open yet? Here we go. Yeah, because I was looking at these options. The put was marked at like 340 with the stock down $7, and the stock has had a huge move lower. I was like, it can't be a $3 put. You know, like that. It can't be. It can't be marked at that. So now I'm basically a scratch on that trade. It was marked at $5 and change while the markets weren't open. And so, into this down move.
Very nice. Very nice.
Very nice. A little bit. Let's see. This Google position is looking good. Let's see this Amazon spread. So this Amazon trade's now a scratch. We did that 1x2 crab trade. So I was long the 230 in December, short the 240s into earnings. Stock opens up at 250. You rolled those calls from the October 240 to the 250 for $1.80
credit,
$1.86 debit.
Oh, debit, because I moved it up $10.
You moved it up $10,
right.
But that's
it was the at the money.
Yes,
at the time.
Yes, and so those calls now into this little bit of a down move are helping us significantly. But this position is marked at about, it's a 4-cent profit, so to speak.
It's basically a scratch after being a couple of dollar loss.
Yes, and you took $10 of heat on the upside, and that's because all that extrinsic value that you're selling in the weekly comes out off the table. You captured $3, $4, $5 on that extrinsic value. You got to, this was a sort of tail event where you needed the $4 or $5 down move. If the stock stayed at 255, you're still a $200 or $300 loser. But with this little bit of a down move, your long option stays bid, which is helping you, and that short premium comes in pretty significantly. So we get 1 or 2 more days like this, and this should be a home run.
Very good. So you're gonna sit with it?
Yeah, we're gonna sit with it a little bit. Sure. It's a little bit of short delta. You're long the 230 call in December, but because you have those 2 at the money options, you actually net out short delta on this position. You're short about 17 deltas into this move.
Gold with a big move lower, also down 2%, almost 2%, down 75 now to 39.40 or so. Bitcoin, since we've been talking about that, hanging out right at 104. Bonds were trying to catch a little bit of a bid. They're up 3 ticks here. Even the S&P's down 70. They've been oscillating down 70 to down about 85 or so. They've been in a little bit of 15-point range at the higher end of the range right now. Volatility trade up to 2020. It's 1975.
We had, I just closed out an IWM put that was left over from a diagonal spread. So I did these at like $4 and change. I did 2 of them. I closed out a 1 for $7 and change. So basically, I've got 1 leftover long put at a $3 cost. Net. I bought back those puts at 76 cents, which didn't really, the November 21st 230 puts, let's see what those are trading at. 230 puts are at $1.46. So that saved me 80 cents on that.
Very nice.
So I just took that one off, taking a little bit of that short delta off here into this move. And you get the pop and vol, that helps too. Should I take them both off?
Sure, why not?
Yeah.
Volatility 1970 now, up 83 cents. We'll see how it performs here. Even the S&P is down 67. Taking a look at some of the movers on the downside. Spot still down 23 or so, but $17 off of its lows. Tesla down around 16, $5 off its lows. Palantir down 18, 188, couple of dollars off of its lows. Coin still down 11, Reddit down 9 or 10, Uber down 8 and change. So these earnings are a little bit weaker across the board.
Yeah, it's been certainly a buy the rumor, sell the news type of event.
Yes.
Across the board on pretty much all of these.
Most definitely.
Vol coming in a little bit.
Still elevated, 1965. You look at SPY, Ivy rank, it's up to around 20 or so. It was 17 earlier, so volatility definitely expanding in there across the board too.
Yeah. What else we got here?
You ready to
I could probably take off this Nvidia position too.
Nvidia.
I'm all over the place. So I had this call diagonal spread, which I think was a fast market trade up to 200, if I remember. But they wanted to do it in the weeklies.
Yeah.
We moved this a little bit further out in time.
Right.
We hit a home run on that with the stock at 202. We're long the 190 in December, short the 200 in November 21st. That one's up about $350.
You needed the down move.
Yeah, we needed the big move, but we got the big move, and I added a little bit of a downside play into it. Long the 190 put, short 2 of the 175s in November, and long 1 of the 160s. This is our like crab trade, so that'll net out another like $20 or so into this down move. But that's really, with vol kind of expanding there, that trade didn't come in as much as I would have liked. But small, I'll take the $20 too.
You'd be all right.
I'd be all
right. Even the S&P is down 65, volatility only up 78, which is still a 4% move. Good move in there.
They're going to buy this dip up again?
Don't want, like you, I didn't want it to be a one dayer, but
I want 2 days. Just give me a 2-day.
So far, volatility getting over $20 seems to be the high here. We're up 80 cents. I could see us sitting here on volatility for the day, though. You know what I mean?
Don't you got to scare the children a little bit? I mean, come on.
You got some underlying movement in a lot of these high-flying stocks.
Yeah.
So, I mean, the overall, breadth of the market seems to be okay, with the Dow only down 300. I know it's only 30 stocks. Everything else is down 1% or more. NASDAQ down 1 1/3%. That's the weakest of the group. I think volatility stays bid here. I think I could see us kind of oscillating around from down. Let's see what the expected move is on the ES. Let's do that real quick.
I'm trying to get out of this INQ put
$36
diagonal as well. This should be a couple bucks, but these markets are duty.
Yeah. Which totally makes sense.
I mean, I'm moving these 10, 15, 20 cents at a time. I mean, it's a $6, $9 bid ask spread.
Mm-hmm.
So you got $3 of wiggle room in here. The mid price at $7.75, and I've been working my order down from like $8.50 just because it's been moving.
I'm working it, boss.
Yeah. Let's see if I get $7.80. No, they're gonna squeeze me for every last. I mean, I'm in the fourth. My at the money put, the 600 put, is $1.50 wide.
You're saying, can we? Can this be a one-day move here? Look at this high option volume list. Costco is the only one that's up $2. Everything else is up pretty much single digits across the board. So you've got a plethora of stocks to the downside supporting this downside move. Volatility 1970 hanging in there. I don't think we get the whip back that we've seen on the one-day moves here.
Mm-hmm. I'm leaving that order in at $7.50. I'm not moving it.
That's your story. You're sticking to it.
And I'm sitting there. I think they'll come for it at some point.
All right. Very good, sir. You ready to take a quick 90-second break? We can come back. We've got an option jive talking about stock splits. Speaking of stock splits, what's that stock doing? Let's take a look.
It looked like it was going to be unchanged. Now down $9.
$9 and change. Talking about Netflix hanging out at 1,090. Kind of the stock split take under right now, right? Didn't lead the stock a lot higher as it, seems to do most of the time when they mention a stock split. We'll take a quick 90-second break and come back. We got more Tasty Live with an option jive on stock splits right after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick, Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's options. Jive. Nicky, it is time for an option jive. Even the S&P is down 54. A little surprised by this bounce back in the market. Volatility up 70 cents to 1955. NASDAQ down 280 and change is well off its lows by 175 handles or so. Russell down 19, Dow down 220.
20 minutes, that's all you get.
Gold down 61, about $15 off of its lows.
Yes.
Yeah, you are right.
I got filled on while we were on break in that INQ 1x2.
IONQ, yeah. Yeah, that's one that I don't know. You like to trade it. It's trade by appointment there. You got to put something in, and you definitely get the movement in the stock. I mean, you got a 2% move on a $50 stock, so a $55 stock. So you definitely have the movement there, but you got to be confident in your assumption on the trade.
Yes.
And the pricing.
And I rolled down a call in Oracle as well into this move. Rolled down to the 280 call.
Oh, nice.
Stock bouncing a little bit, which is good for my position. So, but
very nice.
Took off a bunch of risk. So
good. You got powder dry.
Yeah. Mm-hmm. Option jive. Should we do it?
Yeah, bonds catching a bid here too. 117.13 now. They were just down almost under 107. Bitcoin
volatility there is nothing.
Nothing. Horrible. You got to. It's directional trade. And Bitcoin over 104, 104.7 now. So taking a little bit of a bid there too. Oil down 57 cents. Gold down 60. It's a 1.5% move off of its lows.
Cool. Some of the China stocks moving. Baidu up $4.
You're right.
ABA basically unchanged here, down $1 and change.
Good job at you.
Let's do it. All about stock splits. Netflix, the biggest one we've had in quite some time. Waiting on the Costco split. Costco's the next one.
You would think. I tried playing a position doing that. It didn't work out for me.
Oh, I've been trying to trade that.
It took me like 2 months to get back to even in there. I was like,
the stock split earnings trade, I've been waiting for that for quite some time. and they disappointed with this one.
Yep.
Anyway. So Netflix is going to undergo a 10-for-1 stock split in the next 2 weeks. So with Netflix trading just over we'll say 1,100 right now, it would, if it sits right here, it'll be a $110 stock, which will make it a lot more tradable for retail traders, which is ultimately a positive, but takes a little bit of the volatility and the gamma out of it as well.
Sure does.
Kind of experience. So it's going for a 10-for-1 split. So it'll trade on the split adjusted basis starting on Monday, November 17th. This means that the number of Netflix shares increases tenfold while the value of each share decreases by 10x. It'll be 1/10 of what it is pre-split. So from a value standpoint, this does not add any value to the stock. A lot of times the stock price has gone up in anticipation of splits, which is not the split itself does not add any value. It's a perception thing that has, or maybe it's an earnings thing or a market thing that has increased the value of these shares typically into a split. But from an actual value standpoint, there's no value here.
That is correct.
There's no ARB.
There is no ARB.
Yeah. So Netflix stock price is now trading near 111 or 1,100 after the split. The new stock price will be 110. If an investor had one share, and they're talking about SMCI, I think it should be Netflix. I think they have the wrong ticker there.
I believe
SMCI was one of the bigger ones too. But basically, if you had owned one share of Netflix, you at 1,100, you'll now have 10 shares of Netflix at $110. Again, same sort of value on those trades, on those shares.
Yes.
Same value.
Yes.
So next slide here, the last time Netflix had a stock split was the stock was trading at 100. It did a 7-for-1 split in 2015. And then in 2022 during the market, and then it got back to that 100 price into the down move in 2022, which I don't remember it trading there, but I guess this was kind of like a meta move. Remember when meta was at like 80 and it was dead? And now it's at, it got up to basically 800. It was like 10x from there. Netflix has seen that same sort of move over that time frame. That's a big move to the
Yes, it is. Yes, it is.
That's a nice one here. So next slide here. So why do companies split stock and how does it impact investors? So of course, I think the number one thing is just making it more affordable, more tradable. It's hard for a retail investor to buy one share and put $100, $1,000 into the share. It's a lot easier to buy a handful of shares at $100. And from a perception standpoint, like I know you can trade fractional shares, but having 10 shares is way different than having one share. And when you have a half a share versus 5 shares, it's the perception of that is it seems like it's a lot more advantageous. So I think overall this helps, from a liquidity standpoint for retail investors to be able to get in and out. The same thing as if you've been riding this up and now you have one share at, $1,000 a share, it's hard to take off, 0.2 shares.
Yes.
It's easier to close out of 2 shares when you have 10 shares.
Yes.
Like that's an easier kind of trade. So I think just improving liquidity, which is the second point here, that's really what this does. It improves liquidity and makes it more accessible to the broader market here. It's also a confidence thing. So stock split can signal management's confidence in the company's current and future performance. And when you're increasing the share count, it's overall a positive thing. It's a liquidity thing, really, across the board.
Good job.
So looking at just a couple recent splits here. So here are the top 5 splits that occurred in 2024 based on the volume right after the split happened and their post-split performance. So a lot of these have been positive. They're when you look at these, out of the 5, 4 of them have been positive post-split performances, which isn't like we're not trying to make a argument here that things go up after a split, but it is kind of has been a positive move, especially with the way the market has been. But splits don't always have a positive impact on their company. CMG is one where the post-split performance and volume can actually go down. I think, and we've talked about this before with splits, you take a lot of the gamma out of it and the tradability. And it doesn't necessarily mean that the stocks can't move as much as they used to, but there's a difference between having a gamma on a stock that's $1,000 a share than gamma on one that's $100 a share. And so you kind of have a little bit of a dulling of volatility. And you see that in an Nvidia or a Tesla. You know, there was a time when Tesla implied volatility was like 150%.
Yes.
It was trading at like, you know, 1,200, 1,500. I think it got 2,500 a share.
I think so.
And then before it split, but it was having $100 moves.
Daily. I know, we were trading it.
Yes. So you get, you know, like it dulls volatility because there's more liquidity. And anytime you have more liquidity, you're going to get a little bit less volatility. And that's kind of what happens here. So I think the 10-for-1 split is perfect for Nvidia. I'd almost say for Netflix. I'd almost say a 5-for-1 would be a little bit better because I think that $200 mark is kind of the perfect spot to be. But, you know, it's good. I think it's overall a good thing. So you can see here some of the recent splits and the performance there. Next slide here. So data shows that a stock split doesn't necessarily guarantee better returns. There's really no guarantee in markets. So if there was, this would be a real easy game. We just look for that easy money trade, that guaranteed money trade.
That's right. It doesn't exist.
You know, a lot of these just holding SPX or SPY within a year has had kind of similar performance here. So you can see, you know, the stock splits after the splits and their monthly returns. They've certainly been bullish, and we're looking here at, you know, recent times, which has been an up move in the market. They've been basically the same as the market as a whole. So from a volatility perspective, you do have a little bit of change in volatility as well here. So your longer term volatility in terms of the returns has been wider, which isn't a shock. The market has gone up too, so you've had this kind of bullish lean here in all of these stocks.
Very good.
So next slide here, we're going to take a look at Apple. Apple had 3 splits since 2000. We had one in June of 2000. We had one in February of 2005, and then we had one in June of 2014. We recorded its performance for 12 months directly after each split and compared it to the average performance of randomly selected 12-month periods. So just looking at the return after the split versus just kind of the randomly selected performance here. And you'll see that, you know, like a lot of these other stocks, there's kind of a dulling in returns after the split, at least in the short term here. So next slide.
Now, at market highs, these are all going to look good, right? I mean, you also have to take that with a grain of salt, right?
Yes. So like some other stocks, Apple yielded a positive return averaging about 10% in the 12 months following the stock split. However, if you had even better performance, during randomly selected periods here. And, you know, a lot of that has to do with the time frame that we're looking at here. We're looking at 2000 to 2025. And if you know anything about Apple, it went up very, very significantly post-dot-com era. So, you know, I think the takeaway here is it's not a guarantee that stocks go up after a split. That's not the, there's
not the norm.
There's no.
I mean, but it does seem to happen. You know what I mean? Especially in a bull market.
Yes.
Now, if you had a bear market, it'd be a little bit different.
The ones that are the most recent, like an Nvidia and a Tesla, those kind of skew our perception of how these stocks perform.
Yes.
But we'll see what happens with Netflix. We got two weeks until that happens. So.
That's correct. That's correct.
So a couple takeaways here. Stock splits provide various benefits to retail traders. I think the key here is the price, the affordability, the tradability of the options. You know, this opens the door for naked positions in something like Netflix, where you haven't really been able to do that unless you have a much more sizable account. It's ultimately, I think, a good thing for traders in that it allows a lot more access. So volatility does go up when the stock splits, typically in the short term. You definitely see volatility expand a little bit. So we'll see if that happens with Netflix. Of course, not a given. You know, each stock is unique here. So the action of a stock split does not necessarily indicate future performance. So, you know, like the case of CMG,
stock has not performed well after a split, it's not a given that, you get the stock split, stock goes up, buy it now.
You're right.
It's not always the case with these, so.
Good job out of you. Good job out of the team on reviewing stock splits. What do you think of this market? Even the S&P is down 43. They're about, 50 handles off of their lows. They're about, let's just call it 40 handles off their highs, 40 handles off of their lows. This is about as high as we've been since the market is open. NASDAQ down less than 1%. It was down almost 2% a moment ago. Russell down about, 7/8 of a percentage point, same as the NASDAQ. Dow only down 150. Volatility up by 57 cents, 1942. Volatility still hanging in there as the market rallies here. Bonds are up 4 ticks. Let's take a look at what's moving on these high option buy. Let's go to the upside because there was nothing here a moment ago. You got Spot, crazy stock there, up 30 pre-market, down 30 after the market, up 4 or 5 now. AVGO, which was down to, $10 lower than this, is now up $4. Meta, which was lower by about 4.
If you wait, you miss it.
If you wait, you miss it.
That is how this market has been. I mean, it's wild. Even that Oracle move, like where I rolled down the call. So I rolled down the call for $1.72. It's moved about 20 cents, but the stock has rallied like $8. I mean,
yeah.
Let me see where I did this at. So I rolled this when the stock was at $2.50. I guess it's only rallied like $4, but that spread hasn't moved. The put has gotten vaporized. I mean, this goes from a $100 loser to a $100 winner. Do I just close this? Do I take the money and run?
Dynamic markets here. I mean, if you've wanted some volatility, you certainly got it. Bulls and bears are making money. Those who are waiting and who are ramping up are having a much harder time. So keep everything nimble in there. This is
another common question that I got because, if you're trading. We're trading, a couple lots here. 1, 2, 3 contracts.
Sure.
So let's say it's not, we don't really do this in practice. We could if we wanted to. But a lot of people ask, like, I'm worried about things falling out of bed here. And I want to take advantage of these moves lower.
Sure.
You start, if you can trade 10, let's say your lot size, your normal size is 10 contracts. And something moves $10 and it gets a little dicey here. Volatility is upticking, it's spooky. Maybe this is it. Maybe it's going to fall out of bed. Do 2 or 3 contracts. Like you don't have to go full bore every single trade.
That's right.
And that'll allow you to at least, you can average in for using that phrase, but it allows you to not have to put your full size on every single time. You do 2, 3 contracts and you catch some of these moves.
Sure. If you're trading 10 contracts and you're used to, let's say, $500 moves on a $1 move in SPY, and you go down to 2 or 3 contracts and you get, $150 move, it's like you're willing to do more if your assumption hasn't changed. I mean, it's not a big number. If you come out with volatility being big like it is right now, and you have that $500 move, which volatility expands, is going to be like a $750 move. All of a sudden, you're like, you're kind of frozen.
You're stuck.
Yes.
Yeah.
You definitely have a lot of opportunity here with volatility and flirting with the 20 handle and the 19 handle. Much better than you did when it was contracting every day down 17.
Yeah.
Let's take a quick 90-second break and come back. We've got a market measure for you. Immediately following these messages. Let's Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
I started trading around 2018, soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Today's episode of Market Measures is brought to you by Cibo. Cibo is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out Cibo's Retail Trader Suite at www.cibo.com/minis.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with a market measure sponsored by the CBOE. But before we do, let's take a quick look at the market here. E-mini S&Ps down 48. They seem to have found their footing right around here. We're about halfway between the highs and the lows. Volatility definitely staying bid, up 60 cents here. 1950 hasn't moved, even with the E-mini S&Ps moving by about 10 handles higher. NASDAQ now down 1%, down 260. Russell down 19, Dow down 120. Expected move of the E-mini S&Ps for the rest of the day is about 27. About 10 handles ago, it was 36 or so. Bitcoin flirting with 105, still down 2,200, 104,845. Ethereum down 23. Ethereum was the weaker of the two between Bitcoin and Ethereum. Now Bitcoin's still down 2%. Ethereum down 0.5%. Oil down 51. Gold down 61. A little bit sick there. 1.5% move to the downside in gold. 39.54, just off of its lows. Silver down big. 2 and almost 0.5% there. 112 in silver. Metals taking a little bit on the chin. Soybeans, wheat, and corn all lower, but still near their highs. Let's take a look at the market itself. Costco is still the leader, up $7 and change, 9.35. AVGO, we talked about trading lower to 256, about $8 higher than where it was, still up $2. HIMS for earnings, up $3 or so. Spot was the other one that's oscillated all over the place. Spot is now down $2. It was up 30 pre-market, down 30 pre-market. Let's see what Uber is doing. It was down $5. Now it's down $6 and change. Dynamic market all across. Even the S&P is down 42 now. Amazing. It really is amazing.
Volatility coming in. I mean, 1944. Mm-hmm. They got it again. They did it again. They bought the dip again.
I guess so. I mean, yeah. When you're,
that's it. You get
50 handles off for
1%.
Big move. Yeah, yeah.
1%. It's crazy. Gotta love
crazy, crazy. Volatility still bid here, though. I know it's up 55 cents, but it's still bid. Mm-hmm.
I would like it to stay here and not just get smashed down to 16 in one session.
Yeah,
like it has
a little quickie.
Yeah.
Mm. I guess it gives you a chance to put on more trades.
I know. I'm looking around, but CRM
feel like you missed it?
Yeah. CRM is one that has like higher volatility. I mean, I was thinking about Nvidia doing a strangle.
I was looking at Nvidia too. It's so funny that you say that. Down $4 and change right now. 202. Nvidia traded down to what this morning? 201. I mean, it's really only $1.50 off of its lows. Still a 2% move in Nvidia. What are you looking at in Nvidia? Earnings November 19th.
The question is, do you go to the 21st, the November expiration, or do you go to December?
If you're going to go to November, you might want to wait until get close to the expiration, because volatility is going to expand in November if you're looking to sell premium, unless you have a directional bias here.
Yeah. But what if you went to December and just did like a 1 standard deviation strangle?
You certainly could.
You do like the...
You certainly could. You freed up a lot of buying power.
Yeah, 175, 240.
Mm-hmm. You certainly could. Yep.
At 590-ish.
Yeah, you certainly could.
I think it warrants something. Because this, if you get like an there we go.
Oh, that was too easy.
591.
Oh, yeah, that was way too easy.
If you get an inside move on earnings, this should be really nice.
Yep.
Because they'll smash volatility here. All right.
Smash it.
Smash it. Let's do it. You want to do the...
I'm ready.
Yeah, market measure. Sorry. I haven't been able to look at my positions. I'm like a little,
I know.
Got to get back in the saddle here.
I know.
On the saddle.
I know. You're all giddy.
Yeah.
Welcome home.
Thank you. Visualizing beta, sponsored by the CBOE. What do you think about beta in the last couple of years?
I have a love-hate relationship with beta because, beta is just really like how much a product moves with everything else. But when you measure it like against SPY or some other product, we all seem to move in the same place. It's very hard to get. We tried and talked about it for years, trying to get an uncorrelated portfolio, and it was damn near impossible.
Especially into the downside.
Especially the downside. Maybe the upside, you can get some that go a lot higher than others. Some don't participate as much. But to the downside, it seems like everything gets whacked.
Yes, I agree. Well, let's see what the boys put together here for beta. So beta is a fundamental tool for risk management that relates to the underlying. So you look at the underlying. The beta is how much it moves relative to something else. So typically it's measured against SPY. So when you're looking at this, as the slope of a line best fit for the price of XYZ as a function of SPY, it can intuitively be thought of as how much to expect a stock to move given a $1 move in SPY. So if you have a beta of 2 and SPY moves $1, whatever that stock is, should or is expected to move $2 on that $1 move in SPY. So it's kind of like a multiple of whatever the market moves. Of course, beta and correlation are tied together. Correlation is going to tell you how often they move in that same direction. So you got to kind of look at, it tells you that both correlation and beta are going to be a little bit random. You can't just put on a portfolio of things and say, oh, well, my beta is 5, so I'm gonna
my beta is better than your beta.
Yes, so I'm gonna 5x the returns of SPY. It's not always the case. And when you look at limited data sets and day to day, week to week, it's not always going to line up. It's the same thing with correlations. Correlations, having high correlations is a great thing, but it's not going to move every single day in that correlation. So you got to keep everything, with a little bit of a grain of salt here. So for each underlying, you have a position in. you can multiply the beta by your total delta, which gives you your beta-weighted delta, an estimate for how much a $1 SPY move is likely to move your portfolio. So when you beta-weight your portfolio, again, this is why we use SPY and we beta-weight everything to SPY. You can change that to the Qs or whatever you want, but it gives you a general idea of what your portfolio is going to move relative to the market itself. And again, things are going to change with that when you incorporate, because we're trading options, mostly. So options have exposure to volatility and time decay. And so all these things are, it's good to understand what beta weighting is and what beta weighted delta is, but it's not something that day to day you're hyper focused on and expecting that value to come out every single time.
That's correct. That's correct. You can't.
So ultimately, you want to keep an eye on your total beta-weighted deltas. It's a key technique for avoiding excessive market risk. Of course, you don't want your delta, when we're managing our positions and we say, I'm going to manage some delta here, you got to have kind of a range of delta that you're comfortable with, because you don't want to get, it's relative to your exposure in the markets. So you got to have that kind of range there. So for this study, we're gonna, how much of an underlying behavior is predictable via the beta, so i.e. systemic or non-diversifiable. So we're gonna look at kind of just how predictive is beta. You're gonna see some interesting stuff in a lot of these charts that we have. A lot of good charts on this one. So the study here, using 15 years of data in SPY and 12 other major underlyings. So we're looking at Apple, AMD, Amazon, Ford, Google, IWM, Microsoft, Nvidia, Qs. We're looking at silver, Tesla, and XOM. So you got a little bit of a mixed bag here. You're looking at, some high-flying tech stocks. You're looking at some metals. You got some lower volatility stuff like XOM and Ford in there. And then we're computing the daily beta-weighted values for each underlying, looking at the price changes from the prior 10 years. So you're just looking at the beta of the underlying versus SPY here. So over the past 10 years, we're contrasting the growth of each underlying compared to holding the beta times as many shares of SPY. So you're looking at relative performance of that underlying versus the beta times SPY. So looking at SPY performance and then your underlying beta times SPY.
Okie dokie.
So looking at some of these, so you've got QQQ and then the beta times SPY here. So how much SPY moves relative to the Qs. A higher beta is going to move more than the underlying itself. So you're looking at a higher beta versus SPY here. So the Qs is going to have a higher move than SPY. The next one here, IWM. So this is the beta times SPY. So this is comparing just the underlying versus the beta times SPY, what you would expect to get out of it. So your SPY beta is less than the Qs, is what I think we're getting at here.
Okay, let's hope. Because if we don't, we're going to have some issues.
The next slide here, so we're looking at IWM. So IWM is going to have a bigger move relative to SPY. It's a higher beta underlying in both directions. A lot of what you see here is that things got out of whack kind of in 2020. This is where things kind of started moving. Pre-2020, when you didn't have as much volatility, things moved together. Your betas were not out of whack. It was pretty in line. Post-2020, and all the things that we've gone through with COVID, with Japanese carry trade unwind,
Sure.
You had the tariff tantrum. A lot of these things skewed these moves significantly in all of these underlyings.
Okay. But that's how it is, right? I mean, just because they were skewed for that effect, it is what it is, and we still have those effects today.
Yes.
Right? I mean, so it is what it's subject to change until it doesn't, right? I mean,
yes.
So is there anything Tom used to play a SPY versus IWM trade here, which is just, or NASDAQ versus IWM here. You can see how that trade was never working because markets move, market changes, right? I mean, you can't stay in front of this train forever.
Yes.
Next slide, please.
So here we're looking at Apple versus the beta times SPY. And again, since 2020, that's really when things widen out. Like this is where you've had these bigger moves in the underlyings themselves versus the market as a whole. So the market, it's basically that dispersion trade where we've talked about where the market kind of has chopped and it's gone higher, but not in the same magnitude when you look at an AVGO. Like when you mention AVGO, down $10 to up $10. Right. That is beta. Like that is some big moves there. Post 2020, you're seeing the underlying stocks move a lot more than what you're seeing in SPY. And so like being long stocks and short the market has pretty much worked. Like that's kind of what this is telling you, is that you're getting a lot more move in the underlyings themselves than the market as a whole here. 100%. But that hasn't always been the case. Like for most of the pre-2020 movement, it's been kind of the same thing, like Apple up 0.5%, market up 0.5%. It's the same kind of move. Whereas now we're getting, AVGO, which is now, that was a good one to reference, is up, 1.6%, and the market
it's up almost $6.
And the market's down 6%. So that move is a 2% spread. That's huge. That's not what you've seen pre-2020, which is what all these kind of slides are showing you, is that you're having these massive moves in the underlying itself, and the market itself hasn't been moving as much. That's why these spreads are widening out.
Very good.
So the next one here with Google. So same kind of story here. You're having these big moves in Google versus the market as a whole here. The wider these spreads, the more beta you've seen in those underlyings themselves. Tesla, another good one. And Google actually, up until just recently, has been kind of the laggard of this look back. The next one here with Tesla as well. So Tesla's another one. You have a huge spread here of the beta times SPY. So this is, you're looking at being long the stock versus the same amount of beta short in SPY. The spread has widened out, which is positive if you're long the stock, short the market in these. So jumping over to the next one, Tesla. We don't have to spend a ton of time on these. All these are kind of the same.
I got to show you the same thing. Yeah.
So next one here, getting over to Tesla. So again, this one much wider here. And then when you look at Nvidia, this is the next one here. Same sort of story here. Since 2020, this is when all these things kind of widen out. And getting over to this next slide here, this is kind of where we get to the point here. Looking at the performance of a portfolio formed by being long the stock. This is the next one here. Yeah, we got Nvidia. We can go to the next one too. We don't have to harp on these. So looking at the performance of the portfolios formed by being long the stock but short the beta of SPY. So if you if it's got a beta of 2, you'd be long 1 share of the stock versus 2 shares of SPY. You could see the performance of all of these positions. It's been, you're getting better returns just being long the stocks versus
trying to be too cute.
Yes,
with the beta. That's correct. I mean, the S&P is down 38. I am so surprised that in an hour it
reverses half of it, and
or more.
What's that?
From the lows for sure, and volatility is still up 55 cents.
A couple takeaways here. So relying on historical beta-weighted values did not prevent beta times SPY change from being a generally good predictor of upcoming underlying movements. So beta isn't on a day-to-day basis and over a long period of time, is it going to be the same? It's going to obviously change. Prior to 2020, most underlyings considered the expected move nearly in lockstep with their beta anticipated changes. So prior to 2020, beta was much more predictive. Mm-hmm. It was much more consistent across the board. 2020 to now, we've had a lot of volatility in these underlyings themselves.
Atypical market conditions such as the pandemic and the recovery can disrupt long-term correlations, and it's unclear to what extent they have resumed. And so, of course, with correlation, beta, anything where you're measuring two assets against each other, you got to take it with a grain of salt across the board. It's not going to work out every single time, every single day. Using beta-weighted delta to judge the systemic risk in a position is an excellent first step in portfolio risk management, but it's vital to remain active and attentive because non-systemic moves will eventually happen. Basically saying markets like what we've seen in the last couple of years are bound to happen at some point. It's not just smooth sailing every single time, every single year like we had from 2010 to 2020, the 5-10 years of just lockstep, everything goes up. It's all the same every day. This is kind of a different market.
It does seem to be that way, but we are just a skosh off all-time highs.
Yes.
Let's take a quick 90-second break. We'll come back. We got more Tasty Live with the Trade Desk next. Let's Tasty Live. Even the S&P is down 40, NASDAQ down 234. Leader in the clubhouse to the downside. Russell down 15, and the Dow, the leader in the clubhouse to the upside, down only 98. We're back in 90 seconds with Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
We are back, son. Even the S&P is holding steady, down 40, volatility up 52, but all that means nothing when we've got this man. That's right, my man Q. Quentin, what's up, brother?
That is quite the honor. Thank you.
Yeah, you're welcome.
That is quite the honor. Matt, Spoo's down 40, and you're like, that means nothing. Because
That's right. That's right. Well,
I appreciate that.
Well, it means nothing because they were down like 90.
Yeah, right there. Yeah.
Down 40 is nothing. I mean, it's a half a percent.
Yeah, 0.5%. Right.
Markets are big.
Markets are big. You're right. You're right.
You know, when the ES is, almost 7,000, what's a 40-point move now? It's less than it used to.
It's 0.5%.
Yeah, it's 0.5%. It's nothing.
Yeah.
A little bit more than 0.5%.
Nothing.
But yes.
Once upon a time, 40-point move, that'd be
giant.
You'd be scared under the desk.
And I had been.
Sure.
Yeah.
Anytime I had been.
Yeah. All right, so another Tuesday. Fellas, we got another demo.
Oh, awesome.
I thought you were going to say it's Taco Tuesday, which we know.
It is also Taco Tuesday.
What's the taco we got today? What do we got?
I don't know. Maybe Noodles can tell us later if
you know?
He's got it.
Oh, okay. Sabroso's a good one. Good.
All right.
That one's
So
good.
we've got a demo today. tastytrade.com/webinars. tastytrade.com/demos. tastytrade.com/demo.
Demo.
Without the S or
Yes.
with the S. It'll all take you.
We want to find you. If you want to come to the demo, we want to find you.
Some of us are simple. Okay, I'm a simple guy.
Hey, I respect it. Marketing may have like their way, but I appreciate the simplicity as well.
Yes.
And so we've got that. We've got new features today with Big Tex and Christian. We're going to be going over some updates to the Active Trader tab. You can do multiple ladders and multiple charts. It's beautiful. It's really a work of art.
That's awesome.
Being able to do that. It's a lot of fun. Like, that gets me. Yeah, that makes me want to trade that stuff.
The Active Trader is a lot of fun. Have you've?
I haven't used it in depth. I've traded on it. It's nice. It's so much better than it was. Whoever's been working on it did such a great job with it. So
Well, you can move the orders too. So
Yes.
it's very good. If you're, a lot of people like to trade like the micros and they'll do like 5 or 6, 7 contracts, and then you can leg into them. You move your orders on the chain. It's
very cool.
Yeah, it's really, really nice. So we'll be going over that.
Cool.
Got a Big Tex and Christian doing the demo. Should be a lot of fun.
Nice.
And then, let's get to some symbols, and then I've got to head out of here. Busy
Sure.
day on
Busy desk. Busy desk. You're a busy man. I know you.
One freaking down move and everything gets busy again.
One down move and everything.
Freaking out.
Well,
Come on.
it's even busier on the updays because everyone's wanting to trade.
I figure it'd be
Everyone's
busy.
always wanting to trade, really. The desk is always busy.
I figure the down moves are even more busy because everybody's trying to buy the dip. Not
Slight down moves, not so much, but the bigger down moves,
Or
then
is it-
it's like, all right, we got some risk to clean up, things going on. But enough out of me. Top 20 symbols going through the system in their IVR. At number 1, we've got Palantir at 16, Tesla 20, Meta 25, Nvidia 24, HIMS 18, IBIT 55, GLD 41, AMD 49, Amazon 18, Uber 18, Shopify 23, Oracle 51, Intel 35, Microsoft 14, TQQQ 28, SoFi 22, MSTR 17, Robinhood 32, Google 26, and Micron 51.
Beautiful. Good job out of you. PLTR is the one that had earnings. Tesla's got all the news. Meta might have found its lows. What do you think about that?
I mean,
it's about time.
What are you doing, brother?
Yeah, everyone's like, after that big
Pump
fall,
the
everyone's
stock.
like, let's buy the dip there.
Uh-huh.
Right?
What the hell?
And then start to continue a little bit lower.
I mean,
3-day rule there, for sure.
Yeah, I love the 3. That's something I go by a lot because sometimes I'll get a little overzealous.
It has no bearing in math or anything like that. It just works.
Yeah, it's just like
it's psychological.
It's psychological.
Yeah, it's psychological. It's something that curbs me from getting a little too aggressive.
And you
sometimes off one move.
You can make it your own too. Like my 3-day rule is it might be a 4-day rule for you. You know, like you gotta understand your own trading. After so long, you understand like when the best time is, and it's usually, for me, it's a couple days after I think of something good.
Yeah, because sometimes it's, like, just because you have a hunch doesn't mean you need to buy a bunch.
Oh, that's good. I
Oh,
like
look
that.
at you. Very,
Like
very,
that, right?
That's
very
Honey.
poetic there.
Yeah.
Very good.
So yeah, 3-day rule, that's something I like. Of course, you might miss the first move right away, but it's something just to, match the risk tolerance of the trader a little
Yes, I like it.
Very good, sir. Well, I'm going to let you go. Get you
thank you.
back to work because we've
Busy
got
man.
this man. That's right.
Hardest working man in show business, right here.
AKA Glenn, AKA Noodles, AKA G Money. What's up?
How's it going? I don't have any rhymes for you guys. That was.
Oh, no rhymes, no rhymes.
You really leveled up there.
I will say
Upset now, so.
He's an overperformer. You know how that goes. I know.
San Diego had a lot of G Money fans.
Really?
Oh, awesome. Don't sound so
right.
surprised. Act like you've been there.
Oh, I'm not surprised at all. I'm not
I am
surprised at all. I see the talent right here.
How was it? Very fun.
It was fun. It was fun. Oh. But yeah, we got a lot of love for the TastyFX products.
All right.
And for Option Trading Concepts Live, and now during this session. So we got the peeps trading these. They like them.
All right.
Yeah.
Beautiful.
Love to hear it.
Yeah, and you were kind of our introduction to them on the network.
Nice and trade.
Not to throw shade at Frankie.
That's all right.
I've been waiting for him to.
He's the man behind the curtain.
I know, it's all right.
Pulling the strings.
Yeah.
I am but a puppet.
Very good.
I don't know. Something about you is altar boyish. Like I don't know. Like
But he's naughty deep down.
Oh, he's naughty.
You know he's like.
he's naughty for sure.
Like he looks like he's.
Oh,
like
the still water runs real deep.
Yeah,
over
but
there.
he's naughty.
Naughty.
Yeah.
Naughty.
And
I
I've
know.
seen it. And I've seen it.
Have you?
I've seen it. Oh yeah.
Yeah,
Oh,
yeah. I've eaten with him, so I know he's naughty. Yeah. No, he's very sneaky.
Yeah.
This is a
good. This is a good wingman.
I don't know how you guys make me blush so much. It's
No, it's true. Like you look at Nick and you go, nasty. Like, but you look at you and you go, oh, altar boy.
Yeah.
Dirty little SOB that you are. Right? For sure. You ain't fooling anybody.
No,
man. I fool a couple people.
Probably. I'll give you that.
Well, that's how he fools them because the look.
correct.
They don't know.
Reverse psychology.
Yeah.
Oh man, well, it's an exciting Tuesday morning, not only for equities and gold, but also U.S. dollar markets, global FX markets. But it's mellowed out here in the U.S. session. If I was looking at all asset classes, I'd be looking at stocks right now for sure for the movement. But when I woke up, came in here bright and early, 7 a.m. Central Time, FX were the movers.
You want a cookie
of the
for
night.
that? You want a freaking cookie?
Extra guac.
It's a good question.
All I mean,
you were an hour late. You were an hour late if you were trying to find me.
Yeah.
I mean,
do you got like your punch card or
God,
something?
I was on a roll, guys. What the heck?
Yeah. Go on. Sorry.
that's all right. That's okay.
FX movers of the night, we had a British pound yet again softening, dollar moving higher across all major pairs except for the yen on some safe haven flows, but that pound weakness makes pound dollar the mover of the morning. We had the finance minister of some UK official, Reeves, speaking about the upcoming budget discussions, and whatever she said was not good for
Or perceived good, right? Yeah.
Not perceived good, yep. And that is ahead of the Bank of England meeting on Thursday. So pound definitely in focus.
Euro's been getting spanked too.
Euro's been getting spanked as the dollar appreciates, but not against the yen because we had some verbal intervention from the finance minister out in Japan saying all it takes, is the right person, as we know, saying, we're looking at these FX markets at the current exchange rates, the pace that the yen has depreciated thus far, and they have a propensity, a historic, history of intervening directly in these FX markets. So their threat taken a little bit seriously takes the dollar yen off of those 154 highs, now trading around 153.
I was short the euro against the Japanese yen, which was painful for quite some time.
And you're back?
Well, I just took off about a third of the position.
Very nice.
into this move, which
Yen getting its first uptick in what seems like forever. Right?
But and the euro has been strong too. I'm also short the euro against the British pound, which is coming in a little bit, but I could certainly need a little bit more of that.
Yeah, pound not doing you any favors here today.
No.
But yeah, interesting on the Tasty FX side, looking at IG Group client sentiment, we now have euro dollar and pound dollar client sentiment flipping long. So more traders long this euro and this pound after the recent, the recent dollar.
But they're,
what do they know? What do 61% of IG Group traders know?
I want to be on the opposite side of that, and I am.
Because we're at April lows.
Contrarian.
Yes.
1.31 in that British pound dollar. Dollar Swiss franc. Swiss franc not getting any of these risk-off flows as the dollar's coming out ahead there. And Australian dollar moving a little bit with the equity moves, getting hit to the US dollar strength in the morning and a slight uptick now as equities bounce a little bit. Risk on coming back a little bit.
Little bit.
That's what we got today.
What's the biggest mover here that we can, I guess pound is probably it.
Looking at the pound,
Pound yen.
New Zealand dollar also moving quite a bit, and in the currency cross world, we've got Australian dollar, Japanese yen. That one taking a bit of a hit on that.
Australian dollar down pretty big. I mean, that's a 380 tick move. That's a pretty decent sized move for a 1 day move. Kind of near its lows. I know you got a couple of wicks there, recent lows, but definitely seems like it's near its lows.
So yeah, if you wanted to play one of the, the risk on, risk off sentiment dynamic, you could take that Australian dollar, Japanese yen, and take some directional bias there if you think more safe haven flows are coming.
Is some of this the uncertainty with the U.S. rate decisions? Kind of because that spread has moved. The December
absolutely
rate cut projection has moved. Is a lot of that what's getting priced in here?
Yeah, a lot of that priced in last Wednesday on that FOMC announcement, and that momentum continuing as we've seen. Throughout asset classes, a lot of 1 day moves, but when that starts to stick, then you get a little more momentum, and we've seen. I think this will be our 5th day in a row of dollar strength, which we haven't seen in a long time, up almost 2% against some of these major currencies. Just a pretty big move.
Ilya, a happy man.
I'm sure he is.
He is a happy man. He's been calling it for weeks.
Has he?
He's been ready for this.
He's been ready? He's been waiting?
Every currency offered.
Everything. Just long dollar against everything.
Even got in against the Singapore dollar, I believe. Like,
really?
Right. You're really you're lucky.
You're out there.
Those, you got to scroll down for those. Those are the emerging non-U.S. pairs.
Yeah.
Those things. Those are getting funky.
You're definitely out there when you're looking at that. Even the S&P is down 39, volatility up 50 cents. Talk equity markets just a moment here. Nick, what do you think about this market? Even the S&P's been kind of hanging out here, down 40, and volatility hanging out here, up 50, 55 cents. I think we got a little bit of downside action coming, but I've been a little bit bearish for last.
I would like a little bit more. I want a little bit more volatility too.
What do you think about gold here too? Gold down 44, off of its lows, off of its highs, kind of mid-range. What's your guess on gold?
The volatility has come in significantly there, which I think tells you that maybe this is kind of we've taken kind of
taking the heat, taking the
you get a little bit of the crush and vol. It tells you that maybe we stabilize around here a little bit.
Very good, very good. All right.
How would you get short the U.S. dollar? What would be an interesting way to do that?
He wants to play the other side now. He's a two-sided trader.
No. I've been net long the US
I
dollar
said you're a two-sided trader. You're looking for something to do.
Yeah,
I get it.
What's an interesting? I was looking at New Zealand dollar. Is that kind of a price extreme? I mean, that's just how I kind of.
Yeah. So New Zealand dollar is at April lows, similar to that pound.
Yeah.
It's gotten, it flashed from the start of the year. It was below that 56 cent level. Here we're hovering around 56.5. So it's been lower before. But yeah, it got all the way as high as 61 cents earlier this year. So
0.7% today too.
Yeah, so it's from high to where it was, high of this year to right now, it's down 6.5%, which is a huge move in currency markets, and back to where we started the year. So that's a major one. But if you're looking for, yeah, I mean, the pound also.
I know I can't do pound tomorrow.
Yeah, but that one has some more.
Got some
that started
long.
the year a lot weaker, so the dollar a lot stronger. So maybe you have more of a historic floor near where we're at in that New Zealand dollar. Absolutely.
All right, we're gonna.
In terms of room to run, I mean, it has its own narratives and storylines, but Japanese yen, you know, is we've been higher at the start of the year, but that also from this year's lows, we're up 9% from where we were in April in that pair to the U.S. dollar upside. So even though the U.S. dollar's been getting hammered against a number of currencies year to date, this is the one major currency it's held in against the yen so far. So not sure from a momentum standpoint if that means you want to be necessarily long the Japanese yen, but from a tape action.
Tough one catching a falling knife in the yen.
We tried to do that call spread right at the money and in the futures, and
base ripped off.
Base ripped off, but defined risk.
Defined risk.
So it's okay.
Yes, I get it.
Yeah, you have 3 days in a row where we've been at or slightly above that 154 level and haven't had any momentum that we had on the way up from 150 to 154. So
the peeps are saying long G money, short U.S. dollar.
That's a good one too. That's a growth stock.
That's a growth stock right there. Yep.
It's a grower, not a shower. We're going to take a quick 90-second break. We got more Tasty Live after this. We got Liz and Jenny next. Floor of the SIBO. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you.
This was not a paid, you're not getting paid for this advertisement.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Yo estamos en falla, vamos pa' los matorrales. Si tú eres una bici, yo te voy a dar pedales. Pero con cuidado que no estoy en comprar pañales. Yo quisiera que me dé un piquito. Dale de comerte huerfanito, no me dejen visto. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Te estoy esperando en la fila. Yo que tengo tanta paciencia. Contigo quiero una indecencia. Por eso te quiero desacatar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Dale pa' acá, dale pa' acá. Estoy seguro que te va a gustar. Dale pa' acá, dale pa' acá. Yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear.
We get caught up, we lose the time. We get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. Honey, spring and summer right through. All the way I told you. Can't get a better view. 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 Cruising upstate and cooling down, pulling over to fool around. It's high time to get out of town. Close our eyes and get lost in the sound, yeah. Hey, hey, hey. Hey, hey, hey. I'll be right beside you. All I ever want to. Can't get a better view. Honey, spring and summer
everybody, and welcome to the Liz and Jenny Show. My name is Jenny Andrews. This beautiful blonde is Liz Deerking. It is a wild and crazy Tuesday down here at the floor.
Yeah, you know what? It really, really is. I mean, we opened when I woke up this morning.
How
schools were down, what,
convenient.
70?
Jeff is always walking by when the show is starting. There he goes, waving in the background. Frank, there, your nephew just went by.
Yeah, we're on the wide shot so you can see him. That's our goal, is to get Jeff on camera as much as humanly possible, Frank.
Yes.
He's shy. He's camera shy. He's a little shy.
So it has been a busy morning here. It might not sound like it now. Spoots are only down 46. They were down 70.
They're only down 36 right now?
46.
46. Yeah, they were down 70. I mean, it looked bad. And VIX is kind of pulling back a little bit too. So yeah, you can see a lot of bustling of activity with people walking around behind us. They're trying to get their 5 minutes of fame on camera on the Liz and Jenny Show.
Yeah, VIX is up is 1814. I saw it as high as like 20 and a half today.
20 and a half?
Yeah.
Wow.
Yeah. So,
wow.
But only 1815, which is where it was yesterday during the show, which we thought VIX seemed high. I know we had earnings, but VIX seemed high. So I think this down move, the VIX was almost a precursor to it.
Do you know what I think we should do tomorrow morning? And I'm just putting it out there because when I say it on camera, it has to happen. Tomorrow morning, when we get here, you and I are going to take a little field trip into the VIX pit.
Okay, sure.
And we're going to just talk to some people and then come back and report information.
Sure.
They'll tell it to us when cameras aren't in front of us because they can't talk to cameras, but we will not reveal our sources. But you and I are going to take a little bit of a field trip.
I'm going to ask them how many times when VIX is elevated when there's no reason for it, is it followed by a down day in the market the next day?
Oh, buckle up for that answer.
I hope those boys are ready for us, Liz. I hope they're ready for us.
Buckle up for that answer. Yeah, so that's what we're going to do tomorrow, so that'll be fun. We've got our SPX traders behind us. We love them all. They're all very nice. We know a lot of the VIX traders. We're going to go over there and venture into the crowd. Hopefully we don't get stuff thrown at us.
For those of you who comment on some of our videos that say, oh, it's a little noisy here in the background, they want the sound muffled. We like the sound. We're sitting here in the SPX pit. Trades are happening. We like to hear it. We'd like to hear the orders coming in. We could see what's going on. We like the commotion.
And it's honestly a trick of the trade because Jenny and I have logged more time with people yelling behind us than anybody else on the network.
For sure. And honestly, we have developed these skills. So, like
do you call them skills?
Yes.
I don't know if it's an asset. You have to ask my husband if it's an asset or a detriment. My skill.
Okay, these skills that we've developed from spending our life. We grew up in the trading pits. From growing up in the trading pits, the skills we have are we can drown out anything. So when my kids were little and babies were crying, didn't hear it. And when my dogs are barking, I don't hear that either.
When people are talking to us, we don't listen to it. But if I want to hear something, I can be like, the SPX call is just traded.
We only hear what we want to hear, and all the other noise we drown out. That's a skill that you develop from standing in a pit for 20 years.
Well, like I said, it's going to be a skill or not skill.
Your husband doesn't think it's a skill?
The one skill that you don't have anymore, and I still do on a daily basis, is remember when we used to not be able to have cell phones, and so you'd answer the call like this, and I would be like, I gotta go by, and just hang up. You're like, every time I do that too, I was like, I gotta go. You're like, okay, yeah, that's fine, because I have something to do anyway. And I was like, she doesn't understand the I've gotta go by.
I gotta go by. No, I tried to get rid of what I considered bad habits.
That was, you still, every time I say I have to go, you tell me what you're doing next. And I was like, Jenny, we need to get you back in this bed for 10 minutes.
Back to the I gotta go by. No, I tried to get rid of the bad habits. The hardest bad habit to break was the bad language. That took a while.
I'm still a sailor. You can take the girl out of the trading floor, but you can't take the trading floor out of the girl.
I don't know. Yeah, I mean that was tough to break, but that was a long time ago.
Yeah, it was a long time ago.
And we're good now.
All right. So, in essence of timing, let's pop into the platform. I want to take a look at VIX. Okay. So that's what we were just talking about. All right. We're gonna take a field trip into the VIX crowd. We are only up 1. Let's see where it was today, Jenny Andrews.
High of the day. Hover over it.
High 2048. I believe you said that.
2050. I think I said 2050. I was 2 cents away. 2 cents away.
Yeah, 20. So that that was pretty high too.
Yeah.
And low of the day, 1790.
Some of the earnings that came out today. Let's take a look at.
Oh, the big one is PLTR.
Palantir down $13.
Oh,
6%. Look at 6 point. It was 6.66%. That doesn't look good.
Okay, Okay, but you know what's crazy is I keep an eye on this because, like I said, Palantir is one of my longest standing longs, meaning that I've been in it for the longest amount of time. It was up yesterday after.
After hours. After the earnings after hours. Well, it's only down. It's not terrible. Only down 13. It's not bad.
No, it's not bad.
So we did in Palantir. We just did the 217 calendar. We didn't want to risk too much. I'm glad we didn't pay for a diagonal. What is our Palantir?
Hey, we're only down $60.
Hey, that's not bad. That's not bad.
So that's not bad.
Do you think we close it and take our $1.10 back?
Are we going to be up on the day in Palantir?
We're just going to chill.
We got it. Honestly, I say we close it. We take our $1.10 back. I'm closing this. I'm not even going to mess with it because this morning we were down a lot more.
Sometimes with these, if there's not much left, 50 cents, 60
I'm going to show you where the low was, and I think this is where we opened. Low was 185. When it was 185, this was a
we're
$112
like $1.38 away from the high. So
I'm closing this and not
I think I would close it.
Taking our 110 back.
Yeah.
Okay. So Palantir gone.
Okay.
Jenny's going to push that through on the other side.
I am taking care of that. Don't worry about the trade. I'll send them out to the follow page.
HIMS. The other thing that we did a diagonal, which is now a loss, which is unfortunate because it was a winner on the chain.
Again, it's only a $27 loss, not much. How many weeks did we have between this diagonal?
Let's take a look. So 7 days, Jenny Andrews.
Okay, so it's a real short term.
7. This is 7, by the way, for those of you who are new to the trading platform. 7.
7 days.
7.
Oh, that's how the distance between our 3-day and 10-day. So just week by week. I actually closed this and put on a different trade. I did change my stock to diagonals, closed it, put on a different trade.
And once again, we trade during the show, so I'm not going to try to say something. I had the same diagonals on. I took a $60 winner out of each diagonal.
Well, congratulations,
That's what I'm
Liz.
saying, but we say it comes out in the wash. So at some point, in the words of Kenny Rogers, every trade's a winner and every trade's a loser.
I mean,
it is true. Like it was a winner.
On the open?
No, when we were on the train. It was a loser on the open. When we were on the train, I closed it.
Yeah, because on the train at 8:30 or so, I don't think mine was a winner.
Mine was. You heard me close it at about 9 o'clock.
But whatever. Like ours is not a winner. It's down $26. I would say I would put on a different trade. I don't know what you think, but I think I would put on a different trade.
What would you like to put on? I don't like him. Or hers.
Hey, their earnings report wasn't bad. They're gaining subscribers. It wasn't terrible.
And they did say they're doing a deal with Novo Nordisk too.
Yeah, so it wasn't terrible news.
No, it wasn't.
I don't know. I mean, you could put on if I wanted to keep a diagonal on, I would make it a longer durational December Nov diagonal, not this week, next week, because I don't think there's anything left in our 3-day. So now we're just decaying. Our long is out of the money. It's just decaying.
We have 23 cents left in our 3-day, which is fine.
So if we wanted to keep a diagonal going, I would do a longer term diagonal, November, Jan. Or if we wanted to sell premium in there, you could look at
18 rank. I don't know that I would sell premium.
Well, there's still decent premium in those options.
Well, so let's go to your diagonal thing. So if you're going to do that, you'd probably go 17-day, 45-day.
Right. Yeah.
So I'm going to go 17-day, and then I'm going to go.
So you got 51.
Sure. Another 179, 174.
Yeah. Then you got a diagonal going through December, and then you'll have quite a few sales in between.
Hold, please. I'm going to go to activity, HIMS, yesterday. Because we put it separately. Oh, no, we put it in as a package.
And we had a short put. I don't mind a short put in there. If you look at Dees, look at that at the money for 450. I don't hate that. I feel like there's a decent amount of premium in those options. I know you say 18 rank, but I did a combination of short puts and diagonals in mine.
That means you got more than one lot.
Well, I don't mind the premium in those. And look at the buying power. You're collecting $450 and using $600.
I'm actually just going to split the difference and go with the 35 delta.
If this were something that was using a lot of buying power, but
we
it's
had a short
not.
put in to protect us, and I'm glad we did, because now we're only down $26 instead of.
No, I mean it's not down. The HIMS isn't down.
Yeah.
So like we didn't. It didn't.
I'm going to shift this. We'll push this out. Okay, so that's out, and we're okay. The next thing that had earnings, it was. Oh, we don't have it in here, but the UUUU, and that's down as well.
UUUUU.
Oh, that's up now.
Oh,
that was
good.
down big this morning. Not big, but down.
Yeah, so let's see the chart. What did it do today?
So, let me see if I could to get it to the exact right one. There we go. The open 48. No, the high was 40.
Wait, you're on HIMS. You're on HIMS.
Oh, yeah. I was like, this is none of this.
I was like, you, 48. What the heck?
None of this added up. Okay, so open 1579, so down $2 from here.
And now it's unchanged.
No?
Not bad. Oof. Not bad. You made a comeback. And the rank is still 58.
Me needed it up.
Well, the rank is still 58, so after earnings, it's still holding its own. Let's look at it. How about a Jade Lizard?
So let's go back with the Jade Lizard. So I went with the 45-day option. I'm going to go with the 22.23.
Because of call skew, you're not getting it. It's not worth. You're not getting enough for the calls. Just sell the put.
It's not bad, but you're right. So and the put's kind of wide. You're getting $1. We're getting $1 for the put.
And using only $420. You know, earnings out, and is UUU's keeping its wings up?
3 for 3. 3 for 3. Anything else need to be managed?
All right, we're not filled yet in UUUU, but you could leave that, let that work. So far, we were, out of our Palantir, adjusted our HIMS, and working UUUU puts.
93 cents. And filled.
Okay.
Whoa! I put in for 93. We were filled 97.
Price improved.
Yeah, but when I tried to sell it for 97, they wouldn't take me.
They're like, we got to fill this lady's order. I don't want to listen to her talk about it on air anymore.
So done with it. Okay, let's pop into. We have an options drive coming up, which is great. Shameless self-promotion. Jenny and I are leaving on a jet plane, on an aeroplane tomorrow, if you will.
Yeah.
To Austin, and the cat is out of the bag because we were supposed to be surprising Tom and Tony.
It was supposed to be a surprise for Tom's last road show, but they know someone spilled the beans.
Yeah, we know who it was.
Yeah, someone spilled the beans, but we'll be there. We'll be at the Austin show.
And now I think they're making us work.
And
Tony Batista asked this morning, he's like, what do you guys want to do? I was like, what do you mean what are we going to do? I'm going to be wearing sunglasses and sitting in the audience next to
we were going to sit next to Blue Wackadoo. Now we'll be making an appearance on stage.
Yeah,
I might have
what the heck?
I might have to adjust my outfit. I don't know. I didn't know we were going to be on stage, but we are.
I didn't either, but apparently, yeah. So we are going to be on stage, which is kind of fun. So this is shameless self-promotion. If you are in the Austin area, come on in. We'll have you at work by 11. What I love about this, what I love, is shows when the market is open.
Oh, yeah, for sure. Market's open. So normally, Liz makes fun of me because when we go on a weekend show, I don't bring my laptop. I don't see
I was like, you got to bring it with you on this one.
Hey, I'm bringing it this time, Liz. Market's open. I'll have my laptop. On the weekend shows, I don't bring it.
Yeah, I know. I know you don't.
And it's so funny because when I travel with Liz,
the entire trip home from Germany, I was in my platform even when we weren't open.
No, usually when I fly, I'll download movies to my iPad, and my husband asked me, what movies are you downloading to your iPad? And I said,
nothing. I'm flying with Liz.
I'm flying with Liz. Nothing.
You think she's going to let me watch a movie?
There's no movie watching. Yeah.
That's pretty funny.
So we'll be there. Come see us. I can't wait. It's going to be a lot of fun. And it's going to be nice and warm, 85 degrees.
Yeah. My day just got a lot better when we looked at the weather.
Oh, yeah.
Okay. Now we're going to pop into Twitter if we can.
Okay.
Okay. So I'm going to go top down as well. I do want to find out. We want to look at today's earnings. So this is what Tasty puts out, which is great. Those are all the ones on top have already happened. This is before market. So after market, we've got AMD, Clove, Rivian, and MTCH. And I'm going to bet there's a lot of them that are tomorrow morning before.
I know. We'll have to find out what's coming out tomorrow morning because that's what we'll trade. But you've got last call today. You could trade them on last call.
I do. Jenny's ditching me for last call for a good reason. You better give your mom a hug.
I'm helping out my mom and dad. Again, my mom's still recovering from a lung surgery. She's doing very well.
And your mom's super cute because she's been texting me.
She has?
Oh, yeah.
I swear, like, everyone's texting with her.
I love her. She's so fun.
My son's girlfriend is texting her.
Yes.
Everybody. I don't get a text. Liz hangs up on me, and you're texting my mom?
I'm very nice to your mother when I talk to her.
She is. They're all coming out of the woodwork. She's got a ton of people. She can't even keep up with her texts.
Yeah, I know. And that's what I said. I was like, you don't. And even I said that. I was like, you don't have to text me back. Just let you know I'm thinking about you.
All right. Well, Liz will be doing last call with Tony Batista.
True story.
And that's gonna be fun.
Gotta rein that guy in. Oh, do we have to Tim Knight on? No, tomorrow we have Tim Knight on. Okay.
Tomorrow. We'll be doing it and then getting on a plane.
Yeah, then we're taking a night flight.
And people love Tim Knight coming on. If you and we have to send them.
Symbols,
If anyone wants to send us symbols to give to Tim Knight, send them today. Jenny Jenny at tastylive.com or liz@tastylive.com. Send us symbols you'd like Tim Knight to look at, but you have to get them to us today because we'll be sending them to him this afternoon.
He likes a handful. There's no promises. Sometimes he's going to open something up and be like, "There's nothing. There's no." What does he call himself? A chartist, not a technical analyst. I'm going to confirm this on tomorrow's show.
Okay.
He calls himself a chartist, not a technical analysis.
Whatever he is,
Analyst.
we love him. He's amazing.
Is it analyst or analyst?
Analyst, technical, and I don't know. A technician. You're either like I would think he's a technician. Yeah, just take that off. A technician. Whatever he is, he's great. And I like that you said no promises because someone might say like, oh, I sent him this symbol and he never pulled it up. Well, maybe he didn't see anything. Then maybe there's nothing jumping out.
He probably looks at it and he's like, okay, this does nothing. I'm not going to come on there and be like, no idea. He's bringing up things that actually he can see something in.
Now, Rivian has earnings today, and that was something we looked at with him last week.
Yes, and he liked Rivian.
And he liked it.
He likes the car. I like the car too.
Where was I? And I saw so many. I was just somewhere. Where did I recently go?
You saw a bunch of Rivians?
I don't know. But wherever I was, I saw Rivians everywhere. All right. You want to take a look
at Rivian?
And I also
let's pop back into Twitter so we can take a look at what Jack JT is doing. Yes, he's still long and many shares. Congratulations on your wealth. Primary cost basis is around 57.
Nice. And it's like 200 now, right?
I told Jenny to join me around 80 and said it was my 2025 darling. I don't know if she ever did.
Now, Jack, 224. So, Jack, I appreciate it, and I know you when you told me. I remember seeing you on the road, and you said your Micron is your darling, and I was selling puts in there. Great, but at some point, I tapped out.
At some point, the puts expired out of the money, and you forgot to reload.
Yeah, you just sometimes you forget about it.
Yeah.
And so if you don't want to forget about it, you have to keep rolling them up. I decided today I was changing and going to be more just a lot of these positions I have. I'm going to change to just weekly puts. And if it starts getting away from you, you have to keep rolling them up.
You got to keep rolling them up.
You got to keep rolling them up.
And then next one we've got here, Blue Wackadoo. We cannot wait to see you and meet you actually in person, Eric. I know everybody else has gotten to meet you. We have not yet. IB rank meandering at 17.7. I put on a single 5-lot iron condor at 16 delta, 105 points wide between the shorts with $25 wings. Collected $25.75 in premium. That's great.
That is great. I know. I'm sure premium was great today. We were a little bit.
No, I wanted to do it here, but then we had a snafu where I wasn't in my account because we had to.
I at 9:05 I was watching. At 9:05 I was watching, and I was tempted to put it in, but then on the heels of, I think it was something that Eric posted with days, and you showed it yesterday, and I don't know if we could go back to it.
You know what? We're going to take it to the tape with him on.
Yeah, it's like days of the week with more success than.
So when we're flanking him at the show.
So, and I think Tuesday was a day of more losses. That Mondays were good, Wednesdays were good.
Tuesdays and Thursdays were.
Yeah.
Tuesdays were worse than Thursdays, but Thursdays didn't look as good.
So today I thought, I didn't do it, and with the market down so much, I didn't do the SPX trade today.
Yeah, I couldn't because I wasn't in my platform. And
she closed. It was our train cuts in at like 9:10, and
I closed it at 5:02 because I said I'm going to do it when I sit here. But then we had to get into our platform, and I didn't put it into our.
And then
account.
She was really rushing me. I kept my platform open. I was trying to get that trade.
And I said, get your butt in the
she's like,
SIBO.
close your trade and line up to get off the train
get
car.
Get in line. Is what
she did. Hurry up.
Okay, but now we're back, and the platform spoos seem to be keeping their wings down. But it doesn't matter because here's what I was going to say. At 9:05, I think we would have been fine because when we walked in, we were up. We were only down 35. So at some point, if you put in that put spread, you would have been out.
We've had the market's been moving around.
Yeah, but you would have been
too
out.
late now. I'm not doing it now.
No, we're not doing it now.
Yeah, it's too late now. I wouldn't do it.
Okay, so you want to take a look at Rivian, and I do want to see what earnings.
Well, they do have earnings today. That's something we might have because it was something that Tim Knight he brought in Rivian, Tesla, Lucid, and said of those three, if he had to pick one, it would be Rivian.
Okay, here's our only R, and it's going to make me so happy. RSX.
Oh my God,
still there.
How many years? How many years are we going to have? The only way
I figured that would trigger you.
One day, if they're like, you know what, we're bringing back the Russian ETF, we're bringing back RSX, and then suddenly money appears, then I'll say it was worth looking at it for 15 years.
I can't believe it's still sitting. There's nothing we can do. We've tried for years to get rid of this. But
I'm
just showing you the only R we have is RSX. So let's go to Rivian.
We'll be like 90 years old and in the retirement home. So one day, RSX will just, a number will appear.
I feel like a Russian ETF might eventually come back.
I don't know. I don't know what would happen. What would happen if they bring it back?
I think
would everyone who had it? What does it say we have?
It says we have nothing. Here, look.
Does it say we have any shares?
No.
Yeah, 100 shares. We have 100 shares. Maybe it'll come back one day.
It's worthless.
But maybe could it ever come back?
You're asking questions that I cannot answer.
I don't know.
I've never lived through a Russian ETF that gets taken away.
That gets taken away, shut down.
Yeah. Lived through a lot on this trading floor, but never a Russian ETF that was taken away and then given back. Okay. So let's take a look at Rivian, and then we're going to get into Kai's study, okay? Because I'll do earnings later, too.
Okay.
Okay. Rivian, it's a $12.69 stock. It's got a 39.4 rank. Let's see where it's been. So this has been, I'd say range bound. I know that sounds crazy when I look at this, but within a range.
Yeah.
Say between
10 and 17?
Yeah, between 10 and 16.
Honestly, let's see what kind of premium there is. Dollar expected moves, we'll get it. I think you almost have to go a little further.
I think you got to go to 17, Dave.
Yeah, 73 cents for the 12.5.
What about we play a premium selling strategy? What if I did... Here, Jenny, how do you feel about this? So I sold the 12.5 put, the 13 call, and I bought the 14. We're collecting 106. It's a premium selling strategy for earnings. Gaps up, fine, whatever. You're not in it.
I guess so.
Or we can eliminate the call spread and just get 73 cents for the put.
Yeah, I would just sell the put.
Here's what I want to watch. Everybody's eyes. Can you see my mouse? You can. Look at the buying power effect when I delete this. This is what chaps my high.
Oh, this is what gets her so mad. That call spread using an extra. It really didn't use too much.
It didn't use too much, but it did.
Well,
488. Yeah, we're just selling this for 73 cents.
Okay, so would you, if it goes up on earnings, how much? I'm just curious. How much is D's? How much is the D's put? Because if it goes up on earnings, I'd rather have more.
You're getting 25 cents. 25 cents more.
Yeah. Just sell the Nove.
Just because it's earnings.
And then if we're in it, we're in it.
Roll it or do something.
Like if we ended up in it, I don't know. If I have the stock, around stock, are you going to sell Strangle? Around stock, maybe I'd sell the 12, 15. Probably.
I think I'm out too. I think I did the same thing here where I was selling put.
I can see what I have. Let me take a look at what I have in Rivian. But would you sell Strangles around all your stock, or would you just sell puts?
I just sell puts when it's this cheap.
When it's this cheap?
When it's this cheap, I'm not selling. That's the reason why we just sold puts. When it's this cheap of a stock, I'm not selling. I'm not selling calls against it.
No, honestly, I just have March. I have in the money March calls.
That doesn't sound good.
No, I think I just bought those in the money March calls instead of buying the stock.
March.
Yeah, I don't know why. That's what I have. I didn't know what I had. I looked. I've got in the money March calls.
Well, you're not gonna believe this. I've got in the money March calls.
You're not gonna believe this. I gotta give Rivian.
I never would have guessed that. I actually thought in my head, I was like, it's November, right? Like it's November.
Sometimes I'll say, I'm giving this stock till this time, and if they don't perform, they're gone.
Yeah.
That's why I picked the March.
I like it.
It only has till March to start shaping up.
All right, take a look at this handsome devil. Here's our Polish warrior. Happy Tuesday, ladies. Had a standing order to buy short VXM if we hit 20 overnight, and decided to take a quick $50 this AM. Good job.
Oh, nice.
You ladies need to get in this low-cost train to play spikes and vol.
Hey,
you know what?
Mikey, I see what you're doing. I like it, but I don't like the idea of short VIX. I know it's the mini, the VXM is the mini, but you just never know what could happen. And honestly, my portfolio is so long delta. The last thing I'm going to do is sell VIX, because everything else
will be winning if the VIX goes down.
Yeah, like if I don't want to be losing on that VXM and losing on everything else too.
But I do sort of like, I kind of like your style here, Mikey, when you think about it. If you don't have I'm just going to extrapolate. Yeah. I mean, I'm not saying I do this, so don't think that, like, do as I say, not as I do. But if you're just trading SPX and you're hedging it with, like, you're just trading SPX, or your risk is gone overnight, and you're just using, like, that little bit of VIX, that's fine. Do you know what I mean? Because he's got an SPX where he took a quick $50 this morning. But to your point, our portfolios are so big.
I've got a lot of long delta. So if I'm doing something, I want something that's going to maybe win if the rest of my portfolio is losing, because my portfolio is a lot of long delta.
But if you're just doing the SPX, that's fine. Then you can
sure.
I like it.
And we have viewers who are short delta. So if you're short delta and you want to sell the VIX on a pop, sure, great.
Wonderful.
Yeah,
love it.
Yeah,
do
it. We have, every time it was just your birthday, and we have the bevy machine here. I love the bevy machine, and I thought of, I know we all like getting you the bevy machine for your birthday. Instead, I got her a backpack.
You were going to give me a $4,000 bevy machine.
Instead, you're getting the $100 backpack.
If you were ever going to give me $4,000, I would prefer you put it into my trading account and buy me a stock.
Okay. All right. I'll remember that next year.
Yeah. When you win the lottery and my gifts are that much bigger.
Next year. So anyway, today for the first time normally she gets like spa cucumber water. Today she got hot cucumber water.
Yeah, because we were in the front of the train and I think the door was open. True story.
All right. So
wait, don't you notice? Now we're on the Y chart and I like it. Don't you notice there's like a comb over the floor right now, which we haven't seen in a while since we've gotten here.
So it's very low. 10:25. There's a little bit of a lull. As far as big orders going up, June 7,000 puts, Nove 6,900 puts, Nove 6,825 puts.
Wait,
and
what
the
Nove?
customers buying them. So all these
Does
puts.
it say which Nove?
Nove 4.
That's today.
No, Nove. Let me see. There's a lot of puts. A lot of puts going up there.
Here,
Nove 28, 6,900 puts. And then Nove 7th, 6,825 puts. Customers are buying them. The crowd is selling them.
Here, take a look at this. Let's pop into the platform if we can, Matthew, because watch this. So here, I've got the volume up and the open interest up. These 6,800, 24,500 traded today. That's not what you're seeing.
And Nove 28. Go to Nove 28. Those are a lot of Nove 28.
November
is that
28?
just?
Oh, that's the end of month.
Oh.
Dun, dun, dun.
And go to volume, because that's.
So you can see there's not a lot of volume in Nove 28. I don't know where you're seeing that.
Well, it just popped up. Maybe it didn't even go in
it.
Nove 6,900 puts. Look at those.
6,900 puts.
It's not even registered yet. Wait, you're not at 6,900. You're not at 6,900. Down, lower.
Right here. 524. Come on. You can get bigger than that,
I just saw a post. I just saw it go up on the board. Anyway, 67, April 60. All I know is there's a lot of puts trading down here.
So, and this is the first time ever. And Frank, text us. I'm pretty sure the puts led the calls.
Oh yeah. Usually we see like calls leading puts.
Yeah.
Not
I'm pretty
today.
sure yesterday was puts leading. Yesterday was puts leading calls. And take a look at this. So we're in the platform, and you can take a look at the volume. This is what's happening today. That's why these zero DTEs are so popular, because this is today's volume.
I know, crazy.
Open interest versus volume is like an insane thing. Your open interest is only in single-digit thousands, and the volume is in the double-digit thousands, which is bonkers to me.
If you go in Twitter, and I love this, Mikey. It says, I sense much fear in you. I'm not afraid. I'm not afraid. Well, I am. I don't like shorting the VIX naked, but.
You know what I want to say to her? Fear does not exist in this dojo, does it?
That's from Karate Kid.
No, but what do you say after that?
Yes, dojo master?
No sensei.
No
fear does not exist in this dojo, does it?
No sensei.
Pain does not exist in this dojo, does it?
I wasn't allowed to watch that movie as a child because it was too violent.
Well, you need to learn this if you're working with me. I bet if I yelled that back there, people would respond.
You think so?
I'm not going to do it, but I would bet.
They might.
I would bet.
They probably would.
I would bet.
Probably would.
Yeah, if I have somebody that walks by that I know, I'm going to ask if they know that can finish the line.
Should we get into Kai's study? Yeah.
Forgot about it.
Yeah, I was thinking that maybe we forgot about it.
Okay.
So Kai put together this research corner looking at last week compared to the previous weeks and what we've got coming this week. So I like these. I like taking a look at these.
And I like looking at them on a Tuesday, too, just because we can go back and look at the SPX moves. Okay. All right. Research corner. Today.
Fire it up. Fed cuts rates by 0.25%. December cut odds fell to 69% from 90%. And that's not too big of a move. I have been, today I sold more put spreads in bonds with the market down, thinking maybe the bonds would pop a little bit, but do we have some short put spreads in bonds? We did last week.
Let's take it to the tape, Jenny Andrews. We have short put spreads in bonds. We have the 17-16, and we're getting a pop today.
Yeah, so the probability of them cutting rates in December fell, but not by too much.
No, not by too much, But that'll move. So that will move with the market as well.
Okay.
And then there's a trade deal that lifts markets. All 9 major global indices rallied this week. That was last week.
And Nvidia hit $5 trillion market cap with Microsoft and Apple close behind. So, but then we've had some down days since then.
Yeah, this is all last week stuff. The government shutdown has now entered its 6th week with a low probability of resolution in the coming days.
I wonder if when it's over, and we've seen this from previous research pieces, when it's been a shutdown for so long, when it ends, there tends to be a big move, not necessarily just up or down, but a big move.
Yeah, it does.
Like I think it was like 3% move one way or the other. It looked like bigger moves after a long shutdown.
And I wish we had that piece where it said, because this is now, as of today, I believe, the longest running shutdown.
Yeah.
And I wonder what happened after the second longest running shutdown. We had that information at one point in our back pocket.
I know we had it on I want to say it was a 3% move.
Was it up or down?
I think
it was up.
I think it was up. I think 3% up.
Somebody will correct us. Okay.
All right.
So then here we go. So the week of, this is last week.
And the week before. 10-20, and these are 2 weeks ago. We're in November now.
So the Russell was a lagger last week.
Yeah. Mm-hmm.
Which was surprising.
Been a good one.
Which is the small caps. But aren't the small caps the most interest rate dependent?
Yeah, right. So maybe with them thinking they wouldn't cut in December, some of those small caps were down.
Yeah, that's a possibility.
Okay. And then as far as SPX, the expected move, you saw this week plus or minus 96. Now today,
let's go. This is my favorite part. This is my favorite part of Tuesdays.
Today we moved almost 70 this morning.
But plus or minus, but you could come reversing back.
Well, I am just
hold on. So then for 7 days, that'll bring us to November 7th, and now it's only 76.
So the same, isn't it the same? What did it say? Oh, 96. Yeah. So I mean, we had a big move today, and I think yesterday's VIX was kind of predicting it.
Yes, VIX. Wile E. Coyote is always right. But I do like this. I actually like looking at it on a Tuesday to see what the move is versus the other one.
And honestly, it was the same. Look, both weeks, 10.27, a plus or minus 96, both weeks the same.
Here, but take a look at this. This is what I find odd. So plus or minus 96, you get a 1.4% expected move. The VIX is up. The VIX was up, and it's still the same expected move.
That makes no sense to me.
I know. That's what I said. My line's going to that.
I don't
those
know.
Numbers should be identical.
If the expected move is the same, the VIX should be, although as the SPX, as the price of SPX, they're using SPX, changes, the expected move would change. You have to think of it as a percentage. They should show it as a
move as a percentage.
Oh, as a percentage. It's still
right
the 1.4%.
It says it right there.
Yeah, then you would think VIX would be the same. Why is it different? If the expected move percentage is the same, the VIX should be the same.
Yeah. So we'll see how this week shakes out. Okay. Now this is IVR, one of the major assets.
And were you surprised it was down last week in euro, gold, and crude oil? That makes sense. Yeah, that makes sense.
And gold, take a look. Let's review the tape and give gold mad respect on its IVR moves. Up 94%, down 56%, down 48%.
Crazy.
Those are big IVR moves.
Big moves, and
Bitcoin's the same way.
Bitcoin is acting like gold, where when Bitcoin's falling and the IVR is falling. Bitcoin's been down and the IVR is down.
Well, yeah, I do think. Well, they Don't they call it digital gold?
I guess. You said your foil hat guy was panicking about his XRP.
Yeah, foil hat guy was. I didn't talk to him. I have to remove myself. But there's one person in between, my brother, who says he's
panicking because he put all of his everything, all of his assets into XRP.
Yep.
Okay.
So I do like looking at this. You know what we don't have in right now? Look at the IVR on natural gas is up 52%. Let's take a look at that.
But natural gas is tough because it's in the 4 handle. When natural gas is in 4 handle, it's harder to pull the trigger on selling options.
But it's acting like gold. So look at this. Natural gas is up and IVR is up.
I know because, well, it makes sense. If natural gas is 3 and we're selling 2 puts, nobody's really that afraid. But when natural gas is 4 and we're selling 3.5 puts, people are a little more afraid.
Yeah.
So I get it. I get it.
I'm still more afraid of the 5 calls than I would be.
I know. So now we have no positions in natural gas because it's hard to play it at this level.
Do you smell the ammonia again?
Yeah. Like every once in a while, someone walks by with a jar of vinegar.
Is there a pickle in your pocket?
Have you ever made pickles?
No.
Yeah, I have.
Of course you have.
It's not hard. Throw a bunch of cucumbers in a jar with vinegar and salt or apple cider. I don't know. Whatever. Throw it all in there. Let it sit for a week.
Bada bing, bada boom.
You got a bunch of pickles.
Never done that. Okay, number 6. So market cap, Mag 7 market caps.
And this is before, because were we down, was yesterday a down day too? Not really.
No, we ended up.
Yeah.
We ended up, if you take a look at that, we ended up.
Okay, you're right. And I'm thinking like, with this down move today, but if it's not that crazy of a down move. We're down not even 1%.
No. I mean, this morning, were you scared when you saw it down 70? Were you scared?
Well, let me see if I can find your text. Let's see what your text said. Because let me see. It might be entertaining.
I think I sent you a dress.
Have you seen the market?
Yeah.
And I won't read the profanities that follow.
She's lying. So my account has lots of stock in it, and I have options protecting it. So when the market opens without my options,
all the stock is moving, but that.
But right. I know what's happening. I can see what's happening.
And crypto doesn't look good, and crypto has not looked good. So that's another one that hits.
So Bitcoin's down 103. So this is down another 3%. Ethereum was down 9% yesterday. Let me see.
But it was only like 3,500, which isn't terrible for Ethereum.
Yeah, they said it was down 9% yesterday.
Yeah, I don't know. They both the cryptos look ugly. They look ugly.
But they should move because they have a greater implied volatility. They have such a greater implied volatility then. Here, take a look at this.
And so, do you think people are getting nervous? Do you think these down moves in crypto are making people who are newer investors in crypto getting nervous and saying, "Forget it, I don't want to be in this"?
No, but what I don't understand is when that one day we had Dion on, where he's like, some people got liquidated. I don't understand how they can buy it with so much leverage that all of a sudden when it gaps down, you're just out of all of your money. That I don't understand.
I don't know, because I think when we buy crypto, aren't we using like 100% cash secured?
I'm using 100% cash secured. So,
yeah.
So I can't be out of money unless it goes to 0.
Well, even then, like, I'll still have they'll be like, I've had plenty of stocks that went to 0. You have it for until it gets delisted.
Until it becomes RSX, RIP,
yeah,
RSX.
Where'd my Walter energy go? Remember Walter?
Yeah, until it becomes delisted. But that's what I'm saying. So we're here and we use 100%. And I'm actually only talking about what I can buy here. Because Tasty's my MO. So here, this is 100% cash secured.
No, but you know what's really interesting? And so Tony and what?
It's okay.
Tony and let's go to the platform. Let's take a look. So Liz has got the zero hash pulled up, and
this is zero hash. This is where we buy our crypto, and I'm just going to show this.
And if you buy, let's say you buy, because with this account is like linked to too many accounts, and you can only have one account trading crypto. So let's say I buy one Ethereum. Well, it would take $3,470. So
yes, or you can buy $200 worth of Ethereum.
Yeah,
you can pick. I mean, it can be any denomination. I just picked $200.
But you're not buying it on margin. You're not buying buying on a margin. But the discussion Tony and Nick were having, they were talking about how the FDIC insured. If you put your money in an account and you're trading things and that account is FDIC insured.
Oh, Vanetta was asking that this morning.
Yeah, but not, and Tony was saying if you want to, you can be in an account trading ETFs, trading crypto ETFs that
it is FDIC.
Then versus just going out and buying the Bitcoin or Ethereum. But it doesn't mean it's in.
No. Vanetta was going for like she thinks that her money's going to get hacked. The question was.
Yeah.
The question was she hears about all these Bitcoin hacks.
Well, and I constantly get. Do you get
the Coinbase?
Yes.
Yeah.
I get these emails all the time.
Coinbase, RIP. Because
I get emails all the time of like your information's been compromised. Your information's been compromised. For different accounts that I have, crypto accounts, I do get those emails. Now,
what did they do on earnings? Their earnings were here, I think. I don't know, but they're down a little bit.
Down a little bit. And so versus like if I'm just buying IBIT or ETHA or something like that, I don't get those emails saying my information's been.
So let's take a look at what we have in crypto right now. Okay, so we've got IBIT and ETHA. So today we're down a little bit in both. The IBIT we have a Jade Lizard-esque, and it's down. It's through our put. So we're gonna have to address that or maneuver it. But we left it for 3 days, only 4 days ago. So it's okay if we wind up rolling our short put out.
At the end of the week, we can. We can change it. Honestly,
we don't need to do it now.
Sometimes when we have a put that goes deep in the money, we'll change it to a zebra. We may take this Jade Lizard at the end of the week, change it to a Novartis zebra.
And guess what? We'll be doing that on the Thursday edition of the Liz and Jenny Show because we're off on Friday.
Oh yeah, we're off on Friday because we'll be in Austin.
Yeah.
Okay, you want to get back into the research piece?
We do. Okay, so there's our market cap in trillions. All your big dogs. Wait.
All right.
1, 2, 3, 4, 5, 6, 7. Yeah. I mean, it says Mag 7. I could have just looked at the title, but I wanted to make sure because there's a Mag 10 coming, right?
Yeah. Well, the Mag 10 ETF is coming
with PLTR.
Oh, is that one of the new 3?
Yeah. Okay, what is this? Global Performance Index, which, wow, this is new to this one.
Yeah, okay, so a year-to-date return. So this is interesting. And where are we? 17% year-to-date return.
Japan for the win. My husband's at the Japanese embassy right now.
He is?
Yeah.
What's he doing there?
No idea. I don't even know what he does for a living. I'm not going to lie to you. Like, I was like, what are you doing? He's like, I got to go to the Japanese embassy.
Oh.
He's like Chandler Bing to me. She's like, remember, they're like, what does he do for a living? He's a transponder. I have no idea what my husband does for a living.
But so that just made me think of Diplomat. I know Liz was deep into the new season of Diplomat, so now I'm 3 or 4 episodes in. It is good. I do like the Diplomat.
Do not download it for the plane or I will not let you watch it.
What do you mean you won't let me watch it? No, I'm not going to download anything for the plane.
Oh, you can do it for the way home.
Oh, because I'm alone on the way home. Yep. She's leaving me. She's ditching me. She's going right from Austin straight to Florida. I need to lay on the beach.
I need a little magic in my life because I'm ready to kill 2 teenagers. Okay, but Japan is up the most. Hong Kong the next. Canada, 22%.
Canada? Oh, yeah. You know what? I wasn't even looking at the middle column of country. I just thought you were looking at Nikkei Hang Seng. That I was like, how does Liz know that the TSX is Canada?
SMRT, Jenny. SMRT.
Oh, man. S&P 500, 17%. And hey, what's our goal as traders?
I'm glad Kai put this on there.
What's our goal as traders? Always beat the
You better beat it by a lot.
The S&P.
Well, if you're risking as much as we risk, you should be beating it by a lot.
Yeah, I'm just saying that's always the goal. Make sure, always be beating the S&P.
Beating it with a stick. Yes.
You better be beating it by a lot.
I mean, that's the goal. If you're taking that much risk, you should be. And now here's the S&P 500 movers this week. This was last week, but yes. So you can see these are earnings. All these are earnings.
Big movers. And to the downside, CMG, eBay, Meta, Royal Caribbean. Did you know that?
I did. Because did you see how big it is? Hold on, watch this.
Yeah, it's like 300.
I almost fell off my chair when I saw this.
260
It was 300. It was 365. Now it's coming back into the stratosphere of like a normal stock. I think Royal Caribbean's should be around 200. And that's generous.
Yeah, that's generous. Yeah.
What do I know, though?
And you said you're going on another cruise over the holidays.
I am.
Another Royal Caribbean?
Yep, and I will be getting my $100.
Are you going to, for owning the stock if she owns
shoot, I got to do that for the next cycle.
You got to buy stock. You got to get it.
No, I sell put.
No, but you have to own stock. She has to own, you have to own stock in your account, take a picture of that, and to get the cruise credit.
I need the December cycle, so I'm okay until I can do it through November.
Okay.
Yes.
All right. You sure?
January.
Even though you're getting on the cruise January 1st.
It's okay. It's got to be in the December cycle.
When will you get your room credit?
You get it. It doesn't like they don't want it. They want it 7 days before you get on the cruise.
Okay.
Yeah.
Okay. So.
And in ironic current events, I can't believe I know this, but that's the greatest covered call position I've ever owned. When it was cheaper. Now I don't know
it
that
was
I
cheaper.
wanna sell
Now it's risky. Like I don't know if that $100 is worth it.
I don't think it's worth it
Buying
either.
a Royal Caribbean at $270 to get $100 room credit. I'm not sure.
I don't know that that's worth it either. I loved it at 77.
Yeah, I think. Too bad Disney doesn't give me a room credit. Are you like double platinum now on Royal Caribbean?
I don't know if it's double, but I'm single platinum. I don't know if I'm double, but I'm single.
Now, we have Trade Small, Trade Often John from the Villages. You guys know him. You've seen him, a.k.a. the alligator hunter. You've seen him with pictures wrestling alligators. You've seen him with giant snakes. He is the expert premier cruiser who's gone on like 128 round-the-world cruises.
Do you remember Omar that worked with us with Disney Cruises?
Oh, he was on a lot.
Yeah.
He was on a lot. Yeah. Okay.
So
All right.
here, this is WTC. I want you to let's pop in the thing, Matthew. So this is this week's S&P movers, but then we got second page movers in October. So Kai's stepping it up. I love this.
Yeah.
So this is October, and this has nothing to do with crypto, but it was supposed to be October. But look at this: AMD up 51%, JET 22% in October with his MU.
Nice. Caterpillar up 18%.
My dad would have loved that. My dad loved Caterpillar.
So what I want to do, I just like to find what's down and sell puts. We don't have Nike puts anymore. Let's sell some Nike puts. I don't know if we sold CMG puts.
I don't think we did.
Let's take a look. We have been in and out of Nike.
CMG can't get out of its own way. There's a 32 right Let me go to the table page. So you can go to December. Oh, look at this. You're not getting much.
Oh, no. Forget it. Ooh. Okay. Let's look at Nike.
So Nike puts, you're going to go through earnings. I want to stay before earnings.
Yeah, do the 38-day. And you could just get $1 on the 58s or even the 57s.
Look at how wide those markets are.
Well, because you're in a weekly. That's the cost.
Yeah. Hold on. Maybe I'll just go to the 17-day. I don't think it was 60 for $1.
Let's see the chart. Because I thought, okay, yeah. I think it was that last earnings when Nike had that pop up.
Right over here?
No, back to like July. Right? July, August, September? I don't know. I don't remember what that pop was.
That's got to be earnings. It's June 26th.
I think so. And now it's right back down to where it was before that. So let's get back in with some puts, sure.
So I just went with the 17-day. I'm actually going to split the difference. I'm going to go with the 59-day.
Yeah, or do a Jade Lizard.
Ooh. Now you're talking my language. Okay, hold on.
Because this isn't
97 cents. That's great.
Sure. Yeah, ship it.
Okay, so that's pushed.
So that's why I like Kai's list. What's down? Where can I sell puts?
And we're filled. And it is nice to see what's down in October, which is great. Meta's down 11%, but that's climbing back. Okay, now I'm going to go to the next slide. 10 of 10. So this is earnings.
Look, this looks busy.
This was earnings in review. These were last week, and you can see that's where he's giving you those down moves. So these are in review, and then he's going to give us, of the review of last week, 50-50. So the week of 10-20 was 52-48, which is your positive drift. I mean, I'm not saying that that's a positive drift, but that's the numbers for a positive drift. And then here we've got a 50-50
last week.
1,250 companies last week?
It was a lot. It was a lot.
Yeah.
Yeah, it was a lot.
So this week is supposed to be more.
Well, look at that. Look at the chart. Look at his list that
this
we've got.
This was last week.
Oh, this was last week.
This was, and then here's this upcoming week.
Okay.
So, now this is a chart I can sink my teeth into.
So today is Tuesday. After the close, we have AMD, Super Microcomputers, Beyond Meat, Upstart, and
Pinterest, your favorite.
And the Novo Nordisk, Humana, McDonald's, Unity, and Camco. That's tomorrow morning.
Novo Nordisk, something happened with them yesterday with HIMSS. That's what I'm saying. They had some crazy, something was announced, and I don't know what it is. Jenny loves McDonald's. It's her favorite stock to trade. So that's just
she's kidding. Usually, if I'm trying to add short delta, I usually add it in McDonald's or American Express. I don't know why. Not anymore.
But so you look at these columns, the after the market closed and before the market opened, and Tony Batista and I will be looking at these. Now, I know he doesn't trade earnings, but we do.
He does.
No, he says he doesn't. He trades after earnings trades.
No, now that he's like...
When Nick trades the earnings. He says, I don't... He even said that. He's like, I typically don't trade earnings, and even Vanetta said that, but he trades after earnings.
I don't know, because this morning when they were looking at things that happened, like Palantir, he had an upside ratio spread. So he's... Now that he, with Tom gone and Tony and Nick taking over, it looks like Tony's been slinging some earnings trades.
Okay, now, this has nothing to do with anything, but I do thoroughly like the Datadog icon. I think it's the cutest thing I've ever seen.
It is cute.
That's my favorite icon. I totally feel like Tom, because remember he used to be like, he used to love the
company symbols.
The company logos.
The logos. It is cute. It is cute. Kind of looks like Will Ferrell.
It does look like Will Ferrell.
Yeah, it does. And then App Lovin' is Wednesday afternoon. Wonder what that's going to do. And Snap. Snap was one of those, my son called me like a month ago and said, can you buy some Snap? I think there he read something
where
about.
Where is Snap? I don't see it.
Snap is Wednesday at the end of the day.
Oh, it's underneath, yeah. You know what you can't see on here? And it's really hard for my eyes. You can't see the Robinhood logo. That's Wednesday after the market, too. It's green. It's almost like it's hidden.
Oh, yeah. It blends right in.
Yeah.
Blends right in.
So Wednesday after the close is a lot.
Now, Upstart, I don't know. Upstart has been pretty ugly lately. Upstart has fallen. It's been cut in half. It's gone from 90 to 45 since July.
So on July 31st was its highest,
and now it's been cut in half.
And you've seen the market or a lot of the other tech stocks doing the exact opposite of that, right? So you've seen them all go straight up. With this, this is a little bit of a breather pullback. Take a look at that's what I was going to say. I mean, we were talking about it being $1 trillion company, but take a look at that. Since June, this has gone straight up. This is a nothing pullback for Nvidia.
No, it's kind of weird. I wonder what Tim Knight would say about that chart. Doesn't it look odd? All those little red bars clustered together.
Yeah, it does look weird.
Let's ask him about that tomorrow.
Put that on the list. We'll email him.
Nvidia.
And then take a look at PLTR. So this is one that's gone straight up too. They had earnings. They gapped all the way down. They're fighting their way back.
Yeah, I mean,
they're fighting their way back.
It's down $15, but that's a nice.
That's nothing.
How low did it get today?
So here, the low was 185.
Okay.
Now, I know where the expected move was, and I want to say the expected move for the cycle was like 186, because I have a ratio spread.
Yeah.
So
we had a viewer who wanted the 180 put calendar, remember?
Yeah.
And that would have been that. Right. And I don't know what would have come out in or out of it today, because that weekly that you would have sold probably still has a lot of premium in it. But as far as direction goes, it went right there.
They got it. They picked it.
Yeah.
To it, not through it. So that's pretty good. Okay, I'm going to pop back into Twitter and go top down, make sure we got to everybody. I know Ajit's trying to send us something, and I don't know why it doesn't go through.
I don't know.
Okay, Florida 7 says, I think your Coinbase emails are hacks. I get the same emails, and I don't have an account with them. I'm just saying.
Oh, yeah, you're probably right, Florida 7. It seems like hacks. It goes into my junk mail, but they come constantly.
Yeah, they do.
Yeah.
No, they've actually, my Coinbase, I remember I was driving home from University of Kentucky one time, right after we dropped JD off, and I was going, remember we were meeting our friends in Indianapolis? They called me.
They did?
And I answered the phone.
And was it really them?
Yes.
And what did they say?
They said, your account has been hacked. And I didn't know it was them, and I was like, I'll call you back. Give me your phone number. So then.
And it was them?
Yeah. They called me.
So, Jan Brady, what does Mikey have to say? I'm not scared.
Not scared. Sure, Jan. Come on, but be a person of the people. Put on a standing order to short VXM if we hit 21. Pin it. Put it in
for the day. No, Mike, you can't make me do
it. It's fun to do bad
Peer
things.
pressure. That's called peer pressure, Mikey.
We're not gonna take it. We can't do it in this account. I mean, our risk manager will call us so fast.
Okay, so those Kermits, that is one of my favorite movies. One of my favorite movies is the Muppets with Bad Guy.
It's the one with Marshall from How I Met Your Mother, isn't it?
Yeah, I think so. And it has it's got a good cast. But I watch that movie all the time. It's so funny.
Download that for the plane.
The one where they're...
I'll let you watch that.
Where they're like... They put on the play. Where the guys put on the play.
Yeah. Oh, yeah. I mean, I know you watch it all the time. I've only seen it once. I can't quote it.
All right, what do we have?
Well, we have to end the show, and I'm giving this a heads up to Matthew because we have to end a couple of minutes early. So I'm going to pop in and say this again. Jenny is not going to be on last call today. I am going to be on last call with Tony Batista.
So you've a lot of earnings to trade.
His account or my account?
I don't know. I don't know who will be running it. I'm going to guess you will run your account. So as far as, did we ever put anything in Rivian? No.
No, yeah, we did. Hold on. Let me show you.
No, we don't have anything in Rivian.
Yes, we do. It's filled.
Oh, yeah, there it is. I forgot where the R's fell in the alphabet.
So, I know, she gets confused sometimes. Let's talk about everything that we did today. So today, filled, and take off working orders.
And I will double check that it's all pushed out.
So PLTR we closed and we took our $100 back. Whatever, that was actually fine. A little bit of a win. HIMS we switched to just a short put. UU we sold a put. Rivian we sold a put. And Nike we have a Jade Lizard in. So not a bad day.
Not bad, no.
And you can see all the stuff that we've done because I'm checking Jenny's work right here. So taking a look at this, you go to Liz and Jenny, just us.
It's all there. It's all there. It's all there. Yeah, it's all there. Now
we do need to adjust this. We have a bigger account. Somebody was asking that yesterday in the chat.
Oh. At least they fixed it from short to neutral.
We don't know how to get the website changed.
Yeah, we don't know. We've been trying to get our photos changed on the website, and we can't get that done. And so here's my list of priorities. Get our pictures updated on the website, then get account size fixed.
Kind of agree with you. I'm not saying, I'm just saying. Okay, so we got to everybody on Twitter. We've pushed everything out. And Jenny, we are done for the day. We have to end 5 minutes early.
That's it. From now on, from now on, we thought our show went from 10 to 11, and we could go up until 11, sometimes 11:01. But apparently there's a show that starts at 11, so we're done now.
Option Trading Concepts Live. It's a great show. Tune in for it. I think today it's going to be Mike is back in the seat with Jamal.
It's going to be great. It's going to be great. Everybody have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you live from the SIBO tomorrow.
Bye, everybody.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, is not going to work out. That's the bad news. The good news is at tastytrade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Qué bueno, ay. Qué bueno, Ave María Morena, Ave María Morena, Ave María Morena, caballero iré morena, Ave María Morena, le digo rumba buena, Ave María Morena, morena pero que me muero, Ave María.
Back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a fantastic Tuesday. We've got here markets are red, which is a bit rare. Rare indeed. Yeah, exactly. That's how I feel. But this is what we should expect when you're testing all-time highs. It's been a pretty weak last couple of trading sessions, though. Still got a lot of earnings on the horizon. I'm looking at Palantir right now, down 8%, 7%. Kind of some big moves under the hood. Bitcoin down 5K. You've got some of these other futures products down over 1%. To the upside, Natty Gas, that was good for me today. I closed 2 separate positions in Natty Gas futures. Thomas is out today, but he will be happy to know that we got some winners on the books.
Well, I'm glad it's working for somebody. It's not working for me, but that's cool. I got the strangle on. I redeployed a strangle. I'm not doing anything. I'm not going to touch anything. My upside is 510. So, I mean, we're still cool, but not going to lie. The air is getting a little thin. And that gas has been on a little bit of a run.
Speaking of thin air, we had the San Diego show.
Nice.
This weekend.
Yeah.
It was glorious.
Yeah.
That air was not thin, but I had a Caesar salad. Learned that Caesar salad originated. Do you know where Caesar salad originated from?
San Diego.
Mexico.
Mexico, really? A Caesar salad originated from Mexico.
And
this sounds like some trivia that Tony from Mexico would say.
Exactly.
I know it.
He was out to dinner with us.
Yeah, great guy. I love that dude.
On the same note, we also learned that Mexico City has a higher elevation than Colorado.
That I knew. Yeah, I've never
That's
been,
insane.
but yeah, I've heard that about there. That's pretty sweet. Yeah.
Yeah.
I still never been to Mexico City. I got to go sometime. We got to go hang with Tony.
Yeah.
Kick it Tony style.
I've heard it's fun.
How about the San Diegans? San Diegans.
It was
San
great.
Diegans?
It was a great turnout. The venue was super sick. Loved it. Music Box Theater in San Diego. Basically brand new. They had a really cool setup with like an upper deck area and then a back patio, the bar up there too.
Nice.
So it would be a great concert venue.
Yeah.
I would definitely go see a show there.
How was the green room?
The green
People
room's
don't know,
good.
like, there's a thing, right? Like when we go to these venues, like we rate the green rooms for sure. I still have my favorite one was in LA, but how was this one?
This one was good. Yeah, it was nice. It was like a red lighting, which was interesting. But yeah, it was basically like a newer venue, so they had all the bells and whistles. There was this bookshelf that Nick was convinced was a secret door. So he was like knocking on it, trying to push it. And then all of a sudden we hear noise from the other side. I'm like, what is this guy doing? He's like behind the door and he was trying to open it. But it definitely is a secret door. We couldn't open it.
You guys didn't know the shelf to move or something.
Yeah.
Was there books in it?
Yeah.
Yeah, there's
probably
a special
something.
book.
Yeah.
We got some of the pictures here. It's pretty sweet.
Yep.
Yeah.
So yeah, great venue, great crowd, had a great turnout. Sunday night.
Cool and a little intimate. Yeah.
Love to see
looks.
it. But yeah, we watched the Dodgers win the World Series in California, so that was fun.
Yeah.
We were at a dive bar, and everybody was going nuts.
Were they? Well, they were rooting because
Yeah.
I mean they're same division with the Padres.
Yeah.
You kind of wonder, but okay.
Yeah.
So they're-
Well, when I opened the show, I was like, how many Dodgers fans out there? And they're like, yeah. And I'm like, how many San Diego Padres fans were converted to Dodgers fans over the last month? And it was like dead silent. Yeah, I bet.
Yeah.
But no, I played golf on Saturday with this younger couple, and they actually came to the show.
Oh, nice,
Yeah.
nice.
It's cool.
That's
Yeah.
awesome, dude.
Yeah.
Awesome. Of course.
It was Balboa Park. So it's like it's a muni course that's woven within downtown San Diego. So it was really cool.
Downtown. Wow, sweet.
Yeah. It was like literally 5 minutes from the hotel. So I was like, well, I have to do this.
Now wait, did you bring clubs? Like, did you bring a travel club?
Just
So what'd you
rented.
do? You rented. Okay.
Yeah.
All right. Yeah.
Yep.
I wondered because I have really like in the last 2 years I've just gotten into golf, and I have thought about that at times. I don't like I've gotten because of course the way we travel, it's so nice to like not to pack a whole lot and to be able to have overhead. Obviously, if you bring a travel club, that messes that up. So I wondered about that, but renting would be the way to go.
We met Andrew Cortado in the chat.
Oh, for real? Oh,
Yep,
nice.
he was
Nice.
there.
Yeah.
But yeah, San Diego's sick. Would recommend it. Little Italy was probably our favorite little neighborhood. That's where we were hanging out. So, but yeah, that was the last whiteboard tour show. We'll figure out what we're gonna do next year for sure. But yeah, I know. But yeah, we still got a couple more. We got Dr. Jim coming up in his home state of Florida, and there is, I believe, one more at Work by 11 as well.
Austin this weekend.
That's right.
Yeah.
So yeah, sign up for free,
last show.
tastylive.com/events. And yeah, we will gather, figure out what we want to do next year, and we'll let you all know.
Tom's last show. I feel like, I don't know. I mean, I don't know. I haven't heard them say this, but I feel like from what I can gather from what I've seen on Twitter, that Liz and Jenny are going to this show too. Okay. Yeah.
Ding, 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 ding. But yeah, it'll be glorious. But yeah, join us on the YouTube channel if you want. I've got the Money Match promo at the top of the chat. You can open an account if you don't have one, get a 1% cash match on any and all deposits within 30 days, and 30 days commission-free trading as well. So check that out. Click the link at the top of the YouTube chat. But yeah, have you traded anything today?
No, I have not. I got a lot of things that I need to get, as I hear Tony say a lot, and I feel like Nikki's adapted to. I have some things I need to get paid on, and I'm just kind of waiting. There's not really a trade that I love today. I'm glad it's not Thursday because I don't think I'd have one that I'd love to put out. I mean, seriously, it's not even just because we're down. I have some things I need to get paid on, really. And I'm not, I was looking at, which we'll get to later, I'm sure, earnings. I haven't seen anything that I'm super jazzed about there, neither. Palantir could end up being my last earnings play. I mean, I typically try to just play the big ones. And I feel like they're pretty much over until Nvidia. Well, sorry, AMD is tonight.
AMD could work.
It could, but I tell you, I peeped this. Well, I said it again. I talked about this last week. It's funny what we say out loud on the show that's really in our brains, but we don't necessarily always listen to ourselves even sometimes. I said it last week. I was like, I don't know if my calendar call strategy is going to work this cycle on the big names. And for the most part, it hasn't. I mean, and Palantir was another example last night. I even dipped into Spotify. So I don't know. I don't know if I'm going to do AMD, which means it'll probably work.
Yeah, I mean, it's tough. I think it's a tough sell when you're placing an upside trade and the market is weak in general. I think it's just harder for a big investment to go into a product to really see it rally. Yeah. Like we saw that with Amazon. Amazon was the only earnings trade that really did very well outside of like Google.
Yep, those are the only two.
But even Amazon was selling off from the highs. It did gap higher yesterday on a separate news event, but we are now lower from where that was. So it seems like we're getting the upside move, but we're closing lower. And that's happened 3 times in Amazon if we close red today. But yeah.
It's also been, some of it has been, I think Tesla was the only one that I can think of that kind of missed. I can't remember. But my point is being Palantir today, I mean, they had good earnings from what I understand. Just it didn't, and they even ripped in the after hours, right? Like I think it was up to like 225 or something.
Yeah.
But it faded.
Yeah.
So,
But yeah, in terms of other earnings, like Jamal mentioned, we got AMD after the close. Let's see what other high volume products we got.
SMCI.
Yep. Uber this morning down 6.6%. SMCI after the close. This thing, what a ride this thing's been on.
Yeah.
Hood tomorrow after the close. AMCR tomorrow after the close. But yeah, in terms of tradable stuff that we're focusing on.
Kava has earnings.
Ooh.
Watch out for that one. I mean, CMG got absolutely rocked. I guess if there was, personally, I would probably, I'm not playing it, but I'd probably play it to the downside. I mean, just saying.
Yeah, it feels like most things,
fast
especially on a day like today.
restaurants.
Yeah. Qualcomm tomorrow after the close.
Qualcomm.
We can check that one out. ANET, Disney, that's next week. But yeah,
McDonald's
for the most part,
NVO before the open, Humana before the open.
McDonald's probably a moonshot. Everyone's in debt, inflation.
I know, right?
McDonald's.
It's always a story.
But yeah, I think for me, I'll check out AMD. And if you have any trade ideas for AMD, throw them in the YouTube chat and we'll check them out. But yeah, I mean, this thing has gapped over the last couple of weeks. It's gone from 160 to 260. So it's hard to place a bullish trade here unless you're like really thinking they're going to crush earnings. I feel like in this kind of market where we're down 60, NASDAQ down 400, Bitcoin down 5K, like you really got to crush earnings to get a rally out of an announcement. I think if they have just mediocre earnings or if they miss, you could see this thing tumble.
Yeah.
Especially with the gap higher that we saw a couple weeks ago. So
for that reason, it might just be better to wait and just place the trade after, like Palantir right now. I mean, the calendar calls the upside calendar calls are actually cheaper. They're better.
Yeah.
And maybe that's the play.
Yeah. $250 price point. Pretty high implied volatility. So these options are expensive. Let's just look. Let's see. Like, what is a 240 put calendar trading for? Just like an inside down. Yeah, these are $1,000 calendars. If you're long December, short the weekly. Jamal's strategy where you're buying the 10-day, selling the 3-day. Let's see what this is. That's probably a cheaper route, obviously. But paying $7 for next Friday's 240 put, collecting $370 for this Friday's 240 put. So this is a much cheaper way to get exposure either to the upside or downside if you wanted to in AMD. Might be interesting to have a downside hedge on here. Even if they report earnings and it rallies, if it turns out to be like what we've seen with other companies where they sell off from the highs, at the very least, you're reducing cost basis on your long option by over 50%. So this feels like something I might want to put on here.
Feels like team spirit.
Yeah, yes, it does. Yes. And it's like right at the expected move. 17-point range. We're trading at 254, so that brings you pretty much to 240 if you get an inside down move. So, yeah. But yeah, let's field some questions in the YouTube chat and see if we are aligned with the peeps.
The people.
But yeah, real quick recap for trades I closed today. So I had the Natty Gas 20-day Iron Condor. So I had the 4.748 call spread and the 3.45 put spread. That I've had that on for a couple of weeks, but closed it today, $170 winner. And then I had the micro Natty Gas long contract, and that was a close for $160 winner. So just taking some risk off in these turbulent markets, and especially if you look at a chart of Natty Gas, I mean, this thing has been pretty volatile, and we finally got that rip higher that we were looking for with that long micro contract. So we shall see. But yeah, plenty of capital on the sidelines to place new trades if you got some ideas in the chat.
Oh, yeah, I forgot. I lie. I did do one trade. I closed CCJ. I had a short call in there, the 130 call. Again, it was a trade for a day like this. I would have loved for it to be down more, but I made $100. I mean, I sold it for $255, put it back for $155.
There you go.
Yeah.
Love to see it. And then Apple?
Yeah, Apple was just a post-earnings trade, I think, closed. I forgot I even had it on, honestly, because it was that small. Yeah, close that calendar call spread. Yep.
Cool. But yeah, send us some trade ideas. We'll get them on right now. No buyers in Ethereum or Bitcoin, huh?
Yeah. Well,
guess not.
Not surprising. I mean, this is something we've been talking about for a couple of days. I mean, there's a high correlation between Bitcoin and the markets now. You can't deny it. And this was an expected outcome. I mean, I think I said this across a couple of shows yesterday. I'm pretty sure if market goes down, Bitcoin was clinging to like 107, 110. But as soon as, markets sort of went down, you figured Bitcoin was going to follow.
Wow, we might get a sub 100K Bitcoin price. That's
a good discussion with Ryan yesterday about that potential, and he was saying how he's expecting a lot of activity at that level with big numbers. I mean, right? It typically happens.
Definitely. And yeah, I mean, we haven't seen that price point since end of June. But to Ryan's point, it was a big bounce from sub 100K back up to 105 in the same day. And similar story here. In May, we had a drop down to 97, and it jumped to 103 in the same day. So I think there's going to be buyers sub 100. Especially when you consider we've gone from 125 down to 100 in 2 to 3 weeks. Mm-hmm. So yeah, a lot of weakness out there, but I think people are looking to get long that thing at 100. I would assume.
I'd be a buyer. Yeah. Matter of fact, I still have a Zebra in Dees. It might be time to readjust this thing and go out to Jan. Honestly,
yeah.
At this point, it's probably a do.
Don't mind it. And yeah, I mean, IBIT. If you're looking to trade IBIT as a proxy for Bitcoin directly, IV rank is still decent, 59%, 60% IV. But if you look at some of these options, if you're trying to place like a bullish trade, previous level in IBIT was just above 70 when Bitcoin futures were at 125K. Now we're at 57, sub 60. So same kind of story here. I think you'll see some activity around this 100K Bitcoin price, but it's been weak, super weak. 1, 2, 3, 4, 5, 6, 7 red trading days in a row for IBIT. Actually 8 after the gap up. So yeah, a lot of opportunity out there.
There you go.
Lots of opportunity.
I just moved my IBIT. I had a Zebra in Dees that was the 5658. I went out to Jan now, and I have the 5355, so I got a little bit more delta on it here.
Love it. Love it, love it. Open earnings. Open door.
Open door? Jeez.
November 6th after the close. This is a $7 product, so I mean, there's not much to do here, although it was a $1 product a couple months ago. But yeah, $7 product. We're not going to do anything with options here unless we're just like buying them to speculate.
Right.
I'd rather just own the shares as opposed to like selling a put. But that's just me.
Open door. What is this? It's like a. It's. Wait, don't tell me. It's real estate. I think they do. It's almost like online real estate.
Yeah.
Right.
That's correct.
Online, but whatever.
Mm-hmm.
Yeah.
They opened that door for sure.
Yeah, I think it got interesting to people, besides of all the volume and whatnot, because it was like, oh, interest rates are coming down. People are going to buy more homes. Come out to the coast. We'll get together, have a few.
Come out to the coast. Yeah, I saw some pretty gnarly houses out in San Diego.
I bet you did.
Yep.
This is a beautiful area, man.
Mm-hmm. Let's see. Rivian, huh?
Rivian.
This thing had its heyday.
Yeah.
Sitting at 12, but it's been pretty volatile through the year, as low as 10-ish, sub 10, late 2024, as high as 17 and change this year. So, I mean, yeah, it's a small price product, but again, with these $12, $13 products, I'd rather just buy the shares. I actually have 100 shares of Rivian. Or maybe I used to have 100 shares with the short put, but yeah, I think with these types of products, if you want to trade them for earnings, they do have earnings after the close today. You have a dollar move, so you could do small earnings option strategies, but I don't know. For me, it's like I'd rather just speculate with a long leap or get the shares.
Yeah, I mean, highly speculative here, and honestly, again, this is one of those situations where you sort of pay attention to what's going on in the industry, and Tesla didn't say great things, I don't think, so I don't necessarily know how Rivian's going to win out in earnings personally. That's just my personal thought.
Mm-hmm. Let's see. Spy short at 690 is loving this. If I don't take this off, I'm certain the melt up will continue. Or you might close it and then watch the market melt to the downside. But either way, nice trade.
Yeah.
I did not see this sell-off coming. That's for sure. And it's continuing as we speak. Down 75 in the E-minis, down 450 and change in the NASDAQ. Bitcoin down 5,700. So UNH actually, UNH has had some pretty decent red days. They did have earnings, which was seen positively by the market. They were supposed to have a DOJ hearing today, but I believe it got pushed to the 19th. The court had scheduling issues.
Hearing on what?
They have a DOJ hearing for some. Basically, it was someone suing them because of some Medicare payment, something like that. But they were diving into it, and I think the general public thinks it'll be dismissed, which could be seen as a positive for the stock price. But they were pricing in some implied volatility in this weekly cycle.
Yeah, you can see it.
And I think it'll be moved to this monthly cycle now, November 21st. But that's what I'm seeing on the Twitters. But if you have any updates on that, let us know. Certainly something interesting, though, because it could be a binary event for that day.
Yeah, absolutely.
Regardless of what happens here. Let's see. We need a new future trade that isn't too correlated to SPX.
What?
A new futures trade not correlated to SPX. Do you have anything in crude, gold, silver?
I took off the crude yesterday for a $100 gain, a little under maybe. The only gold stuff I have is GDXJ. Actually, I have something on all three of the GDXJ, GDX, and GLD. All of them are kind of bullish. Yeah, no silver though.
Yeah, I mean,
pull this out.
Silver and gold having a chop fest here.
Yeah.
Gold sitting around that 4K mark, down 10% from the highs. But yeah, Market's selling off, gold selling off, silver selling off, crude selling off. This is definitely one of those sweeping red days. Not many things are green on this day.
Sell everything.
Sell it all. Sell it all. But what's interesting about this move today is we are seeing a little bit of a pop in volatility futures. The X contract up 5%, the Z up 2.5%. We're still in contango though. In this 70-point move today, I might have expected to see a little bit bigger of a move in the VIX and VIX futures. Like the fact that the VIX futures are not even moving a point is interesting. And the VIX is up $1.40, which is not that much at all. We're still at 18, which is nothing that's really going to move the needle for me. So kind of a weird day where the markets look weaker than volatility's expansion would suggest.
Yeah. Yeah. I mean, to some degree, it does. I bet if we were to, right now, and again, it's always kind of weird. I think about it like this in this way, even though it's not 100% true, but we're down almost 1%. Let's just call it 1%, right? And that's reflective of a VIX that's 16. Now, again, VIX is forward-looking, so it's saying over the next 30 days right now, with actual VIX being what, 18.5. I don't know whatever that is divided by 16, but let's call it 1.2. Right now, it's saying 1.2% in either direction. We're not really getting that, even though we're still seeing a little bump here today. But again, it's for the next 30 days. But I just think about it like that. I think about, okay, this is the actual VIX number. If it's not exceeding that actual move that it's projecting right now, then I don't think it should be up too much.
Yeah.
It's not 100% correct, but it works.
Yeah. And it's also, we can't forget that we are now dealing with a 6,800 E-mini price. So a 65-point move to the downside looks like a lot, but it's really not. At the current price point, so like you said, we're within 1%. I see this. I say it all the time. If we're within 1% in a futures product, I don't even consider it a move to talk about.
You are so right, and honestly, I think a lot of us are guilty of that. A lot of people are guilty of that. They're like, "Oh my God, we're down 70 handles." Percentage-wise, come on.
Yeah.
Remember where we are right now in the S&P 500.
10 years ago, 70-point move. That's moving the VIX because the E-minis were 3K. Smack Lovin'. What up, doe?
Smack Lovin'.
Let's see.
Nose.
How about a short put in NVO paired with the call ratio or the stupid, which I love.
El Stupade.
Deal on GLP-1 drugs coming. Preferred bid for Metsera and earnings. How about a short put? Yeah, let's see. NVO.
I was so bullish on that stock at the beginning of 2024, late 2023.
Yeah, these charts are tough for me. These charts are it's like a Chipotle chart where it's just down, gap down, gap down. NVO similar. The trend is down and you have the gap downs, consistent gap downs. But if you think something's changing or you're comfortable taking undefined risk here, you totally could. But 40 strike put in December, only 60 cents. It feels a little light to me in terms of premium. It is 8 points out of the money. So the limited strikes here kind of create an illusion of you're close to the stock price, which you're not as close as you might imagine. You're outside of the expected move here with a 40 strike put. But if you are doing a 45 put paired with a call ratio, maybe you're looking at something like a 55.60, picking up $1 for a 40, 55.60 call ratio. The stupid is just a vertical spread. So you would be doing something like this, selling a put to finance the call spread. I'd probably move the 40 up to the 45 if you're doing this. That also gives you the ability to widen this. You could do a 45, 55, 65 vertical spread and do the whole thing for a 66-cent credit. Or if you wanted to keep it smaller, you could do a 55, 60, pick up a little more premium. I don't mind this trade, but it does worry me that the last 2 gap downs were significant gap downs, from 110 down to 80. And then that was at the beginning of the year. And in August, or just before August, we had a gap down from 70 down to 45. So these are huge gap downs. And I don't think you're going to get the same magnitude, because that would bring this thing from 50 to 10. But if you do, you have $1 here and you have undefined risk. So I think it makes sense if you're doing something like this, like a 45, 55, 60 call spread or a call ratio, just buy the 35. Just buy the put, give up 20 cents, and protect yourself from a huge washout to the downside. These options are just they're too cheap for you to not do that, I think. 35 is only 20 cents, and you can save $3,500 if this thing goes to 0. Or even the 40. Do this package for 50 cents, all your profit potentials to the upside. But yeah, I think defining risk makes a lot of sense here.
And I think it's one, if you really are interested in the trade, I think it'll still be there for you after earnings too.
Yeah. Indeed.
Some things you just should avoid on earnings, honestly.
Yeah, in today's weakness, it's definitely making me weary of placing bullish trades into this general market weakness. What are we doing with IREN?
IREN.
Earnings after the close on the 6th.
Oh, God. Somebody likes volatility.
Yeah, 10-point implied move on a $60 product, $70 product. That is well over 10% of the stock price. And then you got a 15-point move priced into November, 23-point move priced into December. These markets are a little wide.
Yeah, I don't like them.
20, 30 cents wide on a $70 product and 140% IV. I think this is going to be a tough one unless you're selling premium and you get a big vol crush. But I think this one's a no-go for me, just because these markets they're too wide. Not a lot of activity. Only 30 million shares traded today. But when you look at the options, not too much going on. I mean, you do have a lot of open interest, but still bid-ask spread super wide. That's a function of the high implied volatility for sure. But yeah, I think I'll pass on this one.
Yeah, same. Yeah, nothing to say. Yeah, this one is just too wide, man. And it's a little wild. And again, the stock is where it is right now. I can't play upside in this, even though it probably goes higher, but I can't do it. And I certainly don't want to sell upside.
Yeah, someone looking at an 85 call diagonal here. So yeah, I mean, I think if you're trading this, defined risk is the way to do it. The 85 call diagonal, though, if you look at this bid-ask spread, it's got like a 60-cent wide bid-ask spread. So just be careful with your pricing if you're doing something like a December, November call diagonal spread. But yeah, defined risk in here is what I would do if I'm trading it.
This fall looks like a biotech.
Yeah.
This one kid. Oh, so I told you today. So I was at a high school, local area high school, and it was awesome. My good friend, teacher Vince Doran, he teaches a finance class. It was dope, and just talking to the kids about different stuff. But it was fun. I mean, I implored them to ask questions, which is kind of hard for high school kids. But they did. A lot of them did, and it was awesome. This one kid was like, "What do you think about selling stocks in biotech names that have events that are about to happen?" I was like, probably shouldn't do it. I mean, I think he knew the answer. It was just so funny. He asked and then he looked at his teacher, and I'm like,
yeah.
Come on, dude. You know the answer to that.
Yeah.
You want me to just tell you?
Yeah.
It was funny.
I love it. I love that he looked at the teacher, too. Like, the teacher probably,
he was like,
hey,
he kind of glanced at him. I saw his eyes, and he looked over at him. I'm like,
I love it. Do a leap on SPY. Closing profit is 10 to 15%. Yeah, I mean, if you're looking for a buy the dip opportunity,
I love leaps.
70-point move to the downside paired with not too much of a vol expansion is certainly interesting.
They're expensive in SPY.
They are expensive in SPY.
SPY is expensive, so.
If you're looking at, depends on where you're looking, but like Jan 2027, like these are expensive. However, if you're just looking to capture 10 or 15%, if you look at these options and you just look at the net change from today, these far out of the money options have lost 10%. So like the 800 strike for Jan 2027 was 1,500, now it's 1,300. So if that's all you're looking for, totally don't mind playing for something like that. Like if you get a 50-point reversal tomorrow, these options will gain $100, $150, and you would be out if that's your goal.
Actually, I'm glad you said that. It just reminded me of my trade that, not going to lie, I actually saw somebody say it a while ago on Twitter, you know, in jest to some degree about the market and where it's going to be. Like, well, why don't you just, you know, buy some calls for the end of the year? And I was like, actually, that's not crazy. And the idea of a call butterfly for the end for January, 7,000, 7,100, 7,200. I saw him say it like a couple weeks ago, but I need a dip. I'm not going to do it just to do it. I want a dip. And so I think, you know, if this turns into a 2-day dip, I think that's an interesting trade, the idea of going out to January in that situation. Again, we were all looking up at 7,000 thinking like it's coming, but we faded from it. That's actually kind of nice. And it's not been a terrible fade. It's a decent fade. And if we get a little bit more, another percent maybe tomorrow, I'm definitely going to jump on that type of trade, whether it's SPY or SPX.
Yeah. SPY, SPX. SPY, you can do it for $100. SPX, $1,000. But yeah, I don't mind that at all. I think the narrative is certainly there.
By the way, that's incredible that it does line up like that. I mean, I know it's 1/10, but it's nice that it actually works, you know.
It's like a parlay that feels like it should be 3-1.
Yep.
You're getting 10-1.
Yeah.
But yeah, I think we've seen this before. We've seen strength into the calendar year end. And if that does happen, you're right there. I mean, even right now, the Jan expected move is up to 715 with current implied volatility. So you would have opportunities to close this thing for a winner if we do rally into the end of the year.
And yeah, it's low pop, but you know, it's not that much premium neither. So it's something to do. You think markets are going higher?
ETH A down 5% with Ethereum here.
I just rolled that too, actually.
What do you got?
I had a zebra in there as well.
Okay.
I rolled it.
Theta Trader, glad he took off a 30 strike short put last week when the underlying was 7 points higher. 25 looking interesting now. Yeah, I mean, this is it's a cheap price point to get involved in Ethereum. But yeah, the 25 for $230, certainly a nice return on capital for the risk. Buying power requirement is a little bit elevated though. So maybe consider a spread or a diagonal spread, something like that. I have a diagonal spread on in here. I've got the 30-40, 5 points out of the money, paid $440 for it. The short option is basically worthless, but there's not much I can do here to defend this thing.
$440? You sure you didn't pay $6-7?
Yeah, I did not. $440. I think if we do move this down, so like I could move this down to a calendar spread at the 30 strike, but picking up 40 cents, I'd rather just not, just in case it rips. And rolling the short option closer to the long just makes it feel more like a vertical spread that moves more slowly. So I think this will be one where I won't do anything on this unless we get a rally. But if you want to throw on a new trade, I think this is certainly interesting as we approach that 100K mark in Bitcoin. Robinhood up 800% in the past year, lol. Yeah. Yeah, Robinhood, Coinbase, SoFi.
It's amazing.
Yeah, Coinbase actually has fallen quite a bit, but SoFi, crushing it. This thing was $10 in May. It's at $30. Insane.
Yeah, I got a leap on in this one in the long-term account. I got the 5 strike. I think I got it for $6.
Yeah. Great trade. Yeah, this thing is and what's funny about SoFi is it's only a 35 billion market cap. Same thing with like Hood. 130 billion, Coinbase 92 billion. It's like, could these things triple? 300 billion? Yeah.
I hope so. Honestly.
I think
Two of them for sure. All 3 of them actually, now that you mention it.
Yeah, I mean SoFi only being at a 35 billion is interesting. Because if it goes to 100 billion, you're looking at a $100 price point. Even though we've already gone from 10 to 30, it's just interesting to think that there's still room to grow for a lot of these companies that are still pretty small.
I think I need another leap in SoFi.
I've sold you. Let's see.
Yeah, interesting weakness here today with gold and I mean, Bitcoin and markets make sense, but gold is another interesting one. Again, it's like gold is actually following the rules again with the dollar being up, right? Like it's actually following the rules again. Honestly, this is a day, if we had this day a year ago, you'd be like, oh, this makes sense. The dollar's up, markets are down, gold is down, and, Bitcoin is down.
Mm-hmm.
Now I don't know what to think.
Yeah, it's a rare day where things are making sense. Look at this dollar move, though.
Yeah, dude. I mean, it's at
5 days in a row.
This is actually the level I've been waiting for the longest. I don't even have a dollar position anymore, but I was waiting for it to go back to 100.
Yeah, I had a Taste FX position, but I closed it this morning. So we are ready and able for some trades from Glenn tomorrow.
There you go.
But yeah, looking at the percentage change on some of these popular USD, popular non-USD, you've got, let's see, 1, 2, 3, 4, 5, 6, 7, 8 pairs that are up or down over 0.5%. So you're seeing a lot of movements in these currencies today.
Yep.
Some of them are over a percentage point. The pound yen down 1.25%. The Aussie dollar yen down 1%. So yeah, big moves in here.
Yeah, that pound yen's getting doubly pounded. No pun intended. Actually, it was intended. I totally thought about it as I said it. I know. But because the pound is getting rocked, and then the yen is actually up.
Yeah, the yen is
weird.
The yen is the denominator that all of these are related to that are over 1% move. Craziness. But yeah, 6J up 0.5%. Pretty decent move from the lows. We'll see where it goes.
Yeah, no idea what's going on there. So.
All right, AMD. We got some trade ideas here. How about a put ratio spread, 17 days out, 280, 287?
Wait, what? 280? Put ratio?
280, 287.
Call ratio.
Call ratio. 280, 287, 17 days out. Break even up at 300.
It's actually kind of nice. I had a good talk with Tony yesterday about call ratio spread. Actually, he did. Yeah, he collected a credit in Palantir last night. Looks like that worked out for him.
Nice.
And we had a conversation about that.
So I think you can attack this in a number of ways. So $3 and change for a 7.5 point wide ratio spread. I'd almost rather give up some of that premium and just make it twice as wide. Like the 280, 295, you're giving up $100 and change for your total credit received, but you're bringing your break even way up to 310. And this thing, if you do get a rally, this 15 point wide ratio spread will appreciate more easily in your favor than a 7.5 point wide that's more narrow where you have to hold it closer to expiration.
Like that.
So, I mean, another way to put it is like you have twice the width here, so you can expect twice the profit potential in the same period of time, especially with a vol crush. So, yeah, I kind of like the 280, 295 a little bit better, but if you want some downside profit potential, more downside profit potential, if you're doing this more narrow, 365 credit, of course, is going to help you do that. So,
I like that a lot, actually. Yeah, it's a great idea.
Let's see here.
Especially given, like we said, some of these earnings. I mean, if you're going to take a shot in this situation, it's probably the time to do it. A lot of these bigger tech earnings have faded on earnings.
Mm-hmm. Let's see. AMD in the money leaps 365 days out. So are you thinking, I think you're thinking out of the money leaps? to the upside.
Which month? I mean,
yeah, 365 days plus 8 delta. I mean, that's you can't even get that. Even the 500 strike has a 25 delta, which is insane.
That's a hope and a prayer.
Yeah. To the downside, you can get an 8 delta. Downside leaps are tough for me though, because downside. So you have to think about it this way: if you're buying the 130 put in December of 2026, the current stock price is 254 with an elevated implied volatility. If you get a move down to 130, yes, you would make money on this put, but you're not going to make nearly as much as you think because the current premium is assessed at a $250 price point. If your new price point is cut in half, your premium, all else equal, is cut in half from that same price point. So we've shown this before. Like if you look at the value of a call appreciating when AMD goes from 160 to 260, you're looking at like 6, 7, 8x from the low point. But if you look at this value going from 260 back down to 130, you might make a 2x or a 3x because the depreciating price point kills your extrinsic value profit potential. The opposite is true for calls. So I think if you're doing this to the downside, I might rather go like closer to the current price and then sell something against it at a lower price point. But if you're thinking there's a big washout here for earnings, then maybe you don't do that. But downside puts are tough.
Mm-hmm.
But you know what? I think I'm going to throw this on. I think I'm going to do your strategy, the 240 put calendar. I'm going to buy the 10-day, sell the 3-day for $3. And just plan to close this tomorrow if there's any kind of inside down move.
The 240?
240. Reducing cost basis on the 10-day option by over 50%. If it rallies or stays up, I can just buy back the short.
You're buying the 240 for?
The 3-day, 10-day put calendar.
How much?
$300.
Just so you know, the 240 calendar, the regular no versus 10-day is only 210.
Yeah. The no, yeah, that's true. But you don't get the same big vol crush.
True.
In the 3-day. But no, if you're looking to do something smaller.
If it's an
totally
inside
viable.
move.
Yeah.
I mean, you still got another 10 days.
Yeah. I was just filled on the 3-day, 10-day.
Yeah, I'll do it with you. I'll do the same one.
But yeah. I think it'll be a good vol contraction in the 3-day, even tomorrow after earnings. But we'll see.
I'm trying for 310.
Inside down AMD.
Bingo.
240.
Village.
What else we got here? What else we got? With the way short strangles have been going, feels like long strangles should pay off nicely. I mean, yeah, if you have a long strangle on today, you're looking good.
Not wrong about that.
But yeah, that was one of the things, not necessarily long strangles, but that was one of the things I called out continuously with gold futures or gold in general. During this whole rip, the implied volatility, like IV rank was going up, but anytime I see an IV of 20%, I don't really care what IV rank is because the premium is still very low relative to the price of the product. So GLD, we were doing debit trades in there the whole time. But yeah, you're finally seeing GLD kind of behave more normally in more of a channel two-sided action range here. But yeah, long strangles in GLD or gold futures or silver, those were doing very well into this realized volatility explosion to the upside.
Behaving normal-ish.
Mm-hmm. Signature earnings trade, AMD. All right. Sell the Nove Strangle.
Okay.
195. Whoa, 195, 395.
Wow.
Okay.
95? Well, I already don't like the fact that it's only 94-cent bid, but okay.
I think it's got to be 295.
It's got to be.
Got to be.
195 though?
I don't know. These numbers are all off.
I know. Let's just look at the 205.
The $2 credit. A $2 credit is $335. Maybe that's it. $335. And then you buy the weekly put spread, $215, $217.5 for a $10 debit. Okay. And buy the call spread, $310, $307.5 for 6 cents.
So you're doing the strangle and offsetting with a few wings.
Yeah.
And collecting a total of $1.90 or something like that.
Yeah. So it looks like you're selling the monthly. You're selling the monthly strangle, and then you're buying 2.5 point wide micro hedges against your undefined risk to the downside and the upside. But yeah, I don't mind it. If you're playing for an inside move, and if you do get the blowout move, you're giving yourself $250 on either side of additional hedge.
I mean, the only thing is just know that, obviously if it's inside move, those wings are obviously zero, which they're not a whole lot, but this other strangle is not going to come probably as fast as you think because it's Nove. It's going to come in, but
yeah,
you
are pretty far out on the plane, which strike plane, which helps you.
Yeah.
Because if there's any kind of inside move, those options will lose some value because you're so far out. But yeah, to Jamal's point, if there is a move, those options can certainly increase in value because you're 17 days out. Great conversation, Jamal, yesterday on Overtime, Microsoft and Meta. Are you looking to do anything there today? What was the summarized discussion point?
It was, I think, a consensus between myself and Dylan and Ilya about which one of these two eventually get long. I mean, I was just talking about the idea. And so I do this thing now when I go in Overtime. I basically talk about a lot of the positions I have in the personal. And so I was talking about how I got some calendar call spreads on there, a couple of different units, further upside with Nove essentially. And, again, just those charts and the way they've fallen and how those stocks have been Teflon, right, throughout the last couple of years here. So just picking up some long deltas and finding ways to do it. And I think I was just I was basically telling them my philosophy about calendar calls. Like, I never used to like the trade. And I mean, it really stemmed from the idea of a long time ago, and in Tom and Tony's day, the idea of calendar calls or calendar spreads, period, worked because volatility assumptions were so wrong quite often. I mean, there just wasn't as much information. You could literally sell something in 1 month and buy. I remember times where it was like, oh my God, today, look, Meta's earnings, they're wrong. And so you would literally go out and put on a calendar call spread and it would come in like that. I mean, it was crazy the way that it would work. And that kind of thing doesn't exist anymore. But I've flipped these calendar spreads in such a way that I'm using it to offset cost basis, right? Like the way we do it now. So it was just that convo. I already have a calendar call spread in Meta right now. I still have the 700. That's actually from earnings. I'm going to sit in that one and maybe look at some point. Do I have one in Microsoft? I still have the Microsoft one as well. So yeah, I've had these since I think earnings, or I might have deployed them after. Still got those. I got the 550 Nove in Microsoft, and I got it's 700. It's pretty far upside in Meta, but who knows? A little more than 10% for the Meta, a little under 10% for Microsoft. Move.
Yeah. I had the 550 on for Microsoft. That was a calendar spread for earnings. That was a $200 debit. It's going to be worthless. But for Meta, I did not trade Meta, but last week I put on a 750 calendar to the upside. So I bought Jan and I sold Dees. just basically playing for a reversal halfway up to where we were. And if that does happen, I mean, even right now into this continued sell-off in Meta, this trade is only down $200. But if you look at the raw value of these options, paid $1,800 for the long option in January, collected $1,200 in the short option in December, and January has almost twice as much time as December. And I was able to cut basis to a $600 trade from an $1,800 long option by itself. So, yeah, plenty of premium there to extract. And, yeah, I think if you believe that over the next couple months, these stocks that gapped down will come back, even if Meta goes to 700, this will be a winning trade. Because it doesn't have to go to 750 prior to expiration. It's just, you just need the momentum back up. So, yeah, I think it's kind of a pick your poison here. Microsoft had better numbers than Meta did. So if you hang your head on that, I think there's something to be said there. But yeah, both of these are off highs. Microsoft was at 550-ish. It's at 510. You got a 10% discount. Meta was at 780. It's at 630 now. So a lot of opportunities out there if you're trying to gather some bullish delta.
Oh, show.
Any thoughts on GLD or GDX? What do you have on?
GDX, I have I actually have the strangle in GDX, the 6580 strangle. Still, I'm actually winning on that right now. Actually, I rolled that one out. It's in Dece. So, but overall, I'm up according to order chains, so that's good. And then what was the other one? GDXJ?
GDX.
GDX is the strangle. GDXJ is the short put. I am still short a put on the 90 strike in Nove. I actually remember trying to move this out last week. This thing's a tiny bit wide sometimes. I think I wasn't able to move it, but I still need to. As a matter of fact, that's something to do.
Cool. And yeah, my only trade on I have on gold is actually coming back, clawing back. 43 days ago, I put on a 345, 335 put diagonal spread, and it's down a couple $100 now, but getting closer to being within the range of possibility here. If we look at my 345 put in December, we are now within the expected move. So if we get a move down, this is a $600 debit trade. If we get a move down another 10 points or so, this will be right back to being on the dance floor. And we'll see what happens. But yeah, that'd be crazy.
Oh, we're cha-chaing.
ETH A, looking at a 25 short put in Dece. Underlying small enough to take shares if it goes bad. IV nice and juicy. Yeah. Yep. The only thing is the elevated buying power. So another scenario where I might sell the put here with the assumption of taking shares still. But I think these puts are cheap enough to where just buying the 15 put, giving up $20, cutting your buying power by a third makes a lot of sense here, or close to a third. Because if you have an undefined short put, you're looking at $1,800 in buying power. If you buy the 15 put, you go down to $780. And if it does actually wash out, you can then sell out of the put contract for whatever value it is, roll the put or take the shares, and you put yourself in a better scenario anyways.
Yeah, for sure. Love it.
It's 11:56. I've gone past my promise here of ending a couple minutes early, but thanks for tuning in. Yeah.
That's only going to make it take longer.
Yeah, true. Thanks for tuning in. If you have any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We were filled on that AMD put calendar, so the 240, long the 240 10-day put, short the 240 3-day put for $310, reducing basis by over 50% on that long option. So we're looking for an inside down move in this weak market. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place, 11 a.m. Central tomorrow. Peace.
Tasty Trade's Money Match event Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions.
Ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to Risk and Reward. We got a guest with us here today. We got Dan in the house. Some of you guys are familiar with Dan. Dan kills a lot of our crypto content for us over here on the network, so go check him out. But Dan, thanks for taking the time. It's good to see you, brother.
Yo, what's up, E? Thanks for having me. I'm really excited to be here. It's my first appearance on Risk and Reward. A couple weeks ago, me and you chatted on the Tasty Crypto show, and you're like, I got to come on, and you got to teach me. I was like, I want to learn futures. You got to teach me futures. So here I am. Let's do it.
Yeah, we made it happen fairly quickly. How's the week so far? I know it's only Tuesday. We're just kind of getting into it. I know like NASDAQ and some of the indices have been sliding a little bit. What's been going on in the crypto world?
Yeah, so we actually have a huge sell-off today. Bitcoin has touched 100K. We're in a massive sell-off. This is kind of on the back of what happened in early October. And I was actually, before I hopped on the show, I've just been in some of my group chats with some of my other traders, and there's some speculation that a big liquidity provider market maker got carried out, and we're just seeing that deleveraging happen now. So, Bitcoin testing 100K, ETH back at 3,300, Solana $154. Let me see what Ripple's at. But yeah, major sell-off here. So, if you're bullish or if you're a long-term holder of crypto, definitely time to maybe take a look, set some alerts, maybe set some limits below 100K, try and catch Bitcoin. But we're seeing some carnage here, man.
I hear you. Again, I was curious because, again, NASDAQ has been getting a little bit more volatile. We're seeing the VIX spike a little bit more. So we're seeing a little bit more fear kind of creep into the market. So you got to keep us updated on what's going on in the crypto world. But it seems like it's kind of the same story on that end. But what's going on, chat? What's going on, Kimberly? What's going on, Theta? We got Dan here today. We're going to run through some of the details as to why some of us like to speculate on futures, why futures traders see opportunity in that land of things. So we're going to get into some of those slides there. And then we'll get into a little bit of the trading view, do a little bit more analysis, and we'll also get into the Tasty Trade platform and manage some of these positions that we have on here. So we can actually just throw up that first slide there, John, when you get a moment, and we'll get started. Futures for beginners. Some of you guys are going to recognize some of these slides that we have here. But let's go back to the basics. Why do some of us futures traders like to use futures as an asset class to speculate? With that being said, they were originally made to hedge risk. They're very large products. And today, widely used by institutions, hedge funds, and retail traders, especially for speculation, diversification, and risk management. And in this case, we're going to be speaking about futures more in the world of speculation. And that history matters. It's what makes futures some of the most liquid, institutional grade markets in the world. I think the futures market, especially NASDAQ, ES, some of those larger markets, typically you're going to be getting instant fills unless you're using maybe 100 lots, 200 lots, 300 lots. But for the most part, extremely liquid market. And I would say that's the primary reason why there's a lot of directional speculations in the futures asset class, at least, Dan. I don't know over in the crypto world if some of these crypto futures, if it's kind of the same thing. I know there might be some products that are a little bit more illiquid, not maybe as liquid, but what would you say the comparison here is in terms of what's so attractive about these two products? What would you say gravitates traders towards maybe speculating on something like crypto?
Yeah, so I think from a traditional sense, what people love about futures is the capital efficiency. And what I mean by that is the ability to only post like a certain percentage of the position and kind of gain some leverage and basically take on a little bit more risk than you could traditionally with maybe like options or traditional equities. In the crypto world, and I've mentioned this before on the show, on the network, we have futures, we have derivatives, but it's a different setup than traditional markets, right? The setup is that, or the product is perpetuals, right? So there's no expiration, there's no contract size. You're basically just in a position, you're paying a funding rate to finance a position, and that funding rate changes to finance a position and finance the leverage you take on it. So because markets are 24/7, because there's no market makers per se, like a person in a pit or a person at the CME. There's no real exchanges, all automated, and the markets run 24/7. The future product, the derivative product, this kind of futures is really that perpetual. So market's a lot smaller. We've seen a lot of liquidity kind of come in this past cycle with the ETF and some of these institutions adopting it, some of that regulatory clarity. But people trade in crypto this perpetual futures. So, but I'm actually interested because obviously, you know, we're at tastytrade. We have the CME futures. I'd love to take a look at micro BTC, micro ETH, and even the bigger contracts. Those are a little bit harder for retail traders, obviously, to get into because the contract size is so big. But
no, we can definitely take a look at some micro Bitcoin here in a little bit once we get into TradingView at least.
Yeah. So the main derivative product that crypto traders trade is perpetual futures. Yeah. And you know, I want to keep it simple. There's obviously sophisticated people in the market. They use it for hedging. They use it for carry trades. But for a lot of what I see in like the retail side and the individual trader side, people love perpetuals because you can take up to 100x leverage, and you can keep that position on, right? You don't have to manage contracts. You don't have to manage overnight margin. You don't have to manage expiration. It's a superior product in that sense for a 24/7 market.
Let me ask you this real quick, Dan, if I could.
Sure.
With some of those perp futures too, with crypto, what's kind of the time duration of speculation are we kind of talking when we're talking on these topics?
Yeah, so I think it depends on which strategy you're trying to use, right? So like the number one strategy I see people use, and if you're sophisticated, is something called the carry trade. And really all the carry trade is you hold long, let's say Bitcoin, and you short that perpetual future against that spot Bitcoin. And that's supposed to be like a way to take advantage of the funding rate. So typically similar to like Contango and what's the other one? Backwardation.
Mm-hmm.
There's like a future outlook to the price, right? And it's based on a funding rate, almost like an interest rate to finance the position. So most of the time in certain markets, Bitcoin people that are short get paid an interest rate by those that are long that future. So if you're holding spot and you think Bitcoin is going up and you want to hold that spot, you can get paid on that position by going short the future, right? So it's like a delta neutral kind of like, carry trade essentially, which is also, I think, a very common traditional finance trade is the carry on it. So there's that. And then, I think that there's also a lot of people that love the idea of 50, 100x leverage, massive gains in a short amount of time. So I think you see a lot of less sophisticated participants try and gamble. Mm-hmm. And because the crypto market is easily accessible if you're skilled enough, it's like, somebody will deposit, a couple $1,000s in, get 100x leverage and try and take their shots. And there's kind of a gamble culture to it.
Yeah.
So I've seen that. I've seen long short, right? So go long the majors, Bitcoin, ETH, Solana, and then pair that with some of these like long tail meme coin speculative type coins where you short those against the majors, and you can run like a delta neutral long short strategy. So again, those are like the three most common I've seen. And I mean, we talked about it before. I think like the thing that people need to understand that maybe aren't as familiar with crypto is there's decentralized exchanges. So there's exchanges where, you don't need to kind of be like, have a tastytrade account, all this. You can kind of transfer out to a wallet, connect to the wallet to the exchange, and you're good to go. You have access to 50x, 100x leverage. So I'm not saying that like that has popped up in the last couple of years. Mm-hmm. And I'm not saying that that's like necessarily all the participants, but for like a globally connected 24/7 market, there's just a wider breadth of participants and there's more access there.
No, that makes sense.
So yeah,
it does kind of seem like that level of leverage is a huge attraction point in terms of why we might trade some of these products. Because again, with some of these futures products, right, one contract, whenever the market moves 1 point, if that would have been just one share, maybe it would have made $1. But because we have that multiplier For the futures contracts, and the multiplier is different depending on the futures that you are trading, that leverage is, again, really attractive. So it seems like that's another huge element of attraction within the crypto world, again, I would say, it sounds like. But we'll circle back around to all of that. We're going to get into the TradingView platform in a little bit, too. So we'll look at Solana, we'll take a look at ETH, and some of the micro Bitcoin you had mentioned, too. So we'll see some of those products, see how liquid they are and how much volume they've been trading, too. And we'll make that kind of more of one of those products we check up on, kind of like our indices. So
yeah, for sure. I definitely want to dig into that because I really want to see what you look at, like the indicators you look at, how you read the order book, read the order flow, liquidity in the market. Like that's all stuff, admittedly, I'm not that good at. So
there's a lot of those, because again, some of the tools that I first dove into, like I was saying, I think they were native crypto investors and traders that were building some of these products. So I would say there's a lot of similarity within those lines, especially within order flow and some of the futures products. So we'll get into all the weeds of that. I'm excited, Dan. But we can jump to the next slide here. Yeah. Why are futures attractive? We touched on a lot of these points, but the liquidity, right? Some of these very tight bid-ask spreads that you can find on something like the S&P 500 or NASDAQ get filled instantly, especially as a retail trader, right? Most retail traders probably not trading with hundreds of millions of dollars, unless Dan is, and we just don't know. But if he is, you'll see his orders pop up on the bid of the ask. And then we got another point of leverage, right? Crypto, futures products. There's more leverage that can make it an attractive vehicle to use in short-term speculation, and then capital efficiency that I think, Dan, you had alluded to earlier on the first point that you were given. And then also no PDT rule, right? I know there's a lot of talks about how the PDT rule might go away, but this is another way that you can get access to the markets 24/7 without worrying about that 3-trade, 5 rolling day period rule with the PDT rule, and you can trade whenever you see opportunity in the market at your discretion. I know the PDT rule has been something that has been an annoyance, I would say, Dan, especially over the last few years. I know now we have more access to trade markets like futures, crypto, this, that, and the other. But when I was first getting into the market, I had only noticed stocks. I was short selling a lot of small cap stocks, actually, but I was only familiar with that market, and I was like, I'll never be able to trade things like Apple, Meta. These are too expensive. Not only that, I only have like 3 trades a week that I can use. So I never knew that there was another way that you could get access to a market. Number one, with a little bit less capital, so you can get a little bit more leverage. And then also number two, a market where you can have ease of access in terms of how many opportunities you're taking within a 5-day rolling period. So, those are the points we have on this slide. Do you got any thoughts on those last points there?
No, I think that's why this is so attractive to most traders, right? Like, I think, it's fine to kind of speculate on stocks. Like maybe there's, ways you can time things. You can take some short-term trades. You can speculate on narratives or meme stocks. But I think when you level up and you're able to go out on margin and be capital efficient, I think that's where like you transition from novice to more pro.
Yeah.
And so, and let's just be realistic. Like people want to speculate. People want, to amplify the returns.
Right.
And I think futures gives you access to that, right? Especially across a different product set. And, it is around the clock access, like you mentioned, 24/7. I think people that are traders they don't want to abide by market hours. You know what I mean?
Yeah. I know in the futures trading world, and John, we can go ahead and jump to the next slide here. But I know in the futures trading world, we got the New York session, right? We have the Asia session. We have the London session. I don't know if you're more familiar with those terms, especially in the trading community, but I know some people will ask me, like, hey, bro, like, are you trading Asia session right now? Because sometimes I'll go live with the community sometimes at 8 at night, just do a quick trade recap. I'm like, no, I'm not trading Asia session. It's usually not as liquid, usually just the New York session, and particularly the morning hours. But there are those multiple time sessions throughout the 24 hours that you can be trading, where it's prime Asia session, prime London session, or prime New York session. But you'll find all different traders of the bunch, especially on social media. Especially you, Dan. You're very well versed in terms of communities, online communities, what people are doing, what they're trading. I've came across some of your socials accounts. You're in the weeds of things. I know you know what's good around there. So
yeah. I mean, I think that's what makes crypto so interesting is there's certainly sessions, right? Like I think you can notice certain things in the market when, Asia might wake up or Europe might be trading or, obviously US. I think there's different like liquidity profiles, but for the market I trade, crypto, there's really it's 24/7 365. So like I don't know if there's as much of that
right
as in traditional markets, but I do think like the traditional market futures are similar to what you see in like spot crypto markets, right? So it's just like a wider breadth of participants too, I think. Right? Because there's just it's kind of like global access.
Yeah, 100%.
Yeah, which I don't know if that's true in other areas. Like I think like for a number of years it's been hard for other countries to get access to U.S. markets, and vice versa. I think U.S. participants harder to get access, smaller participants harder to get access to like foreign markets. Mm-hmm. So I know that might be changing, but yeah, I think I try and kind of play into the narrative, right? Like
what narrative is that, Dan?
Like if I'm following something on socials,
okay, I got
if I'm following something in chats, like I think you can kind of get a sense of the market, right? Like if you're like before this, for example, before this dump in Bitcoin,
mm-hmm.
for the last 2 weeks, the market narrative turned bearish, right? The sentiment turned bearish.
Yeah, that's true.
So, and that preceded this dump. So I think like you can kind of sense that if you're tuned in, right?
Yeah, 100%. And just being engaged with the markets, especially on a daily, weekly basis, you kind of form that natural feel for that kind of vibe or sentiment that you were kind of touching on there. But this next slide here, Dan, we're talking about the two types of orders. This kind of goes, or we can jump back to the last slide right here one more time. But the two types of orders, Dan, especially when it comes down to more of an order flow sense, we're not getting into the weeds of order flow right now, but I do think understanding the fundamentals of order flow does help with building a logical thought process when it comes down to certain trade opportunities later on, and then also later on whenever we're using other tools like the ladder that we have here that shows some of the orders that are in the book, the depth of market, and then maybe other order flow tools that we might come across. But with that being said, there's two types of orders in the market, and these are going to be our aggressive orders and our passive orders. Our passive orders are just known as our limit orders, right? Our limit orders are going to be the orders in the market that are just set at specific price levels, just waiting to be filled. I've always heard them as limit orders. When I dug into the weeds of order flow, I know these are the official term is called a passive order, and it kind of makes sense. You're being pretty passive. You're not trying to get filled right now or enter the market right now. You're going to be a little bit more patient, let the market come to that specified price level, and then fill your order. So we have a passive order, and these are going to be your limit orders, your resting orders, and these provide liquidity to the market. And these are going to be seen in the book. So the DOM, which is another popular tool that we trade with, just the depth of market. And the team has done an amazing job of producing this DOM over here on the right-hand side. There's one thing that I love. I love a well-built UI, and I think they did a great job of the visual component of this. But whenever we do look at something like a DOM, all of the orders in there on the left and right-hand side, whether that's on the bid or the ask, are going to be all of the resting orders in the market, waiting to be filled at whatever specified price level it is showing on the ladder there. So these are all going to be passive orders. And the next type of order we want to make sure we have a good grasp on is the aggressive orders in the market. These are just going to be our market orders, so we're trying to get filled now. That's why they're called aggressive orders. They're looking to get filled at the next best price available. So they'll take the next best bid or the next best ask. We can actually go back to the last slide just for a few more moments. But the aggressive orders is just going to take the next best bid, the next best ask. That's why they're called aggressive orders. And these aren't going to be seen on the ladder. This will be seen on something more like a time in sales. There's other order flow tools that you can use. I like to use something called a footprint chart. But I really want to make that clear. Whenever we're looking at a DOM, whenever we're looking at a ladder, the ladder is only going to show the passive orders. These are only going to show the limit orders or the resting orders in the market. I know I sound like a broken record. It's just that we have passive orders, limit orders, providing liquidity, and resting orders. We have so many different terms for the same thing, so I can get a little bit repetitive there, but it's a little intentional, Dan.
Yeah, I remember, or I learned it as a maker taker.
Oh, I like that. Yeah.
So maker orders are the limit orders. It's what you see on the DOM. Taker is taking from the market, basically going in and just aggressively buying. So that's kind of how I learned it.
That's a good way to remember it. You said make the maker or taker, right?
Yeah, maker taker.
Maker taker.
Yep.
I like that.
So limits the maker. Aggressive orders are the taker. I'm curious though. Like I know you have this graphic up of a ladder with the liquidity profile there.
Yeah.
Or what is that telling you? Like how do you read that? Like is that something where, does that give you a sense of like, okay, maybe I want to. There's liquidity around this, or like how are you reading this?
Yeah, that's a really good question. I think we need to pair it with a little bit more context. I think that's what we're lacking whenever we just look at order flow in itself. It's like we're lacking some extreme context. So I see exactly where you're coming from. It should be within these next couple slides. I think it'll be able to tie a little bit more together in terms of where you could see value using something like this. Because it's cool. It's like, cool, we got a bid, we got a ladder, we got to ask. That's cool. We can break down the terminology of all these things. But like, how is this practical? What's the practical application? Or what should I be deriving, out of some of these tools? So we'll tie into some of that. We'll tie in some more of that context here in a second. We'll jump to the next slide. Just to break down a little bit more about the aggressive orders in the market, it's where aggression meets liquidity. Aggressive buyers are lifting the offer, price moves up one tick. If aggressive sellers are hitting the bid, that's when price will move down one tick. So if we have, let's say we have 10 sellers, 10 sellers at a price level of, let's say 15, we're gonna need at least 10 sellers or more to break through that level at, let's say $15, I think is what I said, to go to the next level of liquidity. So pretty much whenever there's levels of liquidity with higher stacked, let's say passive orders, we're gonna need even more aggression, or we're gonna need more market orders to pretty much eat through those limit orders to go then and seek another level of liquidity where there might be a little bit more resting orders. So this slide right here is just kind of emphasizing a little bit more of what exactly those aggressive orders are doing on the back end for price to actually move. Because if we really break it down from a fundamental level, it is the market orders that is technically moving the market, right? Because the market orders is what is jumping to the next price where there's available liquidity, and the resting liquidity just sits there. It's not doing anything. So it really is the aggression. It's those market orders that have to pick up momentum to really start running through those other levels of liquidity, if that makes sense. So that's just to give us a little bit more of a mental model or visual in our head for what's going on behind the scenes. And again, it might be like, well, why is this information important? I think we'll be able to tie a little bit more of that together when we add more context. But we can jump to the next slide here. And then we'll get to some of these comments as well. I know this has been a little slide heavy, but Dan, this is kind of how a lot of futures traders will view the market. It's kind of in terms of auction market theory, and we'll tie some of the charts and volume profiles into this a little bit. But those little bell curves that you see on the edges of those boxes are just standard deviations. And we'll break this down here in a little bit. So auction market theory just lets us know, especially in the case of futures markets, auction market theory lets us know that the market is constantly seeking fair value. Like, what is the market's goal? What is the market's purpose? Why does it exist? What is it there to do? It's just there to facilitate fair value. Fair value being the price level or price range where buyers and sellers agree on price. Like that's all the goal of the market is. Yes, we get an uptrend. Yes, we get a downtrend, but that's just because buyers and sellers are now maybe disagreeing on value, and then there's going to be a new location where fair value might be. To your point earlier this weekend, Dan, maybe fair value was beginning to be beneath wherever the crypto market participants believed that it was. Maybe it was a little bit too high over the weekend. Maybe we got a little bit of that bearish sentiment. And then the market is going to go and try and fulfill its purpose of finding fair value. And maybe we get new information in the market. Maybe it's a catalyst. New information could even be that we've been at this price level for maybe a day, maybe for a week, maybe for 30 days. That could even be new information or a catalyst to move the market, and then buyers or sellers now don't agree on fair value. So to put this in simple terms, the market is always trading in one of two states. We're either trading in a balanced market or we're trading in an imbalanced market. And when we're trading futures, one of our goals is to just figure out, are we trading in a balanced market right now, or are we trading in an imbalanced market right now? There's a tool called volume profile that we can use to gauge, to figure out what state that we're currently in, which will then give us more context to what trade opportunities we might look for. Because like we talked about before, we're either in a balanced market or an imbalanced market. A balanced market being the price range or price level where buyers and sellers agree on value. And then we have the imbalanced market where maybe buyers are getting more aggressive or sellers are getting more aggressive, hence the imbalanced market, otherwise known as otherwise known as price discovery, right? Some of these terms are as old as time. We're just breaking it down from such a fundamental level. So we'll get into some of the volume profiles here in a little bit. I know you were asking how we might use that order book a little bit more. And we'll tie all that in here a little bit. I'm just thinking about when we want to jump to certain topics, but let's just get through these two states, balanced market and imbalanced market. We'll make more sense of this. But have you come across these terms before in the crypto world at least, or anything of the sort?
This is great because I've never really kind of put a terminology to it.
Yeah.
I think I've seen tools and data that like shows when we're in a balanced or imbalanced market, right? But I never knew why. Like I never had like
it's kind of like a framework. Yeah, it's a little bit like a framework. Yeah, 100%.
Yeah.
I know this was a lot too, especially right off of the bat, but we'll tie it in a little bit more, and I think that framework will be helpful, more so for some of the directional movements that we get in the market. But with that being said, we can jump over here to the tastytrade platform. We'll look at some of these positions, and then we'll jump into the TradingView platform and look at some more of the opportunities that we're looking at in some of those crypto products too, Dan. But with that being said, we did get on some short opportunities today, Dan. I know I just talked about this balanced market, this imbalanced market. We got on some short positions today on NASDAQ. We were feeling pretty bearish. Even yesterday, we got on some more short positions, which was nice. We just put on some more swing positions so that we can catch a larger potential move to the downside. Maybe crypto and some of those assets slide with it. I don't know, but I'll show you some of the positions that we have on right here. And we could jump to the Tasty platform. Let's catch up over here. We definitely got to have Dan on a little bit more. Buy puts in Ether. I'm not the crypto man. I haven't bought any puts in Ether or Bitcoin or anything, but what's your overall thoughts on Bitcoin and Ethereum quickly as we get into this, Dan?
I think short term, we're seeing some weakness. I'd look to kind of pick up stuff under 100K. I think it gets really interesting around 95, 90K Bitcoin, 3,000 below that on ETH. I think this is probably short-term weakness due to that deleveraging event back in October and just general, I think, exhaustion from the macro market. Because I think, again, this asset class is still very small, still very tied to liquidity in the system, tech stocks, macro environment. So, I think the broader market selling off only amplifies what's, the sell-off in crypto. But long term, I think you should just be a holder, right? Similar to, having a well-balanced, diversified portfolio. I think owning Bitcoin, owning ETH, owning Solana, Ripple, all good products to basically have as a small part of your portfolio, right? And you don't need to worry about price. You could just, buy in increments or buy every so often. But if you're actively trading it, I think the IBIT options are interesting. I think the micro Bitcoin futures are interesting, for what our clients have access to.
Yeah, no, 100%. Emidi was saying Red exaggerated because of the ETH hack. You hear anything about that ETH hack?
ETH hack. If you're talking about the balancer DeFi hack, I think it could be the case.
Yeah.
Right. This stuff happens. This happens all the time in crypto. It's new technology, right? Every hack kind of gets us closer to being more anti-fragile, right? Like, I think people look at these hacks and say, "How could you ever trust it?" But I have a different take.
I have a different glass half
No, I have a
you're
different
right.
take where I mean, if you're a victim of it, it's not great, but I think every hack gets us closer to a better system, right?
Yeah.
Just took years and years for the traditional markets to, regulate itself and have different checks and balances. So that's my perspective on it. But
No, I mean, I
obviously,
think there's a lot of validity to that point. I mean, I think everything has a maturing process, especially whenever there's a new industry, right? We got AI. AI is going to have a maturing process. Crypto is going to need a maturing process. And with that comes a lot of growing pains. And if you're on the wrong end of that, it's unfortunate. But the same thing happened with the .com bubble, the internet stocks, and whatever the case might be. So I think it's just the natural maturing process. And you're kind of just bringing us back to that perspective, right?
Right. Yeah.
So.
For sure.
Yeah, 100%. So kind of looking at some of these Bitcoin ETFs here, some positions that we do have on. We were looking at Oracle. Oracle's been taking a pretty massive hit. Dan, I know they were in talks with purchasing TikTok, those kind of things. So Oracle's been taking a little bit of a hit. We have a little bit of Beyond Meat on, sold an out of the money call spread on there. So we're just a little bit short on Beyond. Okay. Unity Software. I got a question. Are you a gamer by chance? You're into the world of crypto. I just got to ask. You like to game at all? We're in some Unity Software, and we're short. I need some insight. I'm just fine.
I used to be a gamer. I can't game as much, but I know that being in crypto, there's a big gaming culture.
Yeah.
Unity is not only used for game development, but I think it's also used for like special effects with video, 3D animation. There's actually been a lot of Web3 games that I think have plugged into that. So I think it's an interesting company. I used to be a big gamer. I'm still in the culture a little bit, but I definitely can't say like I'm a hardcore gamer.
So,
are you?
I was not really anymore. It's one of those things where I'm like, oh snap, I forget I have. I want a PC. Like I want to build a pretty dope PC, and then I want to get Steam, and I want to do those kind of things. I don't game like I used to. Sometimes I'll see my Xbox sitting in the corner, and like a couple times I go, blow the dust off it real quick, see if it still turns on, and then I'll play, and I'll forget how much I enjoyed playing these games. It's just such a nice mental activity. I don't know. So whenever I do play them, I remember how much I liked them. But I think I will end up getting a PC, maybe downloading Steam, because I love seeing what some of these developers produce. I think it's so creative. And not to get too far off topic, but also I'm curious about the Web3 gaming and like I'm curious where the getting paid to play kind of thing with Web3 or getting paid to watch these streaming service or getting paid, like where does that, I'm wondering when that part of Web3 is going to develop a little bit more, because I wonder how that's going to have an effect on the gaming culture in terms of, you know what I'm talking about when it's gaming to paid? I forget how the actual term is or how it goes.
Yeah. Play to earn.
Play to earn. I totally forget about that.
Play to earn.
Yeah.
Play to earn was a big thing that came up in 2020, 2021 with the rise of a game called Axie Infinity.
Yes.
And Axie Infinity was a very popular game, I think, in Southeast Asia, where people actually found an arbitrage like a money-making opportunity where it was like they were able to pay certain people in those countries to play for them to farm the token. There's this idea that there was like a token involved and NFTs involved that had value. I think, that meta has kind of ran out. That was like a short-term thing. I think there's still economics to games, right? Like I think what happened there was it was part of that speculative hype bubble where this like play to earn narrative came out. But what happened is I think people just want to play fun and entertaining games at the end of the day, right? Like it can't just be like all right. Like it can't just be all about.
And I think it's more simple than that. Yeah.
Yeah.
People want to play something that they enjoy.
Right. So I think what's interesting though is if you're an MMORPG player, like I used to play RuneScape, World of Warcraft would be another one. StarCraft would be another one. What's really cool is there's these virtual economies.
Right.
And these virtual economies, going back even before crypto was a thing, right? Early 2000s, 90s, if you were part of the internet, there were economic systems that were part of these games. So I think that's where it gets really interesting, is when you introduce like great economic gameplay and then a token.
right,
and have like liquidity and have that native to the platform. I think that's like an interesting angle, but yeah, that like play to earn narrative brought in a lot of speculation and not very many gamers.
Yeah.
So I think we saw a lot of subpar products, but Unity does have like a Web3 plugin. There are, games that use it that are crypto enabled. But yeah, that's my take on that because I was around for that.
I mean, the popularity, or maybe it was just used as a buzzword at the time, but I thought there was some credence to it. So just curious on where we were at on that end of things. But we jumped over here to the TradingView platform. We got Bitcoin pulled up. We see it sliding on the day right now. We might try and head beneath the 100,000, Dan. How do we feel about that? We're getting pretty close.
Yeah, I think we'll get there.
Yeah.
I think we'll get the dip below. I just, we had this run up from April. I think the market's just a little bit exhausted on it. And I think, like everyone said, broader market selling, weakness. We had some deleveraging happen in early October. So, I wouldn't be surprised to see this trend below 95K. I mean, that's the level I'm kind of looking at for it to get really interesting for me to maybe step in would be when I see it kind of get down to 95, which I think we're going to get there. But
it's right around the corner, it looks like.
Right.
Yeah.
I think the thing you have to pay attention to with this market here is it's very reflexive. It's a lot less liquid than traditional markets. So you'll see these big wicks, and these big wicks, and what I mean by that is the wick on the candle, where it could go down and touch 90K, 85K, and then a bunch of resting bids, a bunch of maker bids are in. And because like it's forced liquidations, it shoots down below 90, below 85, and then you see it recover right back up to like 100.
Right.
So, if I'm trying to kind of enter this market and I'm being patient, I might be shorting here, right? Shorting into the weakness if you caught it this morning on the sell-off or the last couple of weeks. But I might be putting limit orders in below 90, around 85K. Depending on kind of like what I'm looking at. And I'm just throwing numbers out there like ranges, but
yeah,
you see in this market, especially crypto, these big auto liquidation events, right? So there's like forced selling from longs getting liquidated at certain levels that pushes these big wicks down, right? It's just, I think the market structure is a little bit different than traditional markets. So if you were to try and step in and buy on some of this, I would have limit orders in at like 90, 85, even like 82. And just be patient and see if like you get that move down.
Yeah. It might be right around the corner because crypto has been extremely volatile. I mean, just yesterday we were trading around 109,000. So now just sitting at about just above 100,000. I mean, we could step down another 5,000 at any moment, even before market close. So we'll see what we get. In spot crypto, if there's no shorting, then there's no natural buyers and a down move taking profits. I remember when Errol was all excited, we broke 5,000 on ES for the first time. Was that like yesterday? Where are we at on ES? Where are we at? ES, we are sitting at... We're sitting at 6,802. We almost hit 7,000, right? Excited about breaking 5,000 now. We've almost hit 7,000, and we're on the way back down, so we'll see how far we do go. But I'm pretty much in the same boat as you there, Dan, in terms of sentiment. I know I'm looking at NASDAQ here, a little bit more at the micros in particular, but I'm of the same sentiment. On top of that, I'm a little bit more bearish because last weekend we had a massive gap up for these indices and these futures products. After that gap up over the weekend, Monday morning, the market opened up and we just straight rallied to the upside with no remorse. So over here, the market had gapped over the weekend. Market opens up and just rips to the upside to a new all-time highs. Of course it does. So with that being said, I was trying to be patient for the market to potentially start to turn around. We got the consolidation. And now we're finally putting in some lower lows. So my goal is to take off some of these short positions whenever we do get to that gap close, which will be sitting at around 25,568. on NASDAQ, which we're pretty close. Right now we're trading at about 25,600. So we could get there even today, maybe tomorrow. But that gap fill is something that I've been pretty keen on. And if we get there, great. Hopefully we do head lower. There's some other price levels that would be interesting. I'm tired of trading all-time highs. I'm sick of trading all-time highs. I don't know how you feel about all-time highs, Dan, but if I got to say all-time highs one more time, I hate saying all-time highs. So I don't know how you feel about them, but not the best trading experience, being directionally speculative in my experience, but I'm glad we're coming off the highs a little bit here.
Yeah, I mean, I think it's interesting because you can look and see kind of what all the news, all the stuff around AI, tariffs, all the just narrative, and it's just like, how much higher can we go, right? before we see a pullback. So, I mean, I don't know if this is the start of a bear market or something bigger, but it's definitely like, you can expect a pullback if we're just ripping to all-time highs all the time. So
of course. It's one of those things. It's like, we know it's coming, but when is it coming? I don't want to take too many stabs looking for that pullback until we actually get it. Am I better off just actually waiting for the confirmed pullback before positioning myself short? So a lot of those thoughts that might cross your mind when trading at all-time highs. But I just got to say, I'm happy that we're finally trading off of all-time highs. We got a little bit of consolidation. And one thing, too, is, especially with the pullback, I'm not very satisfied when the pullback is just like a straight pullback. I'm a little bit more satisfied when we get the rip and then we consolidate for a little bit, right? And then maybe we put in a leg lower. Not too satisfied when we just pull back, without any type of, not too confident in those type of pullbacks. But this one does feel a little bit different. So for being said, we'll be a little bit patient here on NASDAQ. Let me take off these drawings. Really just the gap fill, going to be catching our eyes for the next, I'd say, 24 hours. I bought some puts. We'll go over to the tastytrade platform. I did this one with some of the options. I bought a put at 467. Maybe I could have bought this one a little bit earlier, but just bought one put to express that bearish bias for the time being. I also sold an out of the money call spread. This is one thing that I want to do to express more of an aggressive, I guess you could say, swing position. So we have the out of the money call spread that expires here, season 2. What is this right here? Oh, I'm sorry, those are some other positions. And then the puts and the out of the money call spread expiring by the end of the week. If we head to new lows maybe during the day, maybe I'll just take off this put that we had purchased. But for the call spread, at least, I'm going to try and keep that one on for a few days. But just getting a little creative in terms of, expressing that directional bias, because I know sometimes we'll use the micro NASDAQ. And sometimes you can use QQQ, which is just the ETF for NASDAQ itself. And, you can make the argument, why not just trade the options itself on the micro NASDAQ? The liquidity on QQ for the options is usually better, is one of the reasons why I like to use the QQQ contracts instead. But with that being said, if you got any notes or details on that, Dan, we can take a look at some of the micro Bitcoin and maybe some of the micro ETH here in a moment on TradingView.
Yeah, I mean, I think just because I'm in crypto, that's a product. It's on to admittedly, like I don't look a lot at, so I'd love to kind of have your view on it.
Yeah, what is that? The micro NASDAQ or the micro ETH?
Well, I'd like to know how you set up some of the micro NASDAQ and traditional indices trades, but
yeah,
I think we should look at micro Bitcoin.
Okay,
I think that's probably a little bit more liquid.
Cool. Yeah, let's take a look at it.
So it's MBT.
There we go, micro Bitcoin, right here. You're right, just right off the bat. Just looking at the candlesticks, I haven't even looked at the volume traded, but it looks pretty liquid so far. It doesn't look too bad. Sometimes you can, just by looking at the chart, you can tell a liquid product versus an illiquid one, but it doesn't look too bad right off the bat, I gotta say, Dan.
Yeah. Yeah, I think, like, when I follow these markets and I see these sell-offs, you'll see these massive kind of like cascading liquidations and then quick rebounds.
Yeah.
So if you want to like swing trade it or you want to step in, that's where I say like play some of these levels, right? Because the way this market is set up is there's a lot of automated trading at certain levels. So it's like we hit 100K, people might get liquidated and might move down to 95 and then bounce back to like 100.
Right.
So that's why I say like it's better to have some of your limit orders in or take profits in.
Yeah.
So and just stay patient there.
I got you. Just taking a look around on these contracts. It almost looks like I'm trading NASDAQ right now. I'm not going to lie. I like it. I know we have some of these micro products too, so we could probably trade these a little bit more often.
Yeah, I mean, I'm looking at it on my platform on tastytrade, and I've never traded it, but I'm wondering, kind of from your analysis, what would you be looking at here?
So with that being said, I'm kind of using the volume profile here. Right off the bat, I would be bearish if we stay below 107,000. If we start trading inside of there again, I'd be a little bit more hesitant. Not that we couldn't then get more downside, but that then lets me know we might not be as directional, just because we would start trading back within a zone that has a ton of trading activity, a ton of liquidity. So we have an opportunity to be range bound if we start heading in that zone or start to chop around. So it's not to say we probably couldn't head lower, but I think it adds a lot of uncertainty. So anything below 107,000, I'd be a little bit more convicted into the downside, just based off of what the volume profile is telling us from a directional standpoint. But I will say, I gotta say quickly too, is each product does kind of have its own personality. It very similar, but I will say in terms of how they move, right? They kind of have their own characteristics. But with that being said, what were you touching on?
So I kind of saw you draw this line, and now I see this like standard deviation chart. What are you looking at there?
Yeah.
Like, is it? Yeah.
So in terms of here, just this distribution of volume here, there we go. So that distribution right now, pretty much what I have my eyes on is the value area right here. And that's just going to be the one standard deviation, just the middle of that bell curve, right? Where about 70% of the trading activity or 70% of the data is within the top of that bell curve. So this data being the trading activity, so we understand that 70% of the trading activity is occurring within this one standard deviation. So if price is within this one standard deviation, just statistically speaking, it's going to be more likely for the market to be range bound if we're trading within these price ranges. Just statistically speaking, we don't know when it's going to break out or break down, but about 70% will take place here. And it kind of makes sense logically if we think about it from an order flow perspective, because if 70% of the trading activity has occurred within this range, if there's massive orders that do want to get filled, the price range to be able to fill these massive orders is going to be within this one standard deviation. So then again, it also makes sense why, again, we're range bound, because this has the most liquidity for large orders to get filled. So once they're getting filled, right, it might reverse the market. Once it gets filled, it might reverse the market. So it's just the best area for the whales to fill their orders. And if the whales are the ones that can influence the direction of price in some manner, I want to know where they have the best opportunity to even be able to fill those massive orders. And for them to get enough liquidity to even fill those massive orders, it's going to be where most of the trading activity is taking place. So then that's why we kind of focus in on that value area a little bit more, if that makes sense.
Gotcha. Okay.
Yeah,
for sure. I think that's pretty intuitive. So is there any, let's say you want to take a position here, given the volume, this is volume profile, right?
Yeah, volume profile, correct.
Yeah, given this volume profile, we could see that it moved, the price has moved sort of down to what the right tail, right curve there, maybe 2 standard deviations. So are you looking maybe would you step in and buy, given that or how, it's kind of, if I'm looking at it right, it looks like we've wicked down past that 70% range.
Right. So yeah. I mean, so there's another thing. Whenever the market leaves a level of value, we know auction market theory lets us know the markets are always going to be seeking another level of value. So we're either going to return to this level of value, or we understand we're going to go and seek a new level of value. So if we do a little bit more analysis, I mean, we could find where we have the potential to reach for another level of value, because I mean, we're not looking at any of the actual order flow or what volume is happening alongside this move, which provides a lot more context. But if this is a real move to the downside, if it's an actual move to the downside, we're most likely going to come find wherever the next level of value is, which is most likely going to be a previous level of value, since we're at all-time highs and value areas are developed after hindsight. So with that being said, when we're trading at all-time highs, if we're breaking out to the upside, the market can keep going to the upside because it has to have price discovery. So the market has to keep trending to the upside until it can find another level where buyers and sellers agree on price. But whenever we're trending to the downside, we can find previous levels where we might accept into balance, if that makes sense. So sometimes where we had fair value, where we had agreements with buyers and sellers last week, we could get that same price level again the next week. So pretty much right now, we would just look for another level of value. We found the level of value at the highs. Now we need to go back, do a little bit more analysis, and find those levels of value to the downside to give a little bit more confidence and conviction and a little bit more personality to this trade, or give it a little bit more characteristics. But I mean, essentially, to keep things extremely simple, though, the areas that I like to pay attention to is those value area lows, those extremes, those edges of value, because that's really where the market is starting to determine whether or not we're going to go and seek a new level of value or stay within the current value. So if we look at it even over here, right? This is what I say, this is what I kind of mean when you can deploy mean reversion strategies at the edges of value. Because if you see at the edges of value, there was a couple times to where we reversed price multiple times, and it did that more times than it broke out. It faked each side of the market out more times than the market broke out. We traded in a range for like a week, and we had like 3 fake breakouts to the upside that probably bagged a bunch of longs, which I'd be mad annoyed. But just in hindsight, looking back at it. And then to the downside, there was a couple opportunities where you probably got short a little bit too soon, which I was one of those shorts last week where I was getting short a little bit too soon. But we can see that whenever we start to pay attention to those edges of value. So now here, we can either reverse and bag all of those shorts if that's what the market wants to do. And if it does do that, we then have to deploy risk management, because the market can do whatever the market wants to do. But we understand that context. Now the market's pushing down a little bit lower here. It's looking like it has a better opportunity to actually break out this time and not actually bag everybody like it was doing over the last week and a half, to the upside and downside, really.
Right.
But anyways, that's kind of more of the logic behind it right there.
Gotcha. Okay.
Yeah.
Yeah. I mean, I think this is a good framework to set your kind of base case on, and then
it's a little more
to your point. Yeah. To your point, we got to maybe take a look at liquidity, order flow at some of these certain levels, and then I think that's why previously I was saying, okay, we're looking at 100K. We're touching this kind of key level. I'm sure if we actually do a volume profile or flows, you'll see kind of bids come in at 100K, right? Because I think that's like a level that people are trying to defend, or there might be a little bit more buying pressure there. Yeah. But if we do break out to the downside, the next level I'm looking at, given the way I know how Bitcoin kind of trades, or the futures trade where leverage is, I think 95 to 90K is an interesting level for me, where I might place some bids. So, because if we look at sort of this range we've been in the last couple months, it's sort of been between 100K to 115 on the upside, 120 on the upside. So, we're putting in some lower lows. Looks like the narrative is shift. So yeah, I mean, I think I might place some bids down there.
I think that's fair. I mean, it's right around the corner. We might get it kind of soon. I know right now it's looking like the crypto market and the indices are a little bit correlated here. Andrew, is there any trading on this show? Yeah, so right now we took a couple positions that you missed. But if you missed these ones, we put on some swing positions for this week on NASDAQ, QQQ, live, currently right now. So we have some put positions, and then we sold some out of the money call spreads. Those expire by the end of the week. One is a premium position. And then I also bought a put. So very directional, bought that put for about 467. And then I sold the call spread for about, what did I sell this for? About $2 and some change. So it was about 247, something along those lines. So we'll see how those ones pan out. Really the bias came from looking at our value area low here, which was where we got most of the trading activity over here at these highs. So what we're looking for is the market to break out to the downside. And so far, that's what we're getting. So we're directional to the downside. We thought that the best risk to reward that we could get is if we get short as near to this value area low as possible. So that was a goal. So what had happened was whenever we popped during the day today, I was looking at that as an opportunity to reduce my risk a little bit more, because we popped during the day today. So I was like, if I can get my short position here and as close to this value area low as possible, it's going to reduce my risk a little bit. So that's just a little bit of an update on some of the positions that we have on. We're really just looking at that gap close as our primary target. Since there are a couple short positions on in QQQ right now, maybe we take off the put by itself first and kind of like scale out as we head lower before we hit our final target. Maybe we take off the call spread, or maybe we leave the call spread on by the end of the week, since we know that time is in our favor, since that's a premium position. And then maybe we just take off the debit we paid for the put first on the directional move down. Hopefully volatility picks up too, maybe, pump the juices in the premiums a little bit more too as we take it off. Who knows? We got a couple things that we can do, but the narrative and the whole idea here right now is pretty much targeting that gap fill. We've been very directional. It's one of the first pullbacks that we're getting in the market. So we're gonna be patient. We're not gonna size in too much. And and kind of just be patient. I'm not trying to get too overzealous on the short, right, Dan? Especially when you might have been somebody that's been waiting for it. We don't want to get too overzealous there. So with that being said, we're gonna have to start to wrap here. So Dan, I just want to say thanks for taking the time to hop on for the day. We'll see how some of these positions pan out. We'll keep our eye on the crypto market as well. Big deal, Ash, eMedia, Jared, Andrew, everybody else, thanks for taking the time to hang out with us today. Be sure to stay tuned for the Dr. Jim coming on next. Dan, we appreciate you as always. Anything to add before we head out for the day, Dan?
No, I appreciate being here. I learned a lot. This has kind of been one of the first times I've really taken a look and had somebody provide a framework for some of the futures and some of these other products. Everyone in the chat, appreciate you all. I know you're kind of always here with us, but if you guys want to talk more and get access to talk with me personally or talk with Arrow personally, we're in Discord. tastylive took over. They've launched a Discord, taken over the Tasty Crypto Discord. So if you guys want to chat more and really dig into some trades or bounce some ideas off of us, I'd say check that out. And I can drop that in the chat here for y'all. I can drop an invite. But I think it's been fun, man. I definitely want to do this again, and I appreciate you having me on.
As always, Dan, thanks for hopping on. We'll be talking here soon. Ash, in terms of the trades out, I got you, brother. Got you. We'll push out some of these more QQQ trades. Again, they expire by the end of the week, but we're a little bit more active this week. So thanks for taking the time to hang out with us on this show. Be sure to stay tuned for the Dr. Jim coming on next. Dan, we appreciate you. We'll catch everybody next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday market crash edition of what it is that we are trying to do. I don't know what you guys are doing out there, but man, we need somebody to step in and save this market. We are now almost 2% off of all-time high, so it is not good. It is not good at all. But thank you guys for being here and being here with me and being here with all of us here for these final moments of the stock market. At least we can go out together as a team. If you are watching over on the Tasty Live network, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can communicate with your brethren for one final time there in the YouTube chat. And of course, you can ask me a question in the YouTube chat. And I'll try to get to as many as I can here right around the second half of the show. But John, bring us into the market. Guys. I don't know how many times we have to talk about this, but we're going to do it again here for another few seconds. EMI S&P is down 68, okay. Risk-free instrument down 422, okay. Boomers down 250, okay. Got it. Russell down 31, okay. I got it. Guys, I don't know how many times you have to talk about this, but I am here for you. I am always here for you. You guys are first and foremost when it comes to what I am trying to accomplish. I gave you Uber and I gave you Palantir. I served them up on a silver platter. I'm bullish Palantir, you need to be bearish. You make a bunch of money. I'm bullish Uber, you need to be bearish. You make a bunch of money. Again, what are we, exhibit double Z at this point? Like, I don't know where we are in terms of the number of exhibits, but the evidence is overwhelming. The evidence at this point is absolutely overwhelming. There's no way that you could possibly consider tailing me on my next earnings trade, which is going to be tonight, of course, because we have AMD. But I don't know that I have felt this good about an earnings trade in quite some time. So keep that in mind as you process what is indeed coming on down the chutes with AMD. I think we've got McDonald's there in the morning. And so lots of things happening. But guys, look at this market. We'll talk about Uber and Palantir here in a second. I don't want to talk about those guys just yet. We'll let them fester for a couple extra seconds here. But EMI S&Ps, they're pretty much on the lows for the day here. This is maybe a little bit off the lows, not exactly the low. You can see that the low today was, I'll just use the daily candles for now. We'll get to the Errol Coleman settings in a second. The low was 67.86. So yeah, we're about 25 points off of the low. So ES was down about 100 on the lows there. NQ, NQ was at least 60, 70 points lower. Yeah, we were down to, 601 was your low, and we're now 664. So, we're 60, 65 points off the lows, here today. So, or here right now, I should say. And so NASDAQ was down, a crisp 500 at one point earlier today. The boomers, the market is so weak today. Even the boomers can't save you, which that's not good because they're usually the ones that we turn to. Right, they're the ones that everybody turns to, right? When Gen Xers need something done, when they need something done, who do they turn to? They turn to the boomers. When the millennials need something done, who do they turn to? They turn to the boomers. When Gen Z needs something done, who do they turn to? They turn to the boomers. They're not going to do it themselves, right? I mean, Gen Xers, they'll probably get it done themselves. It may be a shoddy job, but they'll get it done. Millennials will try to get it done, but we can't get it done. But the Gen Zers, they won't even try. Like they need to mail it in right to the neighborhood boomer to kind of get that guy done. But the boomers here down 283 on the day. Russell's down. Shifties, man, look at the shifties down 67. Oof, man, where are my Hunt brothers at? Yikes! So gold, man, the market is so weak. Even gold getting hammered. Yeah, it's just silver down 94 cents. Yeah, so they're even taking the metals out, man. They're taking gold out. They're taking silver out. They're taking the market out. And so, this is it. It's all up to AMD. Like, it all comes down to this, right? Like, AMD is now slated with, the last possible opportunity to save the market. Like, it is indeed up to AMD to kind of, save Christmas here. So will it be able to do it? I don't know. And how am I going to play it? You got to wait and see. We're going to talk about that guy here in a couple of minutes. But I do want to talk about Uber. And I want to talk about Palantir here for a couple of minutes. But I see you guys in the chat. Man, look at you guys. I see Ranch in the house, man. Weiss in the house. Kimberly Thomas in the house. Danish Dynamite showed up. Man, look at you guys. I appreciate you guys so much. Theta Traders here. Man, Miko's in the house. Paul Heyman in the house. Man, Gary Bryant Foster. Man, I appreciate you guys so much. Look at you guys. And so, all right, what I want to do, let's talk about Uber and let's talk about Let's talk about Palantir. Man, look at Starbucks. Wow, I didn't even, I wasn't even looking at this because I was so focused on like Uber and Palantir and then obviously what we're going to do today for AMD and McDonald's. But man, look at Starbucks. I mean, they're really taking this thing out. Man, we picked a really, really terrible time to, dollar cost average into this position with our little leap option right here, this long 55 call. You can see we've already very quickly hemorrhaged a couple dollars on that position, which is not that amazing. And I mean, the P&L Open Bros, they're having a field day with this position. And so pretty soon, like, we're just going to we got to do something. I need like a thicker black marker because I can do this job, right? Like we can do this little deal, but it's so thin. It's so like, it's such a fine point. It takes me too long. I need just like a quick little like boom, like highlighter black and it's gone. But for now, man, it looks like the P&L Open Bros, they're going to have the last laugh on that guy. But again, I mean, we're long-term investors in Starbucks. I said that from the very beginning. This isn't like a Best Buy where like it was actually a trade, but then I kind of snuck it into the inventory there at the last second. Like it wasn't like that at all. This was intended to be in a long-term position from the very beginning, which was last December. So it's been 11 months and I intend to hold this position for, a good bit longer, essentially indefinitely. And so the thinking with a long-term position, just like it is with you guys out there with a long-term position, like when you have a long-term position on and the stock gets absolutely clobbered, like what do you do? Do you panic? Do you run for the exits? Are you like, man, I'm out of here? Like, no, of course not. Like you sit tight and you stew in the bathtub of filth. I mean, that's what you do as a long-term investor. In fact, that's arguably what you do best as a long-term investor. And so that's obviously what we're going to do here. We can just stew in some of that, some of that drip coffee there at Starbucks. That's very similar to a bathtub of filth. And so Starbucks at 78, it's not great. It's not great at all, but we sit tight and we do nothing. But let's talk about Palantir. And let's talk about Uber. Okay, so, Palantir is so funny because I was watching it last night, of course. I saw the number print, and let me go to my chart here. Now we are going to unlock the Errol Coleman settings. Don't forget, guys, whenever you're on the Tasty charts, if you click on a 1-minute candle or a 2-minute candle, my man gets a 18-cent royalty. He gets 18 cents on the 1 minute, 24 cents on the 2 minutes. So whenever you click on one of these guys, you are unlocking the Errol Coleman settings for your trading pleasure. And so understand that just to help him out as a young kid, he's trying to make his way, like he's in his early mid-20s, whatever. It's like, we got to do our part, man. Like we really failed, right, Sas Grande back in the day with that second Range Rover. Like we couldn't do it. So now we have a second chance to redeem ourselves here with the Errol Coleman settings. And so I would not take it lightly. So I'm going to click on the 2-minute chart, of course, to get him a little extra. If we go all the way back to right after the close yesterday, yeah, there it is. So I saw this candle. It was so funny. And I do this oftentimes on earnings. I don't know how you guys treat earnings releases. But once the number comes out and I see the first initial big, if it's a big move, if it's like a muted move, then I don't always do this. But whenever I see the first initial big move, like I'll watch it for maybe 30, 45 seconds, but then I'm like, it's over. It's over, Johnny. Right? Again, channeling our inner Sas Grande, it's over, Johnny. And then I'll usually close my laptop. I'll be like, oh, that was a winner or that was a loser, whatever. And it's so funny because many, many, many times it reverses course. Like so often it does indeed reverse course. And then the next thing you know, it's exactly where you didn't think it was going to be. And that's what happened here with Palantir as it rocketed higher. Everybody was excited. The humans were excited. The robots were excited. Big brother, little brother, everybody's pumped. And then boom, the shorts came out. The Michael Burry's out there just buried the stock. And now we're down $16. And so what are we going to do? Well, there's not a ton left in this trade. Only $1.27. Oh, let me get off my black here. Only $1.27. And so, it doesn't really make a ton of sense to me to try to salvage this $1.27. Now, some of you might be saying, Jim, I'm looking at your portfolio, man. You're hemorrhaging cash left and right. I would try to salvage whatever you can, wherever you can salvage it. And that would be a very fair point there, sir or madam. But when I look at this, it's at 190. All kidding aside, we've got 3 days left. That's not a lot of time, but we are talking about Palantir, and this thing can move quite a bit, even on a non-earnings day. Just a regular ho-hum Tuesday, ho-hum Wednesday, whatever. We're just one tweet away, man. We're just one, hey, you should buy stocks now tweet away from this thing being at 230. This thing being at 247. Right, and so I'm going to sit tight. There's not really a ton of juice that can be reclaimed if we decide to exit the trade right here and right now. So that doesn't really make a ton of sense to me. So I'm going to sit tight with Palantir. So Uber, But of course, you can pour one out for Palantir if you'd like to. Natty Light Ice, Banana Daiquiri, maybe the Beast if you're going that route, although I would not go that route. No, I would not go that route at all. But whatever you've got handy, it would certainly be appreciated. So that's Palantir. Now you go to Uber. So this was a butterfly, and I've said this many, many times. And some of you even kind of brought this up. It was either yesterday in the chat after the show, or maybe on Twitter, maybe emails. I can't keep them segmented in my mind right now. Mondays are not the best day for butterflies because even if you get the move that you want, you don't typically get paid as handsomely as you would like. Like a lot of times you do a butterfly on Monday and it works out. It's not necessarily going to have quite the same ring to it when it comes to the profitability and the profit potential as to, relative to if you did like a Wednesday or a Thursday at butterfly. It's obviously going to be much, much more effective if you get the move that you want. Okay. Those are kind of the gotchas associated with the Monday butterfly. But if you've been following the show for, I'm going to say the last 4 to 6 months, you've seen I've really softened up to the Monday butterfly because yes, you are giving all that up. Those are gotchas. Those are very real gotchas. And you have to understand what you're signing up for. But whenever there's a gotcha, there's going to be a gimme too. So what is the gimme that comes alongside this gotcha when it comes to this Monday butterfly? Well, I'm not going to be able to make as much in terms of getting the move correct, but in the event that I should get the move incorrect, which it doesn't happen often, but it does happen to me from time to time, this is going to give us more chances to be profitable on the trade. So we don't have as big of a runway in terms of we nail the direction the following morning, I'm looking to score big profits. That's not necessarily there. But now you can see, this is a great example. If we had done this butterfly on Thursday going into Friday, and we got the same move from Uber down $5, it would be over. It truly would be over, Johnny. It's done. But thankfully, it's only Tuesday. We've got a lot of time left in this week. Now, maybe Uber is just going to drift lower and it's going to go out to pasture and this trade's going to be done or whatever. But hey, we're not that far away from sneaking into having this long call at the 96 strike be in the money. And that's what that's the first hurdle that we need to jump over. And in a lot of ways, the only hurdle that we need to jump over in terms of bringing this trade back. And so we've got 3.5 days left. We've got the rest of today. Maybe it's a bit, maybe it's a bit grandiose to refer to the rest of today as a half a day. But I don't know. The VIX is like 1920. The markets are moving. Things could happen here going into the close. I like the fact that we still have a few opportunities to strike on this Uber butterfly. I like the Uber trade more than the Palantir trade. Just because I feel like we have more opportunities to make money on this Uber trade. We're also a little bit closer than we might be with Palantir. I need Palantir up, about 5% from 190 to 200 to kind of bring that guy back. Uber, I only needed up from 94.40 to 96. Now that's, our work has just begun at that point, but that's kind of the start of, big things in the future for this butterfly. So it's marking at 96 cents. Again, very similar to the Palantir situation. You could make the case that I should close it now. You could make the case that I should save my dollar. And if you have a similar trade on, again, I don't know why you're following me. I don't know what more I can do. I'm going to try to figure it out, but I have laid it out there about as clearly as I possibly can. But if you are in a similar trade, you could save the dollar. I don't have a huge problem with that. But to me, when you do a defined risk strategy, so this actually applies to either Uber or Palantir. When you do a defined risk strategy, you've got to go into that thing with the understanding that, okay, I'm willing to die with this position. Like I am willing to just put it in the ground with me, man. Like put it in the ground next to me. And if we get back to a scratch, just remember to roll it out into the future. Like don't let this thing expire with me. I've already expired, but keep this thing alive. Keep this thing rolling forward and see if you can get it back to some kind of modest profit level. You should go into every defined risk strategy position with that type of mindset. You should size the trade such that you can take it all the way to nothing if that's what it comes to. Now, that doesn't mean you have to do that per se, but that's the mindset that you should have. And so most of the time, this is going to be my default setting. Most of the time, I'm kind of a set it and forget it type of thing. We're adjusting where it makes sense. But in terms of closing out early, I don't really like to do that because I feel like there's been so many instances just in my own personal anecdata, which, take it for what it's worth. It may not be worth very much to you on your end, which I would not take that personally because that's probably true. I think that so many of these have come back in the last days, the final week, when it's like, man, this thing was gone. It had no chance. It had no whatever. And then the next, it's back. And so, is there any edge here? I don't think so at all. I think it's all going to essentially even out in the end. And so you can kind of, see where the wind blows you when it comes to making a decision like cutting something early as opposed to leaving it on and letting it run. I think ultimately it's going to be your call. But I do think there's some merit to being consistent with whatever you do. Like, have a default setting. Like, what is your default setting when it comes to this specific situation? You miss an earnings trade or some other trade, maybe around a binary event or not even necessarily around a binary event. There's a big market move. You're able to salvage something that's clearly economically significant. What do? Do you salvage it or do you just let it go? I think you need to think about that and decide what your default setting is. Mine is to let it go. Mine is to let it ride and decide, as my boy John would say. And so, that's why we're gonna play this. We're gonna play this position. And so that's Uber. That's Palantir. And all right. So now what I want to do. Okay. So I see you guys in the chat, man. We got 400 or 500 people here. Are you guys ready for this? Are you guys ready for this? Okay, I got it. Guys, I've been thinking about this trade for a really, really long time. I've been waiting for this moment. I don't know that I have felt this good about an earnings trade. It's been a minimum of 12 to 24 hours. And so when it comes to how you're going to handle this information, you need to understand my own personal confidence level. I don't think I've been this confident. I don't think I've had this much conviction around an earnings trade like what I have with AMD. And again, you don't even need to apply. You could use the technicals, go for it. Like, knock yourself out. You can use the fundamentals. Go for it. Knock yourself out. But for me, it's really more about just thinking about AMD as kind of a philosophy. Like, let's think about AMD as kind of a way of life. And let's understand that, sure, it's 50-50. Sure, earnings are basically a coin flip, but not the way that I see it. Not the way that I see it at all. So if I go into AMD here, looking at this stock, not MD, but AMD. Looking at this stock, you've got the stock at 252. I'm looking at this and I'm just thinking, how could you possibly look at AMD? You could look at a chart, you could look at a 10K, you could whip out the statement of cash flows, like whatever you want to look at. I just don't know how you look at a stock like this and you can be anything other than mega, mega, mega bullish. I just don't know. And I mean, again, if you can't beat them, you join them, right? We couldn't beat Uber, we joined them, we got crushed. We couldn't beat Palantir, we joined them, we got crushed. And so I think tonight is going to be our night. So I think tonight, this is when the 17 in a row Dr. J streak begins. It all begins tonight. So AMD to the upside, but I feel so good about this trade. I'm going to do something similar as to what we did with Apple and Amazon. Now, we got burned on those two, but again, I'm feeling a bit of earnings mean reversion might be taking course here tonight and maybe into the near future. So what I want to do, I'm going to do something similar. I want to do an at the money call spread as kind of my main directional play, but then I also want to go out in time. Let's go to the 45-day cycle. I mean, we're at the 45-day cycle today, which is nice. And so that's a little bit serendipitous too. I think things might be lining up for us here this evening. Let's go into the later cycle, the 45-day cycle, and let's sell a put spread to help finance that long call spread with the at the money strikes. In fact, I might even move it just a titch out of the money to kind of take down the overall cost of the call spread. So if you go into AMD, and then we're going to do McDonald's, of course, here in a minute too. But if I go to AMD, if I buy a 250, 260 call spread, you're going to see that's about 448. And that's basically, I mean, this is very standard, right? You've got the stock at, hold on a second. I've got the stock at 253, basically a 50-50 proposition. I'm just straddling the stock price with a vertical spread. This is a very standard way to play earnings and to take a directional shot. Really, any directional shot doesn't have to be associated with earnings. I mean, it can be, but it doesn't have to be. And the cost of this is going to be a little less than $5. So it's going to be about $4.50. I like this trade a lot, and we may go with this one. But I'm actually thinking, let's move it just a wee little bit out of the money, just so that we can potentially, hold on a second, just so that we can potentially save a little bit of cost on the strategy. So instead of a 250, 260, what if I do a 252 and a half, 262 and a half? So now I've taken the cost down to $4. So now I'm risking 4 to make 6 Now, again, I need a slightly bigger move out of AMD for this thing to cash in, of course, and my probability has dropped just a tiny little bit. But in the spirit of being somewhat mindful of the size of the stack of cash that we are soon going to be lighting ablaze, I think this makes a little bit more sense. Plus, we've got the janky strikes in there, which I think that's a little bit, there's some kind of good luck that happens with, the janky strikes. Again, in the words of Michael Scott, I'm not superstitious, but I'm definitely a little stitious. And so with 252.5, 262.5. That's one of my all-time favorite lines from The Office. I mean, I laugh about that just randomly. I'll just be sitting around thinking about it. I'm laughing right now thinking about it. It's such a clever line and so perfectly delivered. I know I didn't do it justice there, but man, that's some good stuff. So let's do 252.5, 262.5. And we'll call it a day. So this will be trade number 1 for AMD. Looks like about 408 on the mid price. Let's see if we can get filled. Market's kind of chopping around here, kind of waiting. It's obviously waiting to see how I'm going to play AMD, and then it's going to, make its next move, of course. I'll try 410. I think this will probably get filled. Okay, no takers at 410, so I was wrong about that. Let's try 413. Oh, there you go. So we got filled on 410. Okay, perfect. Now, let's go. So that's in the front week, 3 days to go. Let's go to the December cycle. And I want to sell a put spread to help finance this long call spread. So if I sell the 240 put and I buy a 230 put, I'm basically picking up the cost of the vertical spread. And so clearly, if AMD crash boom banks tonight, like we're going to be in the hurt locker. Like it's going to be me, you, Jeremy Renner, and that may be it. It's a pretty small space. I think that's all that can fit in the hurt locker, but it's going to be pretty bad. Like, it's not going to be amazing at all. But again, guys, do you really think AMD is going to go down tonight? Do you really think they're going to go down tonight? I mean, that's crazy, man. That's crazy talk. And so some of you are thinking, I didn't think that until you put your bullish trade on. Now I'm pretty sure it's going down. But again, I'm here for you guys, man. I'm here for you. Don't you ever, ever, ever forget that. But let's do this 240, 230 put spread because I want to get McDonald's on too. So this is going to be our second piece to the AMD puzzle. And but I want to do a little McDonald's action because McDonald's, I don't feel as good about McDonald's, but we'll give it a shot. We're gonna do a little something different in McDonald's, something I haven't done in a little while here. Just kind of an old timers play for McDonald's earnings. So McDonald's is in the morning, by the way. So AMD is tonight after the bell. And so assuming we make it to tonight, of course, which we might not. I checked Poly Market, and I know it's election day in a couple of states across the country. And I also checked, is the stock market going to make it to 4 o'clock? And it was only about a 25% chance. And so I don't know that we're even going to see AMD earnings. But if we do, it should be pretty interesting. Let's go to McDonald's. So McDonald's, I'm kind of thinking here, McDonald's is in the morning tomorrow morning. Let's go to the 45-day cycle. Let's just do something kind of standard, man. Like standard, plain vanilla, Betty Crocker strategy, nothing super fancy, nothing super exciting. All that's going to happen tonight with AMD as it goes down, 5 to 10% on the earnings release. Let's go. Let's just do, I can't do a strangle because I don't have enough capital in my account to do a strangle. But let's do kind of a wider iron condor to maybe get some of the effects of the strangle while still being able to define our risk. I don't love iron condors. I've been very, open and honest about that here on the show. I feel like they're more difficult to make money with than people realize. Everybody gets caught by surprise, I think, with the iron condor, especially like your $5 wides and even your $10 wides. Like it can just be challenging to make money because you have all that friction that you're bringing into the strategy from the longs that have defined your risk. And of course, that's the calling card of the iron condor. That's the biggest benefit to the iron condor. And so that's what makes an iron condor. But the big gotcha there is all that friction that comes in. It just makes it a slower moving strategy. And so I'm kind of thinking, man, let's try to mitigate the slowness of that by widening out the wings. Maybe we do like a $15 wide iron condor in McDonald's. I mean, still, if we're risking 10 to make 5, we're still only risking about 3% of our account. And I typically like to keep my defined risk between 1 to 3%. So we'll be a little bit on the upper end of that range, but still, within reason, in my opinion. So the strikes we've got, let me see. Did Amelia write this down for me? She did. 285, 270. We may have to adjust this a little bit, but she had 285, 270, 315, 330. Wow, I don't know. That looks pretty good. I mean, we're pretty delta neutral, which you can see that right there.
We're collecting almost exactly $5. We're going to risk about $10, right? Our probability, our pop is about 60%, it's 58%. Our P50 is 68%, which is super nice. And so everything is looking pretty solid. It's looking pretty good. And it's not a directional move. I mean, again, I've given you guys so many fadeable opportunities. I thought, let's just take a little breather. Let's just take a quick little timeout, a little 30-second deal just to kind of collect ourselves. And we'll have plenty of opportunities to play, directional shots on the upcoming earnings here in, the near future. Although I don't know, like, who do we have? Well, I want to get to you guys. I don't want to look at that now. Let me put this guy on because we've been kind of dawdling here through these earnings plays. Let's go to, let's see, McDonald's, 505. Do 501, see if we can get filled. Yeah, see, sometimes too, the liquidity on the iron condors is not great either because, again, you've got 4 legs you've got to fill. So it's a little bit tricky. But I'll try 499. I can't get filled at 499. They're driving a hard bargain, man. 497. I don't really want to chase away all my profits here. Can't get filled at 497. Wow. Is Vinny running these McDonald's markets? Vinny Batista? I know he's frequently running the MNQ pits, which would explain the craptacular spreads that we see in there. But 495. Can I get filled? All right, so we finally got filled. So 495 on McDonald's. But you guys saw, I mean, McDonald's is not necessarily a super illiquid stock. It's not like Apple, Facebook, Netflix, whatever. But it's not like, we're not talking about something super illiquid either. It's not like Chipotle. I mean, Chipotle is incredibly illiquid. Even I mean, they're probably not in business anymore. But, the artist formerly known as Chipotle back in yesteryear, when it used to be a publicly traded solvent company, I mean, the liquidity in there was not very good. And so it's not like that either. It's going to be somewhere in between. But you guys saw it just had to give up, 8 or 9 cents in Discovery to get filled on that eventually. And so that was, obviously not super desirable. But anyway, we're in McDonald's and we're in AMD. But now let us see where you guys are at. So let me go ahead and do, let's see. You guys are already, oh my gosh, this is so good. You guys are already trolling me. Oh, I love it. I absolutely love it. Look at you guys, man. I love it. Joel James says, Lisa Sue, I don't know who that is, but Lisa Sue just texted me. She is enraged to hear Dr. Jim playing AMD the upside. Man, I'm joining you guys now. We might win this. I'm not on my own. Like, there's strength in numbers. You got a little group think. Like, I'm excited. You're excited. Man, we're all going down together. It's going to be awesome. It's going to be absolutely awesome. And so let's go. Let me see if I can find somebody in the middle to surprise and delight. Let's see. Well, hold on. Archer Fire 77 in the house. What's going on there, Archer Fire 77? Archer Fire, I don't recall you having been in the chat before, so welcome to the show. Maybe you've been in the chat and I don't remember. That's very possible. I mean, blueberries, I'm only at about a 50-50, every other day type of split right now. So I could be misremembering that. But if you've been lurking in the shadows, hey, thank you for being a part of what we do. It just really, truly means the world to me, so thank you, my friend. But Archer Fire 77 says, hey, Dr. Jim, I feel the pain at Starbucks. I'm done buying puts and calls. It's time to be the casino selling premium and let everyone else have fun. I 100% agree. 100% agree. And I mean, 99% of the time or 97% of the time, I mean, that's obviously what I'm doing. I mean, that's what our whole network is built on. I really just wanted to kind of mix it up a little bit and just kind of appeal to our stock owners, our stock owning brethren that are also watching the network. And they're like, hey, man, like, I've been owning stock for so long. I've owned these indexes. I've owned these individual names, whatever. And I've made obviously a killing the last 30 years or whatever. But now I'm thinking, man, there's got to be more to this. There's got to be more strategy that I can deploy. And that's obviously exactly what we do every single day with selling premium and all the things we're doing around the edges. And the Starbucks has been a case study in kind of taking what is otherwise kind of a long stock holding that you plan on hanging on to essentially indefinitely, and then adding short premium to that position, around the edges. And so that's what we've been doing, but it has been painful. It has indeed been painful. But I like your approach. I obviously love your approach. I mean, I think that that's the way to play it when it comes to, your foundation in the market as an active trader. Having short premium as your foundation, it just unlocks like so many possibilities for you when it comes to the different things that you can do. And so I love it, Archer Fire. And of course, if I can ever help in any way, just let me know, please. I am more than happy to do so. And so look at the market getting closer to the lows now. NASDAQ's down to 630. Got the Russell down to 44. Man, they're really taking them out. They're taking them out. AMD's our only chance. It is 100% our only chance. And so let's see. Oh, Jackie W71. Here's another surprise and delight. I'm going to do a double dip. George Costanza on the surprising and delighting. Jackie W71 says, Dr. Jim, why not sell a call against the Starbucks leap and turn it into a poor man's covered call? Jackie W71 says, probably too late to do that now. Well, it's not super desirable that the stock is already down today. I mean, we just did this yesterday. And so in a better scenario, it would be the same or maybe even up a little bit. The reason why I didn't want to sell a call against it is because I wanted this to simply be to simulate or mimic what a long-term investor would do when they own stock and they want to average into that position to improve the overall basis on the original shares. Typically, when a long-term investor does that, they're not looking to sell calls against that because most of the time that's a buy and hold type of situation. And so our Starbucks, case study here that I was talking about just a couple of minutes ago, it's intended to kind of have that buy and hold foundation to it. It's intended to kind of have that we're just sitting on it feel to it. And then from time to time when it makes sense, that's when we sell premium. And in my opinion, and this may be completely wrong, but the way I see the markets, when the stock is down significantly and you own it, that's not the time to sell premium against it, right? The time to sell premium against it is when it's rising. It's when it's moving higher, when you're getting better prices on the premium. Because again, remember, Jackie and everybody else for that matter, what is our objective here? Well, obviously the objective is to own the shares and make some money and things like that. But when it comes to what is the alternative, I guess that would be a better way to put it. The alternative here is just holding the shares and not doing anything. So if I was just going to hold the shares and collect dividends and whatever, but in terms of the active strategies that we could deploy around the position, the alternative, if I'm a long-term investor, is just hold the shares and just go live my life. And so I want that to kind of be our foundation. It has been for the last 11 months now, and it's going to continue to be. But when the stock rallies, that's when we pounce. When the stock rallies, that's when we jump out of the shadows and we're like, all right, now we're going to sell some premium. We're going to do some different things, in the stock. If I let me bring up Starbucks really quick. If we just look at the activity page for Starbucks, if I go back to last year, and I know I've done this a couple times, a number of times actually, but I think it's good. We haven't looked at this in a while. It's been at least a week. And so let's bring this guy up just to show anybody that might be new. Right? If you're brand new and you're like, hey, what has he been doing in Starbucks? Oh, let me go to, hang on a second. Yeah, I got to filter by Starbucks. I was like, that's too many trades. But so you can see I bought the shares here on December 27th. But then look at all the different things I did. I sold premium for 93 cents. I bought it back for 16 cents. I sold premium for $1.60. I bought it back for 31 cents. And then we did some earnings trades. And then up here, we sold some premium for $1.33. Bought it back for 29 cents. Sold some premium for $1.90. Bought it back for 93 cents. And so on and so forth. And so there's just been a lot of premium reduction, or basis reduction, I should say, along the way via short premium. And so even though we paid $92 for the shares, our basis on this position is not 92. We should actually figure out what the basis is. I don't want to do it now because I want to get to some more of you guys here. But yeah, so we've been doing things around the edges, but I've been fairly thoughtful and patient with when I've done things because I don't want to sell a call right now, Jackie, and then I get caught in a Starbucks face ripper where it's they actually introduce fresh coffee. And I mean, that would be mind blowing. Do you understand how the market would have received that? That would be so new and such a surprise and delight that I could see the stock going up 10, 15% in a day just on that news. And so if that happened, I don't want to get caught with a short call if that happens. So hopefully that helps a little bit. But let's go back to the beginning. Let's see where you guys are at. Man, I see you guys. Big Deal Donuts in the house. What's going on there, Big Deal Donuts? Brian Dowdy in the house. Half is E17. Hey, Dr. J, I got assigned on eBay. 85 strike last Friday. My basis is 84.50. Under the assumption I don't want the shares, but don't want to take a $3 to $4 loss, how would you navigate selling a covered call? Yes. Okay, so you don't want to take the shares. This is not an investment style covered call. You just want to be done with the position. Okay, perfect. Your basis is 84.50. You took the shares at 85. Here's where you go in. Right, you don't have any earnings coming up. You have a dividend coming up, but there's no earnings on the horizon. You go into December, and I would just sell. I would sell the at the money strike. I would sell the 85 strike. That's the perfect strike for you to sell right now. It's still a little bit over your basis, so you do have a little bit of room there, not much, but a little bit. You're going to get, looks like a little over $2 on this, on this call, and now you're going to potentially be able to whittle down your loss significantly over the course of the next 45 days, especially if eBay actually cooperates and moves a little bit higher. If it stays here or, any number between where it is now, 81 and 85 would be a great number for you. And then, of course, if it rallies above 85, you're going to be able to get out of the trade for a profit at some point. And so I would sell the 85 strike. I think that's the perfect strike for you, given kind of where you're at and the context that you have on the trade. So Theta Trader, what's going on there with Theta Trader? The Dr. Jim or a Dr. Jim or not equal to Dr. Jim. I'm not sure what that symbol means. Equal sign, a equal sign. That sounds like some coders language that I'm not familiar with. I can always tell when they try to sub in store brand Dr. Jim. Yeah, like that Publix brand Dr. Jim. Like that Kirkland Dr. Jim? Kirkland Dr. Jim will be an uptick Dr. Jim, no question. Just like that Costco drip, man, it's comfortable. It's comfortable. Like 1,000,000%. Not only is it $6 for a 3-pack of jeans, but man, they're the most comfortable jeans that you've put on in many, many, many years. Like, don't fight it. Like, there just comes a point in your life when you're just like, this is what we do now. Like, this is where I shop for clothes now. Like, you guys know what I'm saying, 1,000,000%. Wow, look at the NASDAQ down 500 now. Yikes, man, look at that. They're taking out the lows. Got ES down 84. Man, you got the Russell down. Look out below. Whew, it's getting nasty out there. And so hopefully AMD can save Christmas. Let's see. Hero, EST, says something a bit foolish and sold 20 SPY puts. Yikes. 10 of them are cash secured and 10 are naked. I used 2x leverage, strike 643 to 666. Today, as you can imagine, I am quite down. Do I any tips? Ooh, that's a big position. I mean, it's a big, I don't know how big your account is. So it actually could still be a small position because I don't know how much capital you're working with. And so generally speaking, in an absolute sense, it's a large position. But if you're working with a 7-figure account, it's not necessarily a huge position. And so it depends. It obviously depends on your account size. But when it comes to, you've got 10 cash secured and 10 are naked, you've got strikes between 643 and 666. So, I mean, my best piece of advice there, Hero, is don't try to be a hero. And again, that goes against your username. It goes against your handle. But I think that's the most important thing to remember right here. And so you're getting hurt on a day like today. You're potentially getting hurt a good amount because you're getting hurt on the delta move. You're getting hurt on the volatility move. That's the thing about short puts. They're great trades, but you get double whammied. You get double whammied if it goes against you, where you've got the delta impact and the Vega impact. If this is giving you fits, now, again, you have to understand, and everyone needs to understand, like you're going to be taking some kind of loss. And so the loss itself might be giving you fits. Of course, that's what happens when we take any type of loss. But if this is a situation where you're like, man, like I'm really concerned about the next, 10 or 20 points in, S&P 500, then that's not a situation where, you can probably hold that position too much longer, in my opinion, unless you're trying to just take a shot. Like if you're trying to take a shot, then that's a totally different thing. But if you're looking for something sustainable, you might just need to cut half the position, man. Just cut half of them and just go with the 10 cash secured, or even go with the 10 naked. It doesn't matter a ton. It depends on your account size and the account type. I assume it's probably a margin account because with an IRA you're kind of cash secured on everything that you do. So I'm going to assume it's a margin account. I would, if this move is giving you problems, I would cut the position in half right now. And I think that could give you a lot of relief. It could allow you to trade, to trade this thing more objectively. Because right now, if I bring up SPY, you're not even tested. Like you're not even tested on any of the strikes. And so in my opinion, the move right now is not to do anything. So if your size is in check on entry, the move right now is nothing at all. Like you sit tight, you stew in the bathtub of filth, and you're like, hey, I've still got another. I mean, if your strike is 666, not the greatest strike choice in my opinion, but if your strike choice is 665, let's say, to dress that up a little bit, you've still got another 10 points. Like you still have another 10 points of room that the market can fall before it's tested. And so if you're kind of feeling a lot of heat right now when you haven't even been tested yet, then you're probably too large. I would just cut some size and then you can trade what's left in a more objective manner. That's what I would do. And so, man, let me try to get to one. Wow, I can't believe the show is over. This is crazy, man. This is crazy. We're trying to get done a couple minutes early now so that we can kind of move the shows around and get them started on time. So I'll get to one more. Let's see. The Preston. I see Ashvin. I appreciate you. Or actually, hold on. Orgdenu. Greetings from Italy, Dr. Jim. What about a long call on AMD? Wait a second. Orgdenu, 252, 262 and a half. Is that not what I just did? Look at this, Orgdenu. Look at this. That's exactly what I did, my friend. That's 1,000,000% exactly what I did. It's not even my opinion. It's right there on the screen. That's a fact. So, man, I'm lining up with Orgdenu without even knowing what he wanted to do. Guys, this is it. This is the one. Man, fade this trade at your own peril. Like, this thing is going to work. I'm 19% sure of it. Like, man, I feel so good about this trade. That's good stuff there, Orgdenu. Ashfin, I see you, my friend. And then the Preston, I appreciate you. The Preston, you are the man. I really appreciate your insight, man. I appreciate you. Appreciate me. Very, very much. The time has come. McDonald's earnings tomorrow before the bell. Are we buying quarter pounders or selling nuggets? Man, we're doing a pairs trade. We're buying the quarter pounders and selling the nuggets at the same time. We're playing for no move. We're doing the Iron Condor, a non-event in McDonald's. That is our play for tomorrow morning. But I got to go, guys. I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
What's going on, everybody, and welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade. I'm your host, Jamal Chandler. When it rains, man, when it rains, it pours, right? Can you believe it? I'm not talking about the stock market. I'm talking about the Jets. They just capitulated. Wow. If you're into sports like I am, there was huge NFL trades days, NFL trade deadline. It's pretty interesting. The Jets just unloaded two of their most popular and two of their biggest stars, younger players too. I mean, they're young. They're 20. I just looked it up. They're 25 and 27. They just traded them. How crazy is that? I can't even believe it, honestly. I mean, I can't believe it because they're just so young, but they were paying them a whole lot of money. As a matter of fact, I'm curious about this. Sorry, this is the other thing I do, guys. Besides trading, these are the things that I'm into, okay? I'm into sports. I'm into stuff like this, not because of the sports part. It's actually the business part. It kind of parlays into trading. You know what I mean? I find it fascinating that they would trade them. I'm curious how much money those dudes were making and how much they owe them. It's wild. I mean, this is a big day. A lot of trades happening. The Chicago Bears, we're still hoping. We got one trade. Apparently, he was on our team last year. We traded for a dude that was on our team last year that was hurt. We get him back. I don't really understand that one, but I digress. Look, the truth be told, people have to understand. I'm fine with that, to be honest with you. I know a lot of people are going to want the Bears to make a big splash right now. You know, they got the 5-3 record, and they want a huge splash in free agency. And I mean, not free agency, but for at the trade deadline. And look, there's still a lot. I mean, this is still new. I think the problem with a lot of people when it comes to the Bears a lot of time is that, you know, they're thinking Super Bowl right away. You got a quarterback that's really young. You got a little bit of time. You got a new system. You got a new coach. Quarterback's only 1 year in. It's still pretty new and still pretty young. You just hope that you can contend for playoffs at the very least. And, playoffs. And give it a little bit of time. This idea of getting some new, big, splashy, expensive person is only going to lead to just more expectations, honestly. And I think you just got to slow your roll just a little bit. Yeah, they unloaded the two biggest players on their team. I didn't know Sauce's real name is Ahmad. Interesting. I mean, the dudes who make the most money on their team, the top two, they got rid of them. Yeah, how about that? Wow, that's crazy to me. It's so wild. And I bet there's going to be more. And then, Jerry Jones getting Quinnen Williams. That's a big get. I mean, honestly, I'm not sure how much he makes, but I feel like it's not that far off from what he could have paid Micah. I don't know. Maybe he knows something I don't know. Just fascinating. Anyway, when it does rain and pour, it does happen in the markets too. It's a very interesting day here. If you guys got questions on trades or anything like that, please chime in. Let me know what you think. There's a lot of earnings coming out tonight. We know AMD, among others. I already put on an AMD trade earlier today when I was on Option Trading Concepts live with Mikey. Of course, we did the AMD calendar put spread. I saw some of you lamenting over what the trade that on the previous show with Dr. Jim that he put on. I saw some of you lamenting about that. It's kind of funny to me. It's a wild day here, and I shouldn't say wild. Truth be told, isn't it funny how when we have this market that pulls back by 1%, just a little bit more, that we feel like the sky is falling, but it's really not. It's not even close. This thing could easily be a whole lot worse. And I was actually telling that to a lot of local area high school students today. I went to talk to a high school class. It was fun. It was really fun. It's like data gathering in a way for me. I mean, they're gathering data from me. They want to know about my career and they want to know about options trading and all this other stuff. But I want to know from them what they're paying attention to, right? Like, it's interesting because a lot of them don't know a whole lot about options, but when I asked them about what stocks they're interested in, guess what they said? They said Tesla. They said Nvidia. They said Meta. I mean, they're talking about a lot of the same stocks that are the most traded stocks in the market, the ones that have the most volume. Excuse me. And that should be no surprise. I mean, that's why these stocks have the most volume. They're talked about a whole lot. I mean, those are the ones that I see. When I look at volume today, SPY is number one with 7.2 million contracts. Qs is 4.4 million. SPX, 3 million. Now, usually those are the top three, honestly, on most days, any given day of the week. But guess what's number 5 today? It's not Nvidia. Actually, I'm sorry. Nvidia is number 4. I lied. Nvidia is still up there, but it's not Tesla. Usually Tesla's within the top 5. It's not. iBit is in the top 5 today, folks, and that tells you everything you need to know. As you can see, I'm dealing with a lot of red here today. It's not a good day for the good guys, but it's cool. I'm fine with it. If you notice, a lot of my red is a lot of it, as you can see, and I'll just sort for you here, it's stuff in the net lick that's red, which is my shorts. I'm going to have to live with that for now and again. I mean, one of the things that I've tried to get better at over the years is having more patience with short vol. I mean, that was not something I always had patience with, and I've tried to get better. I mean, one down day and then a little increase in vol doesn't destroy everything, that we've worked for, honestly. 2 down days, I mean, it just might hurt a little bit, but we're mostly fine. I actually rolled a lot of these positions out early last week, but we'll get to that in a little bit. iBit is number 5 today in total options traded. That's saying a lot, honestly, and I feel like that's creating a lot of opportunity. I actually rolled my Zebra up and out. I should say down and out, down and out in Beverly Hills. I rolled it down and out, 53 to 55. I actually had a different Zebra in the December expiration. I mean, I think there's nothing better than something that's down. You're eventually going to get a sentiment and flip it around at some point. Now, I am kind of catching a little bit of a falling knife here. We see this is a battleground in Bitcoin, and I know I've used that in a couple of different things recently. I used that in gold. Gold 4,000 was the battleground. Well, it broke lower. And one Ilya Spivak is probably happy today. We talked about this yesterday on Overtime. He's short gold right now, short market. This is actually probably a good day for him. He's happy. I think he's short Bitcoin too. So this should be working out well for him. I am more long the market. I don't have anything in SPY or SPOOs per se. I haven't bought any B futures, but most of the stocks I have a beta of 1 probably to the market, I would think. I am long Bitcoin via IBIT. And again, I love the fact that it's traded a ton of options today. I mean, let's look at the near term. I mean, 2,000, look, 19,000 on this 58 line, 8,000 traded here. Lots of volume. You can see that's just in the weeklies. In the regulars, yeah, I guess kind of the same. I will say, in the regulars, probably a little bit more volume on the downside. Now, that doesn't mean anything. People could be selling these. I didn't really check for flows, but I mean, there's obviously some capitulation happening a little bit here today, and 81 million shares. I don't really track volume in IBIT, but I'm going to go ahead and say that's probably quite a bit. If it gets up to 100 million, I would bet that would be probably somewhat of a record for the contract, unless it did more in the April time period. I don't know. I guess it's a good time to pull up volume. Let's see. Volume, subgraph. Let's do it. Let's see here. Oh, no. Looks like it had a lot more volume on the 10th, right? That was one of the other down days. What day was it? How much is that? That's, like I said, over 100 million. I would imagine over 100 million. We'll see how it ends the day. It could end the day in a capitulatory fashion where volume goes up higher and we end on the lows. I mean, honestly, I'm looking to see if the same thing happens here in the S&P 500. But yeah, I mean, big volume here. ETH A is that on the list? It's not on the list of options trading, but obviously a lot of volume in here today. You can see 74 million shares have traded. 1010 was the other last time we saw that type of volume. Prior to that, to the upside on 822, I assume IBIT did the same thing on 822. No, where was that? Yeah, right here. Actually, it did not. Interesting. I guess it was just, oh, you know what? The ETH A day was probably a day where they started talking about ETFs or something like that. So, yeah, been a super busy day here so far, people. And I haven't traded a whole lot. Like, I think one of the things I mentioned earlier today on Options Trading Concepts Live was I just have a bunch of things that I'm waiting to get paid for, honestly. You know, for example, I mean, I'm short some puts. Obviously, I'm short a put in our GTI stock is almost $3.82 below strike. Well, it just went lower, $3.85 below strike, but it's in D's. I'm going to sit on this. I'm going to wait a while, and I know the narrative around the quantum computing stocks hasn't been great recently, but I'm going to sit. Same thing with this SMR, same deal. I mean, these are a lot of short put positions. GLD is a 17-day thing here. Gosh, this is one I got to do something about. This is a in-the-money put spread. I clearly need to roll this. Let's see. It's a $6.88 put spread. This always sucks. I mean, technically, you're not supposed to roll these as they're in the money, but it's not like I did this at highs. I actually have the 375 as my short strike. And typically you don't want to roll these and pay, but I don't mind rolling and paying and giving it a little bit more time. So we are going to do that. Let's see if we can get it for 50 cents. The tough part is when it's deep in the money, it's a little bit harder to be able to trade it. Oh, this sucks. I don't know the last time where I was rolling in the money put spreads. It's been a while. It's been a minute. I mean, really, we haven't had markets fall, whereas you basically have to find stuff that's in the money on the put side and roll. What does stochastics do for me? I honestly, I don't, it's not something that and let me remove this volume here. Stochastics, again, it lets you know when something's overbought and oversold. I don't necessarily trade on it per se, it's another indicator for me. I mean, if there's something that I was really interested in, and I guess let's take Meta, for example, right? Meta has sold off ever since earnings. Pretty oversold here. Not too many times you've seen it below this 200-day moving average. The last time you did was in perilous times in April. I don't really need stochastics to tell me that it's oversold. I already know that it's oversold. So this is not necessarily one I would even look at stochastics. I already know it's oversold. I can tell by the fashion in which it's sold off and the way the chart looks, right? Maybe it comes into play sometimes when I guess it just depends on certain names. It depends on, let's see, like, obviously, this is another one that's oversold. I mean, usually when you see this type of chart and something's falling below the 200-day moving average, you already know it's oversold on the stochastic. You don't really necessarily need it. It just comes at I'm trying to think of a chart that might have sold off some that was already on highs. Here's a good one, right? So this was clearly a little bit overbought, right? We talked about IBM a week ago when the stock, I guess it was a week ago, it was 2 weeks ago, when the stock had earnings, fell down, started to rise back on earnings, and then the very next day had a big move. And then the day after that, which I think was a Monday, another big move, obviously overbought there. Now, it's sold off, but it's not below its 200-day moving average like the other things we looked at, but it is now possibly oversold on a short-term basis on stochastics. You know what I mean? So that's where it really comes into play, not really on those other things. AMD, this is one where I decided, along with Mikey today, to do the rare put calendar. I know I almost always go upside on calendars, but I decided to go downside today. Why? Well, first, let's look at the expected move, $18 expected move here. So if that comes to fruition, it would certainly go below my strike. But the reason why is because, again, you've seen a lot of these earnings, right? Meta, not Meat. Meta down on earnings, right? Continue to go lower. Microsoft, same deal here. And honestly, this is part of the reason why the markets are actually starting to fall a little bit, because these names have been struggling. Google went up on earnings. I think Amazon went up on earnings. Tesla down on earnings. It ended up treading water, but down on earnings, actually. Netflix down on earnings. Not a Mag 7 name, but it might as well be, in my opinion, down on earnings. And so as a result, I feel like there's been a decent amount of some of the big players and tech names down on earnings. I'm playing AMD for that very reason, to the downside. I feel like a lot of them have been weak, not because all of them have missed earnings, but because the sentiment in the market is turning kind of negative on them. And it just seems as though they've struggled to get a bid on earnings, even if they have good numbers. So that's one main reason why I'm playing to the downside. Again, it's a crapshoot. I'm using very little capital in that one. I think it's $300 is what we paid for it, $310 to be exact, I believe. And we'll see what it does here. But yeah, I do have quite a bit of positions. Again, I've been totally swept up in this market. I think it's one of the more interesting markets we've had in a while. And to be honest with you, this is probably the first day it's behaving normally. And what do I mean by that? Well, looky, look who's back. When you talk about stochastic, look who's overbought in the short term. It's the dollar. Now, I don't necessarily know how much, I don't necessarily know how much technicals always matter with the dollar per se. I mean, again, it's the world's reserve currency to some degree, and it's going to move the way it's going to move. I don't necessarily know if the greed and fear pockets that are technicals really do anything for the dollar, but I will tell you it's on highs today and it's continued to move higher. We've talked about the move more recently. I mean, this makes it 5 days in a row. Dollar's moving to the upside, but more importantly, it's above a key level of 100, right? Par, as we say. And as a result, it just so happens to be a day where the market doesn't seem to like it. And you can see this has probably been one of the main reasons the market has been struggling a little bit recently. It's two things, I think. I think it's twofold. One, the rise of the dollar has started to come back, but then two, these weak sort of moves on these major tech earnings, and so it's starting to drop some here, and that's what you can see. Finally, I will say gold is following the rules again. Gold is not moving up as the dollar is moving up. It's moving down, and so that starts to make a little bit sense once again. And naturally, Bitcoin is going to move down, equities move down. They've been highly correlated for like 6 months now. So when I say things are starting to make a little bit of sense today, they're actually starting to make a little bit of sense today. And that's one of the things that that always actually gives me comfort. Even on a day where I'm not necessarily making money, it gives me comfort to know that things are making sense, right? Let's see. What else is... So I know AMD has earnings. SMCI is another one that has earnings. I mean, AMD is probably one of the last couple of names I feel like I'm going to play here on earnings. SMCI, just curious about the expected move in here. 47 and change. Well, let's go to 48. Basically, it's 48. Not that it matters much. $5.40. So over a 10% move expected in SMCI. Seems fair, I would think. I know a lot of people look at the ALAB. I don't even remember what this thing does. This has earnings tonight. Also not playing it. I feel like markets in here would be wide, and they are, just like I thought. 182 and change. $26 move expected here. Another 10%er, potentially. Mara has earnings. Obviously, a lot of the crypto names, and this one included, have kind of taken a dump. You know, it is what it is, man. It is what it is. InvestWise, what? Why do I require to have margin to buy long call or put for 0 DTE when I have sufficient buying power for the call put? Not exactly sure. I'm not sure. Which name are you talking about? Let me know. It shouldn't, if you're buying something, it shouldn't require any margin. It really shouldn't. You're just going to be paying what you're going to essentially be paying what the cost of the option is, right? That's your biggest risk. So I'm not sure what else you have on. Maybe by I'm not sure what other position you might have on, and maybe that's why it's affecting you. But yeah, thanks, Frankie. Just check the risk and margin desk. Call them up, and they'll give you an idea. I don't know specifically what your position is, but you'll see. What other earnings? Kava. I'm not playing Kava. But if I was, I'd probably play it to the downside. That's just my personal opinion. I mean, CMG and Kava, I don't know about you, but look like the same chart to me. Are they going to come out and say the young people aren't buying their food because, well, it's just too expensive right now? Maybe. I don't know. Is this one? Now, this is one where I'd probably look to buy puts. I wonder if this guy right here bought puts. 3,000 have traded. It's not that interesting of a trade to me. I feel like these puts are kind of jacked, to be honest with you. Let's check out the implied vol here. Yeah, 200% vol. I mean, even if I do think it's going to fall, I'm not buying outright put there. But I do think it's possibly one that does not have a good night here, honestly. I mean, that would be an interesting trade if it did fall. Buying the 3, selling. See, it's not even worth doing that. It's a $5 spread. I mean, it's okay, I guess. It's a $5 spread if it falls to the downside. You can the max profit here is $282. It's not nothing. It is tempting to play it to the downside, isn't it? Let's see if I can cobble together even better trade. I mean, I guess I could just go one day. This is still expensive. Wow, the 50 put here, 274.310. First of all, that's too wide, and the 50 put 274.310. This is, I mean, I could probably buy this for almost 310. It's crazy. I guess I don't know, do at the money. If I did the 52, 352, I want to try. So if I was going to do this, I'd want to try and $7 to the downside, paying basically 3. I'm going to have to pay up for this, but I could make 4. Yeah, all right, let's do it. Try to get that on. Of course, penny bid. Why would it? Why would it not? Why would it not let me automatically get that trade on? Pinterest has earnings tonight. That's another one, huh? Pinterest has earnings. No, not as interested in this one. I remember the last earnings. Was it here? Yeah, probably around here. It did fall on earnings. Did I play this one? I really can't remember. I like to play earnings that move, so it's not out of the ordinary for me to play a name like Pinterest, but I'm going to pass on that one this time around. What has earnings tomorrow? I know NVO. That was one that we discussed on the show earlier, too. NVO, this chart does not look good. That does not give me any real confidence about playing to the downside. I know somebody was asking about selling vol in here. Honestly, I think you're going to still have the same opportunity to sell vol after earnings if you can even get good vol to sell. It doesn't seem like it's really great. McDonald's. I know a lot of people are looking at McDonald's ahead of earnings. I don't necessarily think about earnings when I think of McDonald's, honestly. I'm guessing the last earnings were in August, maybe somewhere around here. Yeah, no real interest in this one, but I am interested in what they say about the economy, though, right? That's always a fascinating thing. Unity. Earnings? No. CCJ actually just closed something in there today. I'm glad I did. I didn't even realize it had earnings. I was short a call in there. Thank God I closed that one. Yeah, there's really not a bunch of other things that I love for earnings, to be honest with you. It's kind of it's basically the end here, right? When you're talking about earnings, it's kind of winding down. Only the big ones are the real interesting ones, at least for me, because some of these other ones, as you can see, the markets are wide. You can't even get in. Look, I'm trying to get this thing for $3. They could easily just give it to me. But if I do, I would like this trade. If it does tank, like we all think Kava might tank, then again, this is a $7 wide spread, right? 52.45, $7 wide spread. I'm paying $3 for it. Most I can make is $4 if it goes through the 45 strike. So that would be a nice little win. Outside of that, guys, not a whole lot happening here. I like I said, there's a couple of things I'm waiting to get paid on. BE is definitely one of them. Sold an upside call in here. I know this is playing with fire. I know. I like it even better now after this big move to the downside. I'm short the 180 call. I don't necessarily feel the need to cross any markets to go and get this right now. I am short DEES. This is the 45-day window. Let's let it cook. We're going to see what happens here. We'll see how that goes. Think local elections are having any pull in the market direction? No. Negative. I don't think so. No. I don't believe so, personally. We'll see. But I don't believe so at all. I know there's a lot of talk about that. I'm the least political person, so maybe I'm wrong, but I don't think so at all. Let's see. Looks like the market is going to try and bounce back here. I think it'll be very fascinating to see how we end up closing the day here. Like if we move a little bit up towards the end of the day here, I think that's a positive sign. Obviously, if we close the day on the lows, look out. I think we could end up seeing more volatility. VIX is your proxy to keep an eye on things right now. The high today in VIX, was it, the high was 2048? I must have missed that. I don't remember when that happened. 2048, was that earlier today? Oh, that was overnight. Okay, all right, makes sense. Keep an eye on that, see if we eclipse or if we close above 20. I think that would be a situation where the markets are down probably 100 at that point, probably gets a little scary. I would keep an eye on if Bitcoin obviously continues to trade, so this could break and stay below 100 overnight. For those of us who have like an IBIT longs or anything like that, we'll be fine because, again, the market will be closed. It might move lower. I would love to see it move lower, puke overnight, and then start to rally back. That would be fine with me. It wouldn't affect my position. Gold is another one. Again, it's broken 4,000. Can it reclaim it, or is it kind of done? I think those are your things to keep an eye on. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, trade them often. See you.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Why do you want high Ivy rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on tastytrade. Genius loves company.
Hey everyone, Tim Knight, and it's a nice bloody day. Everything's red, which is pretty cool. What's even better is that there's no specific reason for it. It's not like China's declared war on the US or take your pick. To me, the tell was what happened at Palantir last night, because you've probably seen Palantir as one of the most overpriced companies in the history of the financial markets. I mean, look, it makes Tesla look cheap. And they came out with earnings, and the stock exploded higher for about a second. It went up about 10% instantly, and then it started grinding lower. And it's not like they changed the news. It's not like they issued the earnings and they're like, oh, sorry, we meant to say that we lost huge amounts of money. No, the earnings report was very, very positive compared to what they were expecting, and it, as proper, went flying higher, and then it started disintegrating. And the gain was gone, then it started moving to a loss. And it's just, I call it a tell because, Palantir is very indicative of the kind of very AI/government dependent largesse recipient, Silicon Valley bro type company, which is so highly valued these days. And if it can't keep it up, ain't nothing can. So just bit by bit, the cracks are showing. This first kind of leaped out to me on Friday when, as I mentioned, we were starting to get some cracks in the RTY uptrend. And they've been fighting back the whole way. We had a nice tumble yesterday, and I bounced that sucker right back up, and then it fell even harder overnight. So again, falling on no news is the best kind, because if there's news, then they can just undo the news. They'll just say something else, or they'll countermand it with some action, etc. If it's just sort of falling on its own weight, that's the best of all. So having said that, let's jump into the charts and look at this very crucial time we're in right now, because it's kind of make or break at this point, as I'll illustrate. Here we see the spider. Now, for you bears out there, of which there's probably one, it's been a nice few days because we've got some diminishment from these values that we were at. We were just underneath that trend line that I mentioned every 3 seconds or so. So we have eased away from that. For you bulls out there, which is everybody else, we are getting very close to sealing this price gap. The price gap being the high from back here on the 23rd. So we've fallen ever so gently, and we are very close to that yellow line. And if it finds support there, then this was just a few days of relaxation, and then on we go, upward and onward. If it cracks below that, that's another little sign that maybe the bears aren't extinct after all. Here's the IWM. Very important, and what I've been kind of obsessed with. The April 7 bottom for every market is the anchor point for the trend line. We first got our little bitty hint on Friday when it cracked below that and rallied, of course, and closed above the line, but there was some damage done. And then yesterday it fell even harder. You can see the low from yesterday was lower than the low from Friday, pretty substantially, But again, they rallied. It closed just below the trend line. And today, we gapped right down. And today's low is lower than it's been for a couple of weeks. And unless something weird happens in the next 40 minutes or so, we should close well below the broken trend line. So it's progress. Over with the diamonds, those are also down and kind of the same deal. And I've dragged these lower to be more conservative with what constitutes a breakout failure. And these aren't huge setups. I mean, this is a dinky little V pattern here. But again, breaking below this level would be helpful for the 1 or 2 bears that's still left out there. But as I say, Palantir was the real tell. Now, this only shows daily data. The high last night was way up here off the chart. It's at 222, I believe. And then it just fell to pieces. And it's not like we're down, 98% or something. It's down pretty modestly. But, well, maybe not so modestly. Put it this way, it's down about 9%. And the prices we're trading at now were the same prices we were trading on August 12th. So, months have gone by, and, for all their efforts to do whatever they're doing, they've gone nowhere. It is also a failed bullish breakout, as you can see. So we got this cool little cup with handle pattern, breakout, Alexander Karp standing right on end, and then his conditioner fails. And so it falls down, and we've got a failed bullish breakout on our hands. So that's pretty right on. Yeah, so that's Palantir. Over in bond land, I guess because equity money is looking for somewhere else to go, we're getting a little bit of strength. TLT is up about 0.25%, seems to have stabilized to some degree. And IEF, which is my preferred instrument, the 7-10-year bond fund, is also up a touch, 0.12%. And it's trying to kind of get itself upright here. Luckily, it did not pierce that yellow line. I actually parked an entire portfolio in this early today just to do something with it, because that particular portfolio I'm wanting to completely allocate to palladium at the right price. And I'd rather not just be in plain old cash until then. So the only thing that I feel somewhat comfortable putting in is IEF. You could still lose. IEF and TLT are certainly subject to diminishment in value, obviously, but nothing radical. I mean, you're not going to wake up and see it down 5% or something even. It tends to just wiggle a little bit here, a little bit there, and still throw off a little shy of 4% interest a year. So it's boring, but I'm just going to keep it there for now until, as I say, palladium hopefully gets back to a good price. Over the course of since last Monday, so last Monday I was light. I had 13 positions, which is like almost flat for me, 40% committed, and I've been pushing out higher. And as it stands now, I've got 27 positions and about 150% committed. So I've just about more than tripled my risk exposure, and just basically doing what I like to do, which is kind of swing trading, tightening up stops along the way. And those that don't make the cut, those that get stopped out, sayonara. On the whole, I've got some fake outs here and there too. Micron's a great example. MU, it spiked up this morning real quick, got stopped right out, and then it started disintegrating again. So my stops are a little overly tight probably. So I did get back into it at a worse price. But 27 positions, all of them in the green. And this is the kind of trading I like. I'm not a day trader. I'm not a long-term trader. I like to measure in weeks and maybe a month or two on these. But a few of these, and some of these were featured yesterday too, because they're good charts and worth sharing. But I just plucked out a few out of those 27. AST Space Mobile, ASTS, I still like, down about 1%. The cruise line, which I love, that. Carnival, down nice and hard, about 10% on CCL. A nice tumble on that. And a not terrible head and shoulders pattern either. It's not perfect, but it's not bad. And this neckline is cleanly defined by the gap. That is to say, it's anchored to yesterday's low. So that's my stop loss now. My stop loss used to be up here at this gap. Now as we've fallen hard, I've cranked it down to this level, locking in profits, more assuredly. And so that's a nice little topping pattern. And it was interesting too, because just to reflect on this a bit, we got an early start today, which I appreciate. Gives me time to be a little more verbose. This tumble right here was sort of promulgated by its competitor, Royal Caribbean, falling. And it started to rally back. So it fell and then kind of rallied, pushed higher. It did not go past that gap though, so I did not get stopped out of this. And a good thing too, because Barfo, there we go. We got a nice drop today. So this counter trend rally amounted to nothing. So actually I shorted more a couple of days ago, so that's pretty right on too. So yeah, CCL, a nice tumble. Cognex is down again, 3.2%, looking good. We have Corning, GLW, a nice gap down today on this, about 2.5% drop. Following that peak up there, you can see we've had a long run on so many of these for months and months, just ceaseless inflation. And better prices is short, in my opinion. Occidental, OXY, down 2.1% on this. Nice persistent multi-week drop. What else have we got going? Well, here's Axon. I believe they report tonight. And this is a very dodgy issue. I've trimmed this one. It's a tiny position now because it's not the cleanest pattern on the planet. So yeah, it was small to begin with, but now it's even smaller. I'm in it just for the fun of it. But they do report, I believe, this evening. So we'll see how that goes. Intel, INTC, down nice, almost 6%. And a new gap. This is another good example of tightening up stops. Because I shorted it last week, and it's fallen. But with this gap, I just cranked the stop to just above that line. So it just makes me sleep a little easier. I mentioned Micron earlier. Here's MU. And yeah, my stop was too tight on this. But here's something fun about this. Island reversal gap. We've got it right here. This fella, yesterday's bar, is floating out all by himself in outer space, and we've got this nice gap down. So this sets up another nice stop loss too. So this line right here, that is yesterday's low, is my new stop loss level. Clearly, things like MU and Intel and maybe even Nvidia will be informed by AMD's results tonight. And we'll get to, am I going to show them later? Yeah, they come later on. So yeah, so far so good on that. Micron, as with so many of these, has been pushing to levels never seen before. And I've been shorting them at these lofty levels. And I haven't drawn the channel for reasons some of you can intimate. But we've got a series of higher highs here for the longest time. But we're way up here at the tippity top of this extraordinarily, this multi-decade channel. And I think it's really high. So we'll see if we can get that knocked down some. I made mention of Royal Caribbean. Here's RCL, and they're down nicely. Again, over 7%. And not a terrible setup here either. And in this instance, I believe, let's just throw down another, this is sloppy, but I'll just put it over here, a price line like so. So tighten up the stop like so. So just in stair steps, we've been working our way lower and lower. And so there aren't that many public cruise companies. I think Norwegian Cruise, NCLH, if memory serves, is also out there. It's more thinly traded. But the two big boys are RCL and to a lesser degree CCL. And so I'm sure both of these, and we're getting close to major support here in this trend line. We'll see what happens there. But yeah, those are going really nicely. What's not going so nicely is Bitcoin. And I've mentioned before, and true to form, I dared to tweet just something non-complimentary about Bitcoin, and all the crypto bros freak out. There's no religion more protective of its creed than the crypto guys. So tread lightly. But the cold fact of the matter is that Bitcoin's lost over $25,000 since its peak back here. And psychologically, if it cracks six figures, that's kind of a big deal because they waited the longest time for that to happen. And it has managed to stay above it for many, many, many months. And if we start 95,000, 90,000, etc., people are going to start to flip because it is excusable to them, I suppose, that I've always perceived it as a gambling token and a very effective one. It has created a whole new industry, which is fine. People love to wager. They love to speculate. Humanity has done this for thousands of years. It's perfectly okay. But I don't know about you. I don't use it day to day myself, so I don't really see the practical value of it. But as a chart, it's been range bound for most of this year. And $100,000 is an important psychological figure to folks because if they see a leading 9 on this thing, they're going to get a little bit uncomfortable. And so we've talked about that recently. Strategy, MSTR, which we talked about yesterday, is down again, 6.37%. Well more than a 50% loss on this since it peaked back on November 21, I think, something like that, of last year. I forget. Maybe it's December. And in addition, something I mentioned specifically yesterday was this beautiful right triangle pattern. DeFi development, DFDV, down again, about 9%. Once we slipped below that base of the right triangle, look at this, red, right said Fred, down it goes. So that's pretty cool that the right triangle is being so helpful in giving us the heads up that doom is nigh. Precious metals also continue to sink, which I appreciate because I'd like to get back into them in a big way at the right price. GLD is down nearly 2%. That is gold. Miners are down hard, almost 4%. You can see that these have just been wiped out from this level, although we're getting close to some slightly important support by way of that green line. The one and of course the one I'm always talking about is palladium, PALL. And I'll just say again, my dream price is somewhere down here, something like 115. If we can just crack below this level, good and hard, below what we saw last week. Fingers crossed on that. Shame on me. I talked about XME as a short. It's done fantastic. I did not stick with it. For those of you who did, thumbs up, congratulations, because this has been a beauty. This is just classic trendline failure. So there's XME, did a little bit of damage here. So damage, and then a bit of a rally, and then leap to the other side of it. It's not like there wasn't time. There were several days here to kind of get back in. Look at this. This is beautiful. Exactly beneath the trend line, beneath the trend line, beneath the trend line, and then Geronimo down we go. So Duke, I'm almost done. Give us some peace. So yeah, congrats to you, XME bears out there. I wish I was among you. But the one to watch is AMD. I have no strong, I'm short this. I have no strong feelings about which way it's going to go. If it flies 15% higher after hours, I will be disappointed, but not completely shocked. And if it tumbles, I'll be delighted. It's not much of a pattern. It's just really, really expensive. There's not much to say about this kind of thing, but it will definitely inform the other semiconductors I mentioned and SMH, of course. So that is a key one to watch. And you know what? I am out of time. So I will bid you adieu. And this is a crucial moment. If we rally tomorrow hard, then maybe this was much ado about nothing. But if we do get a crack, maybe we're onto something bigger here. So I'll see you tomorrow. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
tastytrade's Money Match event. Unlock 30 days commission-free trading. plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to the last call with the Dream Team. Hello, Tony Batista. How are you doing today?
I'm doing well, Liz. Thank you so much for having me on your show.
Anything happen in the market today? Because what the heck?
What? It was just
this morning I was blaming you. I was like, Tony, what did you do to this market?
just another day, just another, 8:30 to 3 o'clock grind on the market. No, really, today was a big day in volatility, and volatility has really been creeping up the last couple of days. I look at /VX, and you can see here over the last week and a half or so, even through the FOMC meeting, we didn't come down in volatility, and it really percolated today. Got it all the way up to 2021. It's been staying bid up around 80, 90 cents, up 80 cents right now.
Yeah.
Go ahead.
No, I was just saying, yeah, that's well. And you know what's so funny is you look at /VX, which is good. We have a tendency to look at the VIX.
Yeah, a lot of people do.
Yeah, and I think it's because and I'm just shameless self-lead promoting right now, because we are live from the SIBO, and the VIX pit is literally like behind us right there.
Yeah.
So tomorrow morning, Jenny and I said we're going to take a field trip into there just to talk to some of the VIX traders, because you could hear some yelling from that crowd over there.
You should. You've got VIX expiration November 5th, and then November 5th.
Which is tomorrow, right?
Yes.
Yeah. So we're going to take a field trip. I don't know that we can take the cameras with us, but we're going to do some investigative reporting on the other side of this wall.
I like it. That's a good thing. You know what? Anytime you can show the viewers, what the pits look like and how things are handled, I think it's very powerful. It's knowledgeable for the viewer. It's powerful for everyone else. I totally agree with you.
Yeah, I agree. And people like to know what these guys are doing. It's been pretty fun because you can actually see the activity when it comes up. So yeah.
The Nasdaq's been the weakest of the group today, down just about 490 points now, down almost 2%, 7/8% here. I think Palantir is the big culprit here. Traded down to 185. It's 187 right now.
So that was its expected move for the cycle. 187.5 was its expected move. And I know that because I had 100 shares of Palantir and I tried to protect it with a downside ratio spread with my shorts at the expected move.
So I will not doubt your not at all.
So Palantir has been one of my, and I say this on the show all the time, so we're full disclosure. Palantir is my longest, meaning my longest standing long. And that's because when my son was in 7th grade, he had a kid who was in 8th grade, and he's a freshman in college right now. And this 8th grade kid, Paul, comes up to me and he goes, "I heard you're a trader. I want to get long Palantir." And I bought it at 12. So I've always had it in my account to keep an eye on and have something to talk about with Paul every time I see him.
Well, you owe Paul dinner or
No
something.
kidding. Well, I texted Paul's dad that one time. He's like, you owe him a lot more than dinner.
Well, you owe him something when you go to college, to visit your son. You got to take him out for a nice steak
No,
dinner.
Paul goes to the smart school. So I'm not saying that saying Jaden's at the smart school, but I will be working for Paul one day, and I'm totally fine with that.
So he's not going to KU like my son, or went to KU like my
Oh
son.
yeah. Mine's the inverse. Mine goes to UK. Yours went to KU.
Too funny. What else do we have here looking at today? You just talked about volatility a moment ago, which actually just sold off about the most it's sold off in a 2-minute period there, which is about 10 cents. It's up 65 right now. Even the S&Ps are down 73. NASDAQ still down 480. It was just 490 a moment ago. Russell down 36, another leader to the downside. The Dow has actually been the strongest of the group, down 250. Volatility, market, selling off. But cryptocurrencies really selling off.
What the heck? Are you going to have Ryan on tomorrow?
If I could find him. I mean, this October thing never materialized, and this Movember isn't working so good either.
I don't like Movember. Is everybody growing a mustache with this must go up Movember? Okay, so my question to you is, did Bitcoin break the 100 level today?
The futures did for a brief moment. I mean, they're sitting right there, 100,500.
Okay, so it's
the cash just got up to $100,010 or down to $100,010, and the futures got down to 99,845.
That's a level that I didn't want to get under, but yes.
I don't think a lot of people wanted to. BM, what's the symbol? BMNR. It's another one that's kind of Ethereum, because Ethereum's really gotten worse than Bitcoin. Ethereum is down 11% today. Just to give you an idea, Bitcoin's down just about 6% today. So Ethereum, Bitcoin, all the altcoins significantly lower today. Stuff like BMNR, I know is like a bit mining Ethereum product. It too is down around 6.5%. This has been a pretty high flyer for most of the time. They're all selling off, and all selling off good. Even gold today, /GC, with the dollar movement, everything else like that, it doesn't matter. Gold is down 65 cents. If you look at the pound, pound is lower, dollar is going higher. Pound is down by 116 ticks, /6E. The euro down by 380 ticks, or 33, about a third of percent. So it looks like all the commodities, all the markets, no real bright spots in the market.
The only thing up was bonds. Aren't bonds getting a little bit of an uptick today? ZB?
They are. Bonds.
When I say an uptick, it's...
Well, bonds go higher, rates go lower. 117.14. They're up 9 ticks. They've had a pretty tight range today of only 17 ticks top to bottom. So I think
they're the only thing that's green in my watch, not my watch list, but my watch list. It's the only thing that has that green color next to it today.
Yes, that and nat gas. Nat gas has caught itself a real big bid, and I know TP and the team talked about that today in their cherry picks. If you haven't gotten that, you need to take a look at that. TP does an excellent job on the cherry picks quantitative newsletter that we put out. So
he does. And I think I could say this. Well, nobody can stop me. I mean, nobody can hear to slap my wrist. But so for those of you just joining us, Tony and I will both be in Austin, Texas. And I also believe the Cherry Picks creator will be in Texas with us.
He will be. Oh yeah. You kidding me? I'm going to grab him off his ranch and grab him by the ear and bring him there. The only problem is how.
Hey, don't you? You can't pick on TP. He's our fill-in if I'm taking off, and I'm taking off Monday. So
I know, it's just how much TP can you take live?
I love TP. I love him. He's so quirky and fun, but he's so smart.
He's very smart. He's all those things. All those things you said. I'm not going to repeat them.
I'm hoping he wears his flame shirt to Texas, because he knows that's my favorite. Do you have your outfit ready for Texas?
I'm sure he is. I believe it's the only button-down shirt he owns, to be honest with you.
Oh no! He's also got one that's got lightning strikes on it, so it could go either way. He's got 2 button-down shirts. One's got flames, one's got lightning.
Sometimes I get them a little bit mixed up. Frankie in the chat room tell me he's coming too. So
wait, but I think that's a secret.
Oh, never mind. Don't say that then.
Yeah, I mean, Jenny already said it out loud, so you can say it because tell Jen. I was like, Frank, we got a text that said, "Don't say anything," and then.
Jenny said something. Yeah, that's my girl. That's my girl. Even the S&Ps, 1.4 million cars have traded for a large, I don't know, just about 100-point range, top to bottom, last night to now on the E-mini S&Ps. I think it's relatively average volume, not like a huge kind of big volume spike or anything like that. I mean, although the E-mini S&Ps are well off of their recent highs of just over 6,900, they're 68 and change. Is this day one, Liz, of the down?
I don't know. I mean, if history repeats itself for the last 14 years, is the blip in the radar, and anything can happen tomorrow. My only tell, Tony, and this is what I wanted to ask, and I'm sorry if I'm circling back to it, is the VIX is trading 1854 right now. Are you surprised that with this much of a down move, it never got higher than that? I think you were spot on yesterday when I heard you talking. You're like, the VIX was kind of the tell that we were going to be a downturn because we had the market and the VIX kind of opposing forces in the last couple of days. And this doesn't seem to me like a big VIX move.
It's a decent sized move. I mean, you look at VIX, even if you're just looking at VIX here, which I'll do for you. I mean, it went from 16 to 18. I mean, what is that?
20%, 7%. Yeah, like it's.
Yeah, I mean, that's a decent sized move, and really only 100.5 handles on the E-mini S&Ps. I mean, from all time highs. I mean. Yeah. That's a decent size move. No question.
I just expect it to be bigger, and I guess the 20 level is what's pinned in my
Liz,
head.
do you know how many times I've heard that in my life? I mean, you know,
actually, I forget I got to monitor myself when I'm on with you. Yes, I was taken aback by that when I said that. But yes, I did.
It's a cute move.
But I did expect if there's going to be, and this is another thing I will rephrase, but if there's going to be follow through, I think it should have been bigger. Sorry, I said it again. Yeah.
No, I understand what you mean. Maybe it's the magnitude of the move. Maybe it's just not like. And
I think the market needs it. And I'm not saying I'm a perma bull or a perma bear. And I mean, don't get me wrong, I have some long positions, but the market needs a little bit of a pullback, and I don't consider this even that much of a pullback.
No, I don't consider this that much of a pullback either. No, you're 100% correct. I do not consider it much of a pullback at all.
Yeah,
I actually thought we would get more. I talked about.
I thought the VIX should be higher. We should get more of like a I don't know. And even so, I mean, I'm not saying we're rallying, but we're rallying into the close. Boo's are only down 70.
Yeah, only down 70. I talked about it on Sunday that I really wanted to see volatility get back, and I'm talking about /VX now, getting back into that 21, 22 handle. And now that you got VIX expiration coming tomorrow, we might see the move in VIX. If it opens higher on volatility, that might be it for the short term. With expiration on. I always feel that VIX expiration plays a little bit of a reversal to the most recent move in volatility. And the most recent move in volatility has been to the upside. Yeah, right.
Okay, so you're saying most recent meaning like the last couple of days, not necessarily.
Correct. That's correct. And now you've got Wednesday expiration. I think that it expires in the morning. So there's not, this is not a big one. This is a smaller one. I mean, Nov 19 is really the one to watch. That's in 14 days or so. But
hey,
I always feel that.
I'm really actually asking this. So the VIX expires tomorrow in the morning, and it's kind of, and I know, SPX to see where the price, do you just actually have to type in the VIX and it'll tell you where it closed? Or, how with SPX, you have to type in SET to see where the settlement price is? How do you get the VIX price where it closes? Unless you have, I only know it if I have a position in there.
Right. I mean, you can look right on the option chain because it'll show you the prices of the option. Like right now, if you're looking at VIX trading 1844, you look at the 18 calls, they're 46.70, and the puts are basically 8 cents, 10 cents. They're kind of signaling that there's volatility is not going under 18 for tomorrow. So that's how I look at it. I just look at the price of the VIX. But I'm sure there's a settlement for VIX. I don't remember what it is right now. If my son was on the show, he has all that useful information in the top of his head. I don't have it.
Oh, come on. Old floor traders, we just piece it together with, duct tape. Duct tape and the option chain is all we ever need.
Yeah,
the option chain, and that'll tell us the prices, Tony.
we keep it together with very little is how we keep it together. That's how we really keep it together.
So true. So true. Old floor traders are all the same. Are you doing anything for earnings?
You know what? We've got AMD, which looked a little bit spicy. AMD has an IV rank of 46. It's down $7 and change, $7.50. I mean, it's just a skosh off of its highs, like the market. Rivian, McDonald's are two other ones. Rivian, I think, is a
McDonald's is before the open tomorrow. Not that it matters. I'm just saying it's before the open tomorrow. Right.
I think NVO is also before the market opens. McDonald's is no interest to me. Amgen's another one. CCJ, I believe, is another one. VRO is the VIX settlement. My Taiwanese sources just told me. So you can. There's your answer. VRO.
I love the outsourcing of this. This is fantastic.
And that was just my son listening.
Was it really?
He's my Taiwanese source.
Nick didn't volunteer to do this with me when Jenny said she can't do last call.
You know what? He didn't see the email. He was out in California, so he hadn't checked his email. I responded pretty easy.
Good covering up. I'm just kidding.
Yes. That's my story. I'm sticking to it. That's his story.
Good cover up. Now, Nick, you guys, I want to tell you, you and Nick are doing a great job, and I really do love the father-son duo. I really do.
Thank you. Definitely a work in progress. We're getting out the kinks and figuring out our cadence together and our roles together. He's made 26 trades today. He's made trades in Palantir. He's done NVO. He's done ETH, IBIT, which are all in play with Ethereum and Bitcoin going lower. Do you trade any of those ETFs?
I think we've got them all. Name another one. We've probably got it in.
I think you have to. I mean, I don't think you have to. I mean, I think if you're watching the market, you see opportunity everywhere. There's definitely some movement in those. UAL, a couple of gold trades today. MU. I did Oracle. Hopefully you didn't follow that trade or followed it later in the day. Oracle was down 11 a moment ago.
11. That's a big move.
Yeah, $10.50 on top of. I mean, Oracle's down 9 or 10% off of its high. So I was really just trying to play a little bit of price reversion to the mean, which is never the best thing.
No, but I got to tell you, trading options, even if you're directionally wrong, if you're doing it right, you can still make money.
If you could play, if the numbers work out, sure. If the expected move works out,
correct. That's the greatest thing in the world is you can be directionally wrong and still make money if you are trading options.
It's the motto of my life for sure. Nvidia is another stock that got rocked a little bit today. I think 7 points on.
Their earnings aren't for a couple weeks. If you hit the trade page, I think they're in 2 weeks, right?
What, Nvidia?
Nvidia, yeah.
Coming on the 19th, the November 19th.
I think they're batting cleanup this cycle.
Yeah. One of the last ones for this cycle. Is that what you mean? Yeah, sure. Yep. You're 100% correct. You're 100%.
Yeah. So, I mean, I think all eyes will be on that. Do you think AMD is going to save the markets? Boost down 82.
Ooh, can AMD save the market? Down $8. I think with the market being a little bit weak today and volatility really staying bid, AMD is priced to fail. I think I did the same thing in Palantir. I looked at it as like the upside was going to be a lot smaller than the downside, and the upside, I mean, it was up around $10 or $12 right after.
It skyrocketed. I closed my computer. I said, "Oh, Palantir's up." Okay, closed my computer, and I came in this morning. I actually rubbed my eyes when I woke up as I'm texting you. I was like, "Am I even looking at this right?"
You were looking at it. You were looking at it right. There's no doubt about it. Nick has a pretty tight strangle. He's got the 235, 275 strangle on in there. Okay. It's a 30. It's basically delta neutral, 1.5 short deltas trading at almost $15. But you'll notice the 275s are $23, $24 out of the money, and the same delta 30 delta put is a 235 puts which are really like $16 out of the money. So you definitely have some call skew in AMD. You definitely have some volatility in the front month of November. Monthly November is 74 versus around 64 for December. So you can expect 10 vol points to come out of there. And the expected move in November over the next 3 days is $17. So let's call it $15, which is really, a 5-ish% move in AMD, much less than what was expected in Palantir.
It is less, but have you been noticing that so I sort of feel like this last year and all the tech stocks, all we've been saying is call skew, calls over puts, calls over puts, calls over puts. I swear, Frank the Great is the best, the man in our chat, and he gives me all that information where he's like, calls over puts were trading. I think it just switched the other day, and he would know better than me, but I think this is the first time I ever heard him say puts over calls were trading yesterday.
Yeah, I believe you are correct. I believe that is correct. Let's see.
Which is pretty crazy.
Yep, you are correct. Yes.
Oh, and chat, I kind of keep an eye on it. I try to keep an eye on it. It's kind of hard. I do have a bunch of screens here. It is no longer a secret. The cat is out of the bag. Frank will be there, and we will take a family photo. And I'll post it on Twitter.
All right, sounds good. Palantir had 1.5 million options traded already today. Definitely some trade there in Palantir.
There was trade in Palantir, and something flashed over my screen, and from a news source, it was saying that somebody put 80%. And I'm going to say this to you, Tony, and then you tell me what you think. They did. Mm-hmm. They put 80% of their portfolio allocated to Palantir puts.
Oh,
yeah. Okay, but they say they allocated to puts. Now, are you long puts or are you short puts?
No, that's a little misleading. And
they might have allocated it because they have the stock. Maybe you're protecting yourself, so you could be.
It could be, but it's a short fund, so it's probably not. But what they go by the notional value and not like if you buy 1,000 puts, your notional value could be $8 gazillion.
Correct.
But you're really only putting up, $100,000. You know what I mean? Like but they quote it as the notional value as if those.
But that's what I'm saying. I thought that was such an absurd headline.
Yeah, it was, and it's not right, and it is misleading. But what can you do? I mean, it is what it is.
And it's what I love on this network, because we do use the good, the bad, and the ugly. Like you just said, you're getting smoked in Oracle because you're not saying, I made so much money in Oracle. You know what I mean? You see what you do.
I did talk about before we got off the show with Nick when the E-mini S&Ps were down 40. I didn't think that this upside would hold. I thought we would be lower. Volatility was staying bid. Market just felt heavy. I didn't think Bitcoin and Ethereum were going to get out of their own way, and they didn't. I thought they were going to kind of lead the market a little bit lower. I thought Palantir would go a little bit lower, and it did. So the market kind of sold off a little bit. My real question for you, and you started answering it when we first came on the show, is what do you think for tomorrow? And I know you asked me if AMD is going to save the market. I said I don't think it's going to, but what do you think?
I think that and I know this is
save the market, by the way, from 150 handle move off the top. I mean,
correct. That's what I'm saying. I mean, this is all kind of tongue in cheek when we ask this. But I don't think the market can do this 2 days in a row. I don't think I think
down days,
two massive down days like this, right? Not massive, but larger down days. I think it's going to be like pushing. This is my analogy. It's like pushing over a pop machine, right? So like you got to rock it back and forth a couple times. I mean, you're from New York. I'm sure you've done some thuggery things before. But if you're pushing something heavy, you got to rock it back and forth a couple times before it falls over.
Okay. So you don't think we're going to get more follow through to the downside?
No, I think it's going to try to lift itself up, and we might get a little bit of follow through, and then I think it's going to take a day of that where it's like we don't know, back and forth, and then it's going to drop the hammer. It's an opinion.
So I feel that we're going to have lows tonight. I think we're going to be down. I imagine that we'll be down. We got down to 67.86 on the E-mini S&Ps, which is only 10 handles lower than where we are right now. I feel that we will break that low tonight after the earnings come out, and maybe even be down 30, 40 handles or so. And that will be probably the healthiest thing that could happen for this market. If we're in the other direction where we're higher, before the market opens. I think it will sell off a little bit more. They're putting up the cherry picks here. There's Mr. TP's smiling face.
There we go. I love it.
He's looking at nat gas. I know he goes into UNG here, which is really the place to go. /NG. There's a reason why they call those products the Widowmaker. It's a big product. I would stay in UNG. He talks about.
Oh my God, though, Tony, I don't know if you know this. I mean, you know I'm a gold bug, and I've already said that. But I'm a huge
Gold got hit a little bit here today too by almost 1.5%.
Gold did get hit, but the other thing that I cannot stop myself from doing in my own account, we don't do in the show account because I feel like a risk manager, which is you, would call me immediately if I did this. But I'm a huge natural gas futures trader.
Really?
I am. Always have been.
Do you like to buy the dips?
So I do. I have like my strategies in there, and I feel like I should go on Rising Star. Maybe one day you'll have me.
Okay. All right. You would be if you make money in nat gas, you usually make big money. So that's a good.
I know. I'm actually pretty. I'm not saying, and I'm going to knock on something because this is going to come back to bite me. But I'm not in it right now because I think it's way too high.
Yeah, 4.3 and change. And this is after all the rolls. It traded under $3 last month.
Yes, I think it's. In my opinion, I think this is a little high for right now.
I tend to agree with you. Even going into the cold winter months, either going into the seasonality that a lot of some of the co-hosts will talk about seasonality. I think it's gotten a little ahead of itself. The last 4 or 5 days have had an egregious move to the upside. But commodities do that. Like they go in one direction. They go there for quite some time. I mean, look at soybeans, how they've done. I thought it was a buy the rumor, sell the news event somewhere around here, just a little bit lower than where we are right now. But soybeans finally having one little down day, but not much.
No, that's a blip in the radar on that soybeans. But commodities are pretty funny because you're right. I think they're a moving vehicle. It's almost like a tanker. You can't get out of its way. Like when it starts to move, they start to move. But when they start to go up, their implied volatility goes up too, which I think is crazy. So Bitcoin's volatility came down by 50% with this down move.
Yes, Bitcoin volatility has come down a lot, and that's why you saw some of those products like BMNR. I know it's Ethereum and others. IBIT volatility contract with them too. So. Yes, you had a lot of contraction today. You might, you got some elections across the country too. Oh, here's what's your assumption. Let's do that before we.
Oh yes. Put the assumptions in.
We need your trades.
How did you and Nikki like the ones we would fill in for you in the first couple of times? We liked it.
It was great. Go to tastylive.com/assumptions. Send us your assumptions so we can place those trades tomorrow. So make them timely, make them liquid if you can, and we would love to hear from you. What I was going to say is you got some elections like in New York and other places where that could maybe have a little bit of a short-term blip or effect on the market overnight too. So I really think if we get a downside move in the market overnight, that will be the lows. You got to scare the children a little bit. I mean, like you said, we don't go down 2 days in a row.
That could scare the children. Like I said, I think we need to go lower. I really think we do. I just don't know that the market is going to allow it. I think it's going to be, I think it's going to try to get its footing, and I think it's going to be like a baby deer.
You're speaking like a millennial now, Liz.
But it's going to be like a baby deer. I think it's going to try to get its footing, and then it's going to fall. Do you know what I mean?
Baby deer?
Yes.
On that note, I'm going to take a quick 90-second break and come back. Well, we're going to come back tomorrow. How about that? Even the S&P is down a full 80. We'll be back in 90 seconds. No, we won't. Tomorrow. Peace.
Bye. Peace.
And we are back. This is Overtime. I'm Ilias Pivac in San Francisco. That's Dylan Radigan in Milan, our returning champion with a very fancy sweater, Mr. Jamal Chandler in Chicago. Gentlemen, do we have anything here? I mean, what is this today? Were the markets open?
Jamal? Easily one of the most boring day in well over a month. Quiet day, if you will. I mean, there's really not much to speak of. Markets seem to be calming down. just a little bit over the last 4 days here. I mean, what can you say? Honestly, it's probably needed. It's probably what's best. But, you know, I have to walk back my comments about this is the greatest market alive because it has been up until today.
You're gonna abandon it after 1 day, Jamal? Come on.
It needs to keep going, Dylan. It needs to keep going for me to continue to call it that. Okay, this is not okay. It's not okay.
How many times do I have to say buy the dip?
Is this the dip to buy?
Yeah.
Every dip is a dip that you buy.
So,
although this is not a dip, this is not a dip. This is
not a dip. Okay, so this doesn't count as a buyable dip.
Just a day off among friends. Just relax.
Got it.
What do you know? Not every day can be a trip to Disneyland. Okay, sometimes the market opens, the market closes, prices they didn't change that much. Everybody can calm down.
So sometimes you just go to 7-Eleven and get a Slurpee instead of going to Disneyland that day.
Sometimes you get a Slurpee and calm down.
You don't get the hot dog though. Listen, word to the wise.
Never get.
I don't think I've ever gotten a hot dog from 7-Eleven.
No. My college self reaches from the annals of time and says, "Don't do it."
I have to admit, I was once slipped an edible, and it did result in a hot dog at 7-Eleven.
I like where this is going.
It resulted in no more edibles and no more hot dogs at 7-Eleven.
The annals of time they call. I would point out, here we have the S&P 500, and there is the beginning of last week, which would be the glorious gap here and continued supernova-like situations. Then there was the Fed, and then there's everything else. So something happened right here, clearly, and I would argue it's the same thing that we were talking about at the beginning of last week. This idea that the markets were priced for perfection. They had three pillars that they were standing on. The first was that the tech earnings were going to be fine. The second was that the Fed was going to endorse their pricing for 2 more rate cuts, one in October, which obviously now we have, and another one in December, and that the Trump-Xi meeting was going to be fine because Bessent was already out there. He already said everything is cool. These two just need to rubber stamp it. The rubber stamping was commenced. No issue there. The tech earnings were, for the most part, fine. Meta obviously missed. Other than that, for the most part, okay. The Fed threw a grenade out there. And we can see it.
An unwelcome grenade, I might say.
An unwelcome grenade.
No,
where Powell came out and made a whole show.
Made a whole big show. No need for that, sir.
Big show. Came out there, pounded the podium, did the stuff.
Said a little hear ye, hear ye.
And what do we have to show for it? The market sells off the very next day and has been listless since.
I mean, listless since you speak as if it's some sort of epic sojourn, and yet really we speak only of a few days.
This is certainly the case. We have a sell-off in the wake of the Fed and then not follow through. So the markets are not, as it were, panicky or anything of the sort. They are, however, unsure of how to proceed next. And this is an interesting thing because today we actually get a little bit of economic data. It's not good as such. The ISM manufacturing index comes out, and it comes out weaker than expected. A contraction in manufacturing activity was expected. They got the contraction, but it was a faster contraction than expected. Not really great signs in the internals of that report. Employment on the manufacturing side shrinks again, albeit at a slightly slower rate. New orders fall, albeit at a slightly slower rate. Inflation cools, but is still very elevated relative to even recent history. Although, in fairness, since inflation peaked earlier this year in this survey, it's down a lot in terms of pace. It's still rising, but at a much slower rate. So, still high by historical standards, not nearly as high as it was earlier this year, rising, but slower. So, kind of a mixed bag. Market ultimately doesn't do anything with it, but when the numbers come out, you can see that right here. See if we can pull this up to a shorter term chart. Okay. So, it's not like we don't notice, but we also don't really go anywhere. So, it's an interesting sort of thing. The markets don't love these numbers, but ostensibly they also don't hate them, and we're in kind of a weird sort of no man's land still. And of course, we're still on shutdown. So maybe we'll get an NFP number at the end of the week. Maybe we won't. We'll get a service sector ISM number on Wednesday. We'll get consumer confidence from the University of Michigan on Friday. The earnings calendar is kind of slow, barring Palantir, which we'll get to as soon as it comes out here. Anything on this standstill, gentlemen, that gets you to think that there is a decision to be made?
Standstill in the government, or you just mean standstill markets?
Are we doing anything with this?
Not really. No. I mean, it's not interesting enough. We're just kind of watching. I mean, we're watching from the sidelines. The one thing is that we noticed from early this morning when Tony and I were on, the VIX futures contract, the November contract, was 19, like 1910 early this morning. It did sort of fade towards the end of the day here because basically nothing happened. And I mean, I think that's kind of your cue. Like, not much is going on. There's no reason to really force much of a trade, if you will. I mean, the really only thing is this weak earnings slate that's coming up right now. So it's and I say weak because, again, a lot of the big ones have gone. I mean, this is one of the last big-ish ones, but again, this is not a Mag 7 name. This is just one of their friends. I think the other big news is for today is, look, pick a name from the tech space. Pick a big name from the tech space and get out a blank check and write in however many billion you want and add OpenAI onto it. And that's been the theme for the better part of 2 weeks. Every day we come in, there's a new deal with something involving OpenAI and somewhat of billions of dollars. And today that was Amazon.
They're building quite an ecosystem here. Palantir I have on the screen. It had a little bit of a pop here, clearly, as it came out. Not really holding yet, but we'll see. It's early yet. Results were a little bit better than expected. 17 cents a share expected. It was 21. Revenue of 1.09 billion expected, 1.18 actually. So 24% beat on EPS, 8% beat on revenue. Not bad. Clearly, and the markets like it, clearly. But Jamal, to your point, this is not one of those $1 trillion market cap situations. We're talking about, about 500 billion-ish market cap? Now, in fairness, this is the biggest name of the week as far as kind of heft.
Well, there's AMD this week.
AMD
this week. AMD is probably still there, right?
AMD is this week. It is a smaller name, slightly. 380, almost 381 billion market cap. But obviously a big name in the kind of universe of tech names.
Yeah.
And AI adjacent names.
True.
Qualcomm is also on Wednesday, as long as we're sort of looking at that. Maybe if we care, Robinhood. That's on Wednesday too. But I'm kind of struggling to find something that's going to necessarily move the needle here, like the names that came out last week could have, and they didn't. Not really. I mean, if we
how about can I offer you a different point of view, if I might?
Yes, sir. Of course.
It's obviously not going to be an earnings-driven week.
I would think.
Nor is it going to be a data-driven week because there's no data because the government shut down, blah, blah, blah. And we know where the Fed stands, which is less rate cuts, not as soon as you think, just calm down.
Right.
Which leaves us with two sort of obvious trades from my humble and conservative and reliably, inconsistently accurate perspective. One, you got to buy the US dollar. What the hell's the matter with you? If the Fed is doing what they're doing and the dollar has been jammed up as hard as it is, and I know the dollar's already performing, I feel like long dollar trades are an intelligent individual's point of consideration, as long as this new Fed posture exists. In fact, I would even, as you twizzle the dizzle there around the end of that chart, I believe that ties directly to the come to Jesus speech from the Fed chairman.
It most certainly does.
So rather than sort of noodle around in the sort of unknown and unknowable world that is all the financial markets, let us isolate on a few things that we can identify. One, the pot odds of a stronger dollar have gone up substantially. The dollar has gotten stronger meaningfully in the most recent days, and there's reason to believe that it could continue to get substantially stronger from here.
I would concur. I would in particular point our attention to the euro, which at the end of last week made something of a technical break through what was support and ostensibly opened up some room for extension. Not all of them look like this. So again, here's the euro. Here it is breaking lows last week and exposing lower levels. If we looked at the pound, where, by the way, we have a rate decision this week, it also seems to be grinding through something or other. Although, in fairness, if you look at the spot level, and this is the most convenient thing ever, that we now have spot on these charts, and we can look at that as well. If you looked at spot, it's not quite breaking through yet. So when spot and the futures don't agree, I usually default to what spot is doing as far as a technical kind of consideration, because it's the more liquid thing. And the futures sometimes have sort of contract-related nuance. So I typically will look at spot to see if that's got the break. Pound is maybe not there yet. Aussie is maybe not quite there yet. Here's the Aussie right here. It's maybe still holding some levels. But the euro looks very much like it's crossed the line here. And so there are opportunities on the board here to be buying dollars with solid risk reward.
So again, in a world of unknown and unknowable, trying to focus on the things that have some variable, some at least logical basis for the trade. The dollar's been on a price extreme to the downside. The Fed has repositioned itself in a way that is dollar positive. I would also add to that, and you can take it or leave it, but recent news headlines that suggest that Berkshire Hathaway has been a mega buyer of U.S. Treasuries, which of itself is a dollar long position. So, the other thing, if you're long dollar, maybe also long bond, which I know may be somewhat contradictory to the recent Fed commentary, but I don't think that the Berkshire Hathaway crew is a bunch of idiots.
Yeah.
And so I don't mind entertaining a bond position, especially in the context of the recent sell-off. I mean, sell-off is a strong word. The recent pullback, I'll call it. So I don't mind long dollar. I don't mind long bond.
So far, so good. I mean, I'm already long the bonds. I bought them when there was the breakthrough over here. And then when we pulled back to retest it, I added some. So, and I'm doing this through TLT verticals, again, to keep size contained. As ever, I'm constantly attempting to reduce my exposure to big, sizable things in these weird markets. And so rather than using ZB or even 30Y futures or 10Y futures, which would be the smaller and the rates-based futures, I'm looking at the ETFs using call verticals, and keeping size contained, keeping risk defined that way. And if we see a little bit of a wiggle higher here, once we test whatever this congestion is, I'll probably add again.
So, again, because we can swim around in this equity mess till we're blue in the face, and who knows what's going to happen. But I would be, again, call your attorney here because I don't know what I'm talking about. So I just want to make that extremely clear. But considering whatever my attorney and your attorney might, come up with, and considering the fact that I'm explicitly telling you I don't know what I'm doing, I am telling you I believe the dollar is a lovely opportunity for any young or old man or woman. And I believe similarly a long bond position is worth consideration. The third thing that I might venture in this vacuum of information post Mag 7 earnings would be Amazon. I continue to harbor great hopes for Amazon.
You were all over that one.
In the scope of the Mag 7. Now, my hopes have been somewhat diminished because you can see the price action that has occurred. Which
can we just pause for a second and say you wanted this gap?
Did I not, as a man who needs a lawyer to protect him from any of his opinions, and my lawyer should call your lawyer, and the fact that I don't know what I'm doing, but I would like to say, bullseye, my friend. I call that one dead to rights.
Weeks in advance.
I've been saying
weeks in advance.
I called that turkey right there.
Off this bottom, by the way.
Pure Radigan glory right there.
That's
when you buy.
I move we rename this the Radigan from the former silver situation.
I appreciate it. And when you buy your lady friend a new car, just don't forget to send my lawyer a thank you note. As long as I'm not held liable for future losses, I don't have any interest in your. And I hope you enjoy the money that you may have made, but do not hold me to account.
Past performance, as we know, not indicative of future results.
Any performance is not indicative of anything. Okay, it's all uncorrelated. As I said, don't know, can't say. But I did say Amazon's is the sleeping turkey out there, and that is correct. I
mean, to the point where you said they were due for a big gap. And we have a big gap.
As if I was a soothsayer in the piazza of Marrakesh with a cobra.
Do they call it a piazza in Marrakesh?
I mean, whatever. I get mixing up my languages.
We're picking up what you're putting down.
I think you understand what I'm saying, which is that I made a prediction and it came true, which I think is
yes, indeed.
To sort of leave it. We'll leave it there. But what I would say now, I guess I'm a little less Amazon positive as a result of the gap that has henceforth occurred. But I still do love that dollar, and I don't mind me some bond. As for the rest of it, you're on your own. I can only
Mr.
do
Chandler. Let's come to you. You've been sitting there quietly. Let's come to you and get.
No, I'm enjoying this, man.
And get a similar readout here.
Well,
in the absence of news,
call your lawyers and make your disclaimers, and then tell us your predictions, sir.
I'm sitting here because I'm happy. This is great. I mean, it's true. I can say that I remember when the Radigan surge was predicted. I heard it 3 weeks ago.
Yes.
You've probably been saying it prior to that, but
we were here. It was said.
I didn't know if it had been said prior to me being on, but yeah, you're right. That was when we talked about it. And it was a huge move, and it makes me say, and it kind of coincides with what I was saying earlier. It makes me say, what's the next name? What's the next big name that's going to do a deal?
But I think all you need to do is call up the Mag 7. And look at whoever has not had a gap higher in the past 3 months, which is why the only reason I was nailing Amazon. So the obvious play here is going to be Meta. I would say this is probably the biggest opportunity in the Mag 7. If you're literally willing to abandon Meta because they had a Fugazi quarter and got a little jammed up, you gotta think about, you gotta better have a conversation with yourself, because I tell you right now,
or maybe your lawyer
or your attorney for sure. But I can tell you what, the folks at Meta know how to make money.
Yeah,
they know how to make a lot of it. And buying Meta at a lower stock price is not a terrible concept.
In absence of any great trade out there right now, that's actually one of the ones that I like. I have that on my personal account. They're calendar call spreads, but I have some long deltas in Meta. And in Microsoft post these earnings move, I mean, these are some of the bigger names. And if AI is the theme right now, these guys are at the forefront already, right? I mean, we've heard about different deals and things that they've had happen at times. So those are two of the more interesting trades for me right now.
And even if the IV is kind of not that hot, I still don't mind some put spreads. Just as relatively low risk, relatively easy money on the board in the Mag 7 is running put spreads 45 days out on Microsoft and Meta. Even if you give yourself a little wiggle room on the downside, doesn't seem like a terrible concept.
I like it.
I mean, I will say this. To my mind, Microsoft looks a little bit better than Meta here from a kind of
technical standpoint, yeah, for sure.
Perspective, from a technical perspective, at least it's near the bottom of a range where it's held, sort of give or take, rather than in apparent free fall. I would want some sort of an uptick out of Meta. I don't need to buy the absolute bottom. I would just need to get some kind of a wiggle to the top side to show where that bottom is, maybe, at least hypothetically, if it holds, and for that to give you a little bit of a better risk-reward math, at least to give you a jump-off point. So
I agree with you, but I would
wiggle here. You say, okay, back up here, maybe.
I agree with you, and that's prudent. I mean, that really is right. I mean, that's something that we're taught. We learn that, those of us who've learned trading, because you don't want to be catching a falling knife. We'll pause it and say, this is Meta we're talking about in this situation. I think you at least start building a position, a small one, because when it goes, it's going to go, and you're not going to be able to get in. I mean, it's going to be going.
And might I also offer that the IV rank is higher in Meta, so the put spread gets you a little bit more meat on the bone.
That actually is an excellent point. Selling puts here does let you kind of look at this and say, well, you know what? I don't need to pick the absolute bottom. I just need for this thing to get less squirrely.
Yeah.
And that's it.
Run them at 600. Give yourself a leave, give yourself a little room. Run them at 600, 45 days out. Free money.
Well, let's take a look here. So we're at 637. Let's say we're not going to get greedy. We're going to look for a return to like 700-ish, to whatever this underside was, as a kind of preliminary idea.
Sure.
Okay. So if we did that, let's go sort of classic Tasty methodology, in this case, 46 days out. And what we're going to do is we're going to short a put vertical here. Let's see where our liquidity is. It's not bad. And let's say if we were to push this out, as we said, to 700 or so, it's not the worst. I mean, we're not quite looking at 2-to-1 risk reward, but it's not awful by any stretch of the imagination. If we decided to essentially sit right here and say, okay, I'm just going to have a really tight sort of backstop here, where if it wants to keep going and doing, to your point, let's say you give yourself room out to 600.
You go.
Okay, a little bit. It's not as great, but you really don't have to go out that far. I mean, if you were, let's say, even just keeping the leash here real tight and said, you know what, I'm going to get in at the money here and maybe backstop out to 620.
Sure.
Something like that. Okay. It's not too bad.
Not at all. I mean, this is one of those names where I wouldn't really mind being short some at the money.
Sorry, Jamal. You also have to look at the probabilities.
Yes. I mean,
you got a 2/3 chance this thing pays, as far as I can see.
Well, so the probability of profit here, 52%, but also you're close-ish.
To 1-ish.
To one. You're not quite there, but it's not the kind of big skew against you that you'd hate. And of course, you're selling puts here, so you're getting paid up front. So not the worst. if on the other hand, and I would probably, because I'm a very neurotic risk reward sort of a purist.
Let's go to your Microsoft. I know you guys.
If you went to Microsoft,
no, you like
and
it. You like it better.
the IV rank here is lower, so you could attempt perhaps to buy calls.
That's right.
And said, okay, let's just see if we can run this back to 550, 560. So back to these highs. So if you did that, again, 46 days out, and in this case, we're going to go long the calls. And let's say we ran them 560, by the way, nice and liquid. Not bad.
520, 560. What are we looking at?
I mean, we're
like that.
We're risking 1.2 to make 2.7, 2.8. I mean, this is better than better than 2-to-1 risk.
But also your probability is down to in the 30%, so it makes sense you get a bigger juice because you got a less lower chance, you know.
But if you're looking at better than 2-to-1 risk reward, all you really need is to be right about 33% of the time, and you're making at least break even. And this is better. So not bad. If you wanted to tighten it up and say, you know what, I'm just going to take a little punt up to 540 and that's it. Keep it small.
Still
not bad. Not bad.
So
1.3,
I'm doing it using November, December calendar call spread option. So I'm short the 550 and I'm short the 550 and 575 in November, and I'm long the 550 and 575 in December. These are in the personal account. That's the way I'm playing it. Give myself a little
Jamal,
time.
might I ask you a question?
Yes, sir.
What's with the calendar call spread?
It's
why that specific architecture, if you don't mind my asking.
Yeah, sure. It's a good question, and the funny part about it is I used to hate calendar call spreads when I first learned how to trade. Calendar call spreads are these trades that essentially emanate out of the fact that the volatility assumption one month is wrong and the other one is right? Like that's how they initially started out. And that's how people made so much money back in the day on the floor. Something's wrong in 1 month in natural gas, but it's right in the next month. And so we're going to sell that month and buy that month. That doesn't really exist anymore, right? Everything is perfectly priced. What I use them to do, it allows me to participate to the upside without just buying straight up outright calls. It basically offsets my cost basis, right? And so,
but why run a calendar spread to subsidize your long or your short position as opposed to just doing a normal spread? Like why take the time? Why instead of just selling a vertical, or why add the time component?
Because it's cheaper. So if I wanted to buy the, let's just say the 520, 540 spread in December right now, 20 wide spread, that's $8. Right. And
yeah, I mean, that's it right here.
Yeah,
that's
$8,
got
right?
On the screen.
Okay, so now
right
calendar me up and show me what I'm gonna.
And that works. That works too, of course. But and what I'm doing is playing for even further upside. I'm using the 550. I'm selling that 550 in the near term, so I'm collecting something there, and I am still long further upside, further out, and am doing it for $4.
Sell the short dated calendar option and buy the long dated option.
Yes.
You get more exposure over time and subsidize it with a contract that's going to expire inside the duration of the long position.
Yes, and so I'm playing for a bigger move.
Sell December by January, for instance.
Yeah, exactly. So the reason, and I do it further up. The reason why I do it further up, because again, if I did it at the 520 strike, it doesn't have as much meaning. And if it does make a big move, I don't make any money that way. So I do it further upside because my thought process is further up. I don't think my assumption is this is not going to move $10, $20. My assumption is this going to move back towards 550. I mean, for right now, that's a pretty sizable move. So
you'll take something purely intrinsic on the outside and play the volatility, basically.
Yep, with a little bit of time component, and I'm offsetting it by selling near term.
What do you say, Ilya? You like it? Don't like it?
I think for me, it's probably more complex than I would do. And in general, I mean, I'm not I'm not frequently an individual stocks.
You're not a ticker man as it is anyway.
Sort of animal, but I mean, let's price it out. So we're selling the 555 in December, yes?
Selling the 550, buying the 550 in December, selling the 550. Yeah, buying the 550 in December. Long that.
Okay, so we're buying the 550 in December. Here we go.
And then selling the 550 in November.
What are we selling?
550 in November.
Selling the 550 in November.
And so what this does too, in this case, is, say there is no deal that makes it happen, right? I mean, again, they've done a lot of deals. I actually don't expect them to come out with another OpenAI deal, but who knows? But in this case, it allows me to buy time because, again, we know how technical works, and this has a little bit of technical wood to chop to get back to highs. That might take the better part of a month, right? And so this is coming from somebody who used to just outright buy calls in this way upside a lot. Your calls are just bleeding in that December if you're long those, right? So why not sell some near-term NOV against it? We talk about expected moves. You can see the brown bar. This is a little bit outside the expected move. So this allows me to not necessarily be antsy about the calls that are losing a little bit of money every day in December because I'm short the NOV. And again, Ilya has the near to, I actually have regular NOV, but that's fine too. I mean, you can do the NOV 28. It doesn't really matter as long as it's, a couple of, say, 2 weeks or a month in front of the month that you're long. So,
well, and I mean, we can see what just happened with the cost, right? So we went from $8 down to $3.50, and it looks like we're pretty even. But I mean, ostensibly, if the NOV expires and you still want that protection, you just roll that side of it.
Exactly. Yeah, exactly. And to really answer your question, Dylan, why do this? This is something that this is me maturing as a trader. Again, I just used to go just buy upside calls because I'm like, this is going up. I know it. It's going to happen. And maybe I'm right.
Straight crazy pants.
Yeah. But who knows when it happens, right? So this just allows me to be a lot more patient about the trade and not be wondering every day, what should I do with these upside calls in December that I don't have anything against, right? This is what that does.
What becomes an interesting thing, and I mean, this essentially just becomes a capital efficiency thing. So it basically gets you into the 550 December calls at a price that is much, much lower. Worst case, you have to put something else against it if basically the move doesn't happen by the end of November, in which case, ostensibly, then that call just gets expired and you just got in for 350 instead of 8.
There you go.
So as far as capital efficiency, as far as getting into a 550 call on the cheap, this does that. For me, I like directional. I use call verticals and ETFs on big kind of benchmark assets to kind of mitigate risk that way. And I'll usually go further out than 45 days. If I can get some 60s, I'll do that. And that's really just to dilute my exposure to upfront delta, to give myself more time, and to lower sensitivity to whatever the underlying does, so that I'm managing risk that way while being directional. And speaking of, one thing that isn't being directional here, but maybe soon, and I'm in it for now, is gold, which has apparently gotten.
You're long gold here after the.
I'm short. I'm still short.
All right.
I'm still short. It hasn't shown me that it wants to break back into here, and so it's still kind of in this whatever this sell-off is.
Yeah.
But it's definitely become stuck here a little bit.
Call it stuck at 4,000. Let's call it 4,000.
Let's call it 4,000.
Sure.
Do we think that there is more downside here? If what we're saying is we're going to have some sort of a stronger dollar. The Fed is not as antsy about going again in December. The markets have clearly walked back a good bit of that. In fact, if we look at the CME Fed Watch tool here, we're looking at a likelihood of 67% that we're going to get the cut in December. Still better than even, but down from 94 a week earlier. So clearly there's been a meaningful shift in the odds here by a significant amount. That we're going to stand still in December, 32.5%, up from 5.5%. So big shift in the wake of the Fed. And the vol here is pretty elevated, let's say, at 41.7. Do we maybe want to sell some calls here? Which is, by the way, so I have exposure here two ways. I'm selling call spreads and I'm outright short the 1 ounce future. So I've done both. At 41.7 IV, seems like selling calls might be one way to go about this, looking maybe for even just a swing down into here, even something modest. Thoughts on this?
Well, I think I've said this before more recently, but I mean, it's a very different trade from October 16th when it was making the run to the highs, right? I think the 16th was the day I pounded the table. It's a very different trade now for a lot of reasons. I mean, obviously the action that we see now, but the other thing, the skew is to the upside once again, which is typical for gold. And it wasn't to the upside when it was making that move on the 14th, 15th, 16th. It was flat skew. And that was the one thing we talked about. And you could kind of tell like something was about to happen, probably a move to the downside, which it did. Now it's a whole new trade again. And if I really am indifferent on price at this point. I mean, I have nothing on in the actual future. I have some ETF plays on, but if you really force me to pick a direction on a poll, I'd probably say a month from now it's higher, I would think. But does that include some dip in the meantime? Maybe it does, but you can see it's struggling at 4,000, and that's because there's a lot of people at that level. I mean, clearly buyers and sellers. I don't know which one's going to give way yet, so it's hard to tell, but there's definitely something going on at 4,000.
Yeah, I mean, you could give yourself room selling these calls at the money, let's say, and give yourself room out to 375. You're starting to get pretty close to 1-to-1 risk reward, which would be pretty great. Even if you tighten this up, I mean, you can get real close to 1-to-1 here if you wanted to take a flyer and just look at just vol extraction.
I mean, on a normal day, in a normal world, I would agree with you that gold is more likely to be lower than higher in a world where the U.S. currency has tailwinds in its favor. And for that matter, the most legendary investor in the world is long bonds and blah, blah, blah.
Mm-hmm.
My issue is I really don't know why gold went up as much as it did in the first place. I understand there was the whole sort of debasement trade discussion, which you did a pretty good job, Ilya, of refuting. And you asserted an alternative hypothesis, which was the the decoupling trade, the
multipolarity idea.
The long multipolarity with gold as the bridge currency.
Yes.
But even that, I think, is somewhat compromised by some of the recent deal making and whatever between China and the U.S.
Yeah.
And so, because my question is for me to really come into an opinion on what gold's likely to do from here, I would need to get a better understanding of why gold did what it did between, let's say, August 1st and October, whatever that is, 14th or 15th.
Mm-hmm.
I don't know why gold went from 3,200 to 4,000 as fast as it did. And so,
I mean, for me, it really is that multipolarity idea, largely around and sort of the way I think about it is, here is October 10th right here, right? This is that Friday where the president spooks the bejesus out of everybody with his "we're going to hit China with 100% tariffs" thing. And you can see that here. So, I mean, that's this right there. And obviously, since then, stocks have righted the ship a little bit. But we can see here, okay, that's that day. And gold doesn't ultimately make up its mind that day. That's not terribly unusual. Perhaps waiting to see what China's going to say. China said all kinds of feisty things. It didn't look back until it ran all the way up here into the sort of approaching the mid 4,000 area. And then had this massive reval. So
but there wasn't even an obvious cat. I mean, because it was Jamal, yourself, and myself were on together on that green bar that was literally the day before gold came unraveled. And we spent most of the hour talking about how gold is due, gold is due, gold. I didn't even have a position on, and I'd made that sell off. But we did have the discussion about how can this keep going, and blah, blah, blah. And sure enough, the next day it got, flipped over.
It got whacked, yeah.
But if my memory serves me, there was it wasn't like there was some super deal between China and the US or some super deal on rate. Like, I don't know why gold rolled over that day, other than it was overdue.
It was overdue.
Yeah, I mean, it looked overdue.
But I could say it looked overdue the day before.
Right, but there were some things that came together that day. I mean, certainly you had a little bit there already around Bessent was out there saying, listen, this is not a thing. We're gonna have a deal. Trump is gonna meet the guy. It's gonna be cool. Nobody freak out. That was already starting to get going at that point. And if we take a look at some of the kind of recent developments, in particular, I would say speeches from Fed officials kind of around then. The one that really stood out that day actually was a speech from Waller. And sort of, there was a bunch of speechifying around then, but the Fed was already starting to signal like, hey, whoa, calm down. We're not doing all of this easy. This is not.
But you're saying the gold rollover is triggered by anticipated adjustment in Fed rate cut expectations, or I
don't think so. I think that was a helpful thing, but I don't think that was the thing. I think the thing was Bessent and company, with Trump echoing them, were walking back the China spook.
The multipolarity walk back.
Yeah.
Yeah, I think it was just overstretched positioning. I mean, you got to remember back in that day after, I mean, again, it was heading up into the weekend. It fell on that Friday. It went back up again on that Monday we were on. And that was a day where I think the previous 3 days, it was one of the top 10 as far as options trading on GLD and all these other things. I mean, it was a layup. I mean, look, I'm going to call it 9. I hardly ever say that, but that one was definitely a layup for sure. The skew had changed. It was clear there was about to be a change. Did we know it was going to be $300 move in one day? No, but we knew it was going to be some type of move.
But I mean, I would say if I don't know what the date on that is, the 15th or the 14th or whatever that sell-off was, if that was a layup, I would say picking a direction at 4,000 is the opposite. Is I don't see how you could possibly do it with confidence.
I agree.
Either, if anything,
I feel the same.
This may be sort of a classic, like, I mean, I just don't know. I have no idea how to.
Well, so that's where kind of selling calls with vol at 41.7 is where my head would go if I didn't have exposure already. And again, I'm already selling calls here and have been basically since back here. I missed this chestnut right here. This was not where I got in. And had I known about 1 ounce gold futures, which I was completely oblivious to existing when this was going on, that you could see on a shorter term chart here, in sort of on the way into this sell-off, you start to see kind of the architecture of where after hours you could get something off here on the way down. It's not the most obvious, but right here, for example. But I managed to get in down here. And so this is where I'm short calls. And ostensibly, if I didn't have anything on, the only thing I would do here as we sort of hug the top of whatever this range is would be to sell calls. It wouldn't be an outright just short.
Yeah, it's tough at this point. Like I said, there's a lot going on at this 4,000 level, and I just kind of want to, I want to wait it out. I just want to see what it's going to do. I want it to make a decision one way or another. I want the other layup trade. Honestly, this is what it boils down to. I want the other layup trade, and right now,
is it the layup trade right now? Long dollar.
Yeah, I think it is. It's certainly more layup than half court for sure, but that one is going to take some time, right? Similar to probably the Microsoft trade we outlined earlier, and then the Meta trade.
Yeah,
might take a little bit of time. This one was. Things were just getting to a fever point. You guys remember? We pulled up an hour
on it.
We pulled up the news. And then it was talking about why you should be in gold right now. I bet if you pull up gold stuff right now, they won't say that. That was the other part of the equation to the trade.
Yes, I mean there was definitely something of a sentiment extreme. You could see it in the conversation. Before we run out of time here, while we're on this subject, I want to take us to Bitcoin here, which is also kind of hugging the bottom of its recent range. Now, I've been short into this, but from up here. And so I'm kind of trying to see now what this thing is going to do.
I mean, isn't Bitcoin at this point nothing more than some sort of a measure of speculative sentiment? Basically, sort of risk on versus risk off. That it's.
I mean, I would argue it's been that for a long time. But
it's
yes,
not a store of value. It's not a currency alternative. It's nothing. It's just the sort of purest measurement of the psychology of the marginal speculator.
Yeah. Steroids-addled NASDAQ, if you will.
Be that as it may, it sure has a lot of money being thrown at it right now, whether it's the actual crypto itself or the future or the ETF. There's a whole ecosystem around it now, right? And so as a result, it's I think I'm glad you brought this up because it's in an interesting area. I think you can see it's been trading between 100 and trading water between 107 and 110,000. And I think it's a good one to bring up because something's going to happen in here soon. Part of my feeling, what I would like to say, no, and this is a good one too, because to Dylan's point earlier, gold. The other thing that troubles me is the relationship with the dollar seems to have broken down. This one, the relationship with the equity markets is very much together, and
seems
that's the weird part.
Too, yeah.
Well, it's broken down, but that's the weird part because is it actually breaking down or is it just holding? Is it waiting for the markets to actually fall and then it's going to fall? Or if we have a situation where market reaches this new high, this thing is going to bounce back up. That's really what I'm trying to wait and see. And I don't feel like predicting. I want it to tell me.
What's interesting is sort of asking the question, which market does this have a relationship with? Because if we look at, obviously, S&P, it looks nothing like this. If we look at the equal weighted S&P, it looks much more like it. And so, and if we look at the equal weighted NASDAQ here, this certainly looks a little bit better. So you sort of wonder if really what Bitcoin is more so approximating, and again, they're not perfect, these charts, but the S&P, unlike the tech-skewed sort of headline index, this equal weighted version is basically sitting at the bottom of a range that has held since back in kind of mid-August, let's say. So right around there is kind of that mid-August bottom, and we're basically there. If we look at Bitcoin here, I mean, that's mid-August right here.
I would rather be long Bitcoin than long gold.
Interesting.
I mean, I would be long Bitcoin, long Microsoft. I would do it in this order. Long dollar is my most confident opinion.
Mm-hmm.
Long Microsoft and Meta, a near second. Long Bitcoin, a distant third. Gold, I am clueless. Haven't the slightest idea what to do with gold.
Why Bitcoin? Does it feed into the supernova
Just
theory?
because I think Bitcoin's on a low, like it's at a low, that it just on a price level basis, that gold. I think there's a reasonable case that Bitcoin can make a run at $150,000 by the end of the year. I mean, it took that run to $1.25.
Mm-hmm.
It got face pounded on the deleveraging in October. And it's sort of consolidating here in the just north of 100, $1.05 or whatever it is, $1.06. And I just feel like there's a level there, not to go all technical on your ass.
I mean, there does seem to be some kind of a range bottom down here. Now, I'm short via IBIT, and I got in around here, and I'm looking to see what this is going to be. But something's going on down here. Something is attempting to hold, and IV is not the worst. I mean, 51.6. So if you wanted to be a seller of premium here in IBIT, which is a smaller contract size than any of the Bitcoin futures or anything like this, I don't hate it. I'm on the other side of it, but if I was looking at this with fresh eyes and not waiting for this to do something, I don't hate it. My thought process in connecting this with the equal weighted S&P is that maybe what this is in fact a barometer for risk. And the headline indexes are just skewed by tech holdover. And this is telling us something, but unclear if that's actually the case. I wonder, though, if this were to break, if risk wouldn't follow down.
I think if for some reason, which highly unlikely, if equity markets break, this definitely breaks down hard.
Oh, yeah. Yeah, I think so. I wonder if this one ends up...
Are you willing to be short? I mean, we're out of time, but are you willing to be short NASDAQ or short Bitcoin? I mean, you're already short Bitcoin. So.
I'm short Bitcoin. I'm short the S&P through SPY verticals. I am not touching the NASDAQ here. It looks for now like it wants to hold up. But I'm short a little bit of SPY. This looks a little bit stronger. I'm probably going to want it to come under the recent range and then maybe look to do something if that occurs. But that is a conversation for another day because overtime is out of time here. Thank you, gentlemen, as always. A spirited conversation. We actually did quite a bit of trades setups in this very quiet, seemingly opportunity-less market. Not so devoid of opportunity, as it turns out. Stay right where you are, everybody. Macro Money is coming right up, where we're going to dig into the non-event risk week that is in front of us from a macro perspective. And we'll be back for this show in a mere 23 hours. Sit right where you are. We'll be right back.
got a good, good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad, mad hatter. Call me one of a kind. I'm a true. I got a good, good feeling. 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 Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever. I got a good, good feeling. 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 And when it comes, you gotta grab it. And never let it go. I got a good, good feeling. I got a good, good feeling. I got a good, good feeling. I got a good, good
Yeah, enough fun on the block all day, all night. Ins and A, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real.
So, did Fed Chair Powell break the stock market after all? That's what we are asking here today as the markets take a big wallop. We're going to try to figure out what happened and what it means going forward. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And what we'll start with first and foremost is a look at the price action and what it is that these markets showed us today. Because, of course, as we'll find, there is seemingly more in the price action than there is in terms of its justification. There is very little event risk that stands out right here to show us how we ended up with this sea of red. And it is risk aversion seemingly at its most classic. So stocks, of course, we see are down. No big surprise there. Significant losses for the S&P, significant losses for the NASDAQ. But and if we might as well make note here right from the start, Bitcoin back apparently to doing its amplified risk sentiment thing, where when stocks go up, it goes up more. When stocks go down, it goes down more. That seems to be back to where we've come here, and down more it really is. Bitcoin off over 7% here. As we look elsewhere, the mix starts to get really interesting because whereas we have had a significant pickup in yields over the past week, and more on that in a moment, here yields actually come in some. And perhaps what's most interesting about this is they come in some most at the long end. We can see the 2-year basically neutral here, generally unchanged. It's at the 10-year where we see a downtick of almost 0.5%. And that seems to give all of this a little bit more of that risk-off sort of vibe, where it's not so much that it's this catalyst or that catalyst, or where we've priced in this or that for the Fed or whatever it is. It's more like capital is flowing to defensive assets, to those assets that typically thrive in a defensive environment. When we look at, incidentally, the decline in gold, it becomes very clear how not a safe haven it actually is. People talk about gold as a safe haven because it oftentimes goes higher when yields come in, which in turn happens in periods where the markets are somewhat defensive. And so there's an incidental thing there where stocks might go down, there's risk aversion, bonds go up, yields come in, gold might go up in that environment because yields are lower and it yields nothing. But that need not be the case. In fact, all of 2022, say, when yields were going up as stocks were declining with the Fed rate hike cycle, gold was falling right in tandem. And what we see, of course, in the most recent weeks and months is that gold is kind of decoupled to some extent from both the dollar, one of its main foils, and yields, the other one, largely around this idea that it is more so a kind of multipolarity asset, a kind of go-between. If the US and China, say, were to drift apart, if deglobalization were to become more entrenched, and you were to look at more of a confrontational relationship between the two major powers, and they had their own economic spheres, as China has attempted to carve out, especially in the wake of the sanctions that the world has taken against Russia following its invasion of Ukraine and sort of the display of economic weapons there. The go-between asset for third countries that might want to do business with both silos, as it were, the China-led one and the U.S. one, that's emerged as gold. Now, whether those silos actually occur, who's to say? But the speculation is certainly there, and the animus is certainly there. So as we look at what gold has been doing, it's been less linked to anything in terms of its more classic drivers, and has, in a sense, become the same kind of speculative vehicle that stocks are, just for a different story, for a different narrative. And so we see, as markets apparently have gone to unwind their exposure to the major themes of recent months, gold is down with stocks, not up because it is acting as some sort of a defensive vehicle, but rather because it has speculative froth to clear of its own. The euro down as the dollar gains. And interestingly, again, to give this an even firmer risk-off sort of thrust, the yen is up. The yen is a kind of classic beneficiary of risk aversion in environments where essentially the market becomes almost correlation one defensive, where one kind of universe of assets is the risky universe is going down, and the more defensive, more sort of liquidity haven universe, like the dollar, like U.S. Treasury bonds, when that's going up, you typically get a situation where there is a defensive unwinding of carry trade exposure, and that's oftentimes financed by de facto being short the yen. So when people are unwinding that exposure, you oftentimes will get this this kind of a dynamic where the yen goes up and the dollar goes up. The dollar goes up generally on sort of liquidity haven grounds, as do bonds. For the yen, it's more a story of just the defensive mood being an unraveling of yen short exposure and a sort of buying back of that exposure that gives you this rise. Nevertheless, the dollar is firmly higher here across almost all of its major counterparts, and certainly the euro story sort of captures at least the general sort of thrust. And so naturally, as we see this kind of aggressive risk-off thing, the question becomes, well, what in the world happened? And perhaps the most straightforward way to approach it is to sort of look at what didn't happen and go by the process of elimination. Now, to be sure, markets have tended toward a clearly defensive sort of thing in the wake of the Fed policy announcement last week. In fact, we can see here that when we look at overall performance last week, stocks actually edged out a little gain. We see, of course, in the rise in yields what ultimately ended up happening, but all of this looks much more stayed, especially on the risk sentiment front. Bitcoin is neutral, so you don't get the kind of panicky thing that you start to notice when you simply look just after the Fed meeting. And clearly, there's a difference in tone. Since that Fed meeting, stocks are down, yields are up, gold is a little bit lower, but more importantly, the dollar is significantly higher, and Bitcoin is way off. All of which seems to reflect this idea, as we've talked about here at length over the past week and a half, that coming into last week, the markets were essentially priced for perfection. They had three pillars that were holding them up. Number one, the Fed was going to deliver a rate cut and probably not say anything off-putting about another cut to follow in December. The second, that tech earnings were going to go generally okay because tech results had been outperforming the overall market, with revenues and earnings growing faster than market average. Tech earnings were growing at about 22-odd%. The S&P 500 average was around 9. And the third thing, that the meeting between the U.S. President Donald Trump and Xi Jinping, China's president, was going to be generally cordial, that there would be a kind of walking back of the immediate hostilities where rare earths would get unlocked at the same time as Chinese companies, subsidiaries of U.S., let's say, monitored and listed firms for sanctions, that they would get essentially to go free. That was part of the recent escalation. And that essentially we'd go back to where this thing stood before things started to get off kilter in early October. That essentially we'd walk back U.S.-China relations to October 1st, give or take. As far as China went, that worked out. There was a sort of rubber stamping of the intent to cool things off by the two leaders, and everything generally passed as markets expected. On the earnings front, a little bit of a miss for Meta, but generally nothing untoward there. In fact, if we look at the way that earnings so far this week have materialized, the big names are largely already out. Palantir, a little bit of a beat. Same thing for AMD and for Uber. Those are kind of the big market cap names, and not really all that great as far as the price response. Certainly not helping with what we're seeing here as these markets sell off. And as we look at what then seems to be the problem, it was the Fed and Fed Chair Powell's sort of grenade throwing at the press conference following the policy announcement. The cut appeared exactly as anticipated. There was nothing ultimately that spicy in the statement, although the Fed sort of bemoaned the absence of timely economic data around the U.S. government shutdown. But we can clearly see, looking at what's happened with the probabilities for December's meeting, that there was a sea change in expectations. Right now, we're basically 70-30 in favor of a cut. That's obviously a huge change versus the over 90% likelihood just a week back from today. So that Powell came out and very clearly said, look, you all seem to think that December is a foregone conclusion. Let me be very clear, it is not, and far from it. And the markets haven't looked back since. Again, here is what we've done since he said those things. Stocks down, yields up, gold down, dollar up, Bitcoin off significantly. So clearly, whatever is occurring here the Fed was the breaking point and perhaps need not have been. If any one of those three pillars that we just listed had generated something other than what the markets were expecting, you might have expected a similar thing. And that seems to be how we end up with this ongoing slide today. It isn't so much that there was event risk and this is still the lingering response to whatever that event risk was. It's more a sentiment shift whereby the market started last week seemingly priced for perfection, and when that perfection didn't arrive in whatever guise, there was likely to be a speculative reshuffle, and seemingly that's exactly what we're looking at here. Now, looking at the way these Fed expectations have evolved, even since yesterday, we can see not a big change. So it's not as if this sell-off now, as opposed to the drift in risky assets yesterday, seems to have been somehow catalyzed by a further unraveling of rate cut odds. In fact, they've actually ticked up a little bit today versus where they were yesterday. If we look at what's come from the economic data side of things, we didn't get jolts. The government shutdown continues. We did get the ISM manufacturing PMI numbers earlier in the week. The services sector a component of those surveys is coming up tomorrow. That is by far the most sort of potent indicator of U.S. economic activity in the absence of government data, because of course the services sector is by far the largest employer and the largest share of the economy, about 70-odd% of the overall economy and maybe 80-odd% of employment. No big news from the RBA overnight. They keep rates unchanged, and ultimately that fades into the overall narrative. The services side here for ISM expected to tick up just a little bit. It was at standstill in September. As ever, these are centered around 50, where that's neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So if you go from 50 in September to 50.7 as expected in October here, what you've done is you've increased the pace of growth slightly from basically nothing to a little bit of something. When you compare that with what turned out to be an unexpected acceleration and contraction on the manufacturing side, you probably end up with an economy somewhere idling, because the outsized contribution of the service sector would sort of tilt you in the direction of that being weighed higher in the average than the manufacturing side. So because of that, and because that side's the one that's ostensibly growing, you'd end up somewhere near standstill, give or take, taking both of those two together. Looking at what's then coming up later in the week, really it's just the University of Michigan Consumer Confidence report that is slated for Friday. Now, maybe we'll get a breakthrough in this government shutdown and jobs data actually does come out, but it's unclear. And at the moment, there's no sign that that is where things are going. So for the moment, this is what we're looking at. And the most interesting thing here ends up being that we were looking at sentiment really just operating as a function of inflation, where from the beginning of 2021 until really the beginning of this year, when inflation expectations rose, sentiment deteriorated. When they fell, sentiment improved. And we can sort of follow this narrative very clearly. Here's inflation expectations accelerating until the Fed really gets serious, and sentiment is declining as that's occurring. Once the Fed really starts to hike rates and clamp down, inflation expectations decline, sentiment improves. That continues until the beginning of this year when, of course, inflation expectations surge thanks to the tariffs that have been unveiled, and sentiment declines again. Once the sort of worst of the fears around Liberation Day and sort of that early April kerfuffle start to fade, sentiment improves a bit, but now what we've seen over the past 3 months is something else entirely. Sentiment seems to be deteriorating even as inflation expectations cool. And that's suggesting a defensiveness about the consumer that's new and interesting, perhaps anticipating some kind of level of exhaustion and some kind of more significant headwind for consumption. That, of course, would be very concerning because, after all, 68% of U.S. GDP is household spending. Now, this is where the rest of the week becomes an exercise in what is the narrative that drives. So, looking at Fed policy expectations, to the extent that what we might see out of this data moves the needle here, maybe we manage to check whatever sentiment shift is now underway. But the markets are already deeply on the dovish side of Fed policy expectations. They've got 63 basis points in easing on the menu for next year. That's at least 2 cuts and about 50-50 on a third. Looking at what's going on for Fed's policy expectations as they see it, it's a measly 1 cut. So if we consider then what this data might show, if it ends up disappointing, maybe we get a little bit more by way of Fed rate cut speculation. But even with the recent unraveling, December is still better than even odds. And next year is already more dovish than the markets were hoping for the Fed to endorse. And clearly they've not endorsed it. So what we see here is, despite expectations seemingly starting to moderate a little, at least after last week's shift, sentiment is nevertheless looking like it's unraveling a bit, and importantly, a bit. Obviously, there's a commanding advance here that's still very much there, but clearly the price action is noteworthy here, and the dollar continues to revel in a recovery as we get less dovish of a view against the back of all of this. We end up with a dollar that continues to bounce from these lows in mid-September, incidentally lined up with the Fed's meeting that month, where it retested the bottoms in July. Notably, it was in early July when the dollar seemed to hit a low. It hasn't set a fresh low since. And that seems to be very much a part of this overall story. Now, U.S. economic data, just judging by the tone of what's been going into the Atlanta Fed GDP Now model, that's the green line there, it seems to suggest that the U.S. economy is actually looking like it is accelerating. That would line up with at least some of the recent data, for example, the S&P Global PMIs that came out just a bit over a week ago. And we can see that even the consensus view that's been sort of shaped by what data there has been, at least going into October, even that gave us a potent revision pointing higher to what markets are expecting. So we, if anything, might get the kind of data this week that actually makes rate cuts less likely if the economy seems to be getting perkier. And of course, with sentiment the way it's set up and the response, again, that we've seen since the Fed told us that the scope for easing was not as great as anticipated, that doesn't bode well for risky assets. As far as exposure, I still have my short gold exposure, both via the futures and by selling a call vertical here. That's working. Still long the US dollar, short the Aussie, the pound, the euro, the Canadian dollar. Still have my long-term exposure to Brazilian markets via EWZ here, which was one of the few things that didn't work today. But of course, this is a longer-term view. There's still all kinds of time in it, and it's well on the profitable side of things already. So we'll see if that continues to be the case. Short Bitcoin through a put vertical, short the S&P through a put vertical on SPY, the ETF, long the long end of the bonds through call verticals on TLT. That seems to have found a helpful bottom today. We'll see if that continues to hold. And short a bit of crude oil through a put vertical in USO. That fell with general risk aversion today. We'll see how that continues to evolve going forward. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I usually co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.